Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make in our categories that we have been supplying to our defense forces some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Very good morning. You're watching India Market Open, and it's a good morning indeed, except for those who decided to take short positions last evening after everything that's happening. How much things can change in 12 hours, guys?
Yeah. Or for people who took long positions on crude.
Because that reversed very dramatically, yes.
Very dramatic.
I mean, you go to sleep with Iran bombing Qatar and, jets getting scrambled over West Asia, and you wake up to Trump saying, the ceasefire is done.
God bless Israel, God bless Iran, God bless America, everybody else.
Yeah, and just because there were so many messages on that, just one small thing, and we'll talk about it. But while Iran has countered the claims of the ceasefire and saying that, the truce, this thing will be shown, but some officials have confirmed to global buyers as well that a Qatar brokered US announced truce will be adhering to in the next 12 hours. So a lot can happen, but it seems like
even that message that you're referring to, if you the last part of that message, as long as there is no violation on Israel's side. So I think that tone and tenor you can read through.
Yes, exactly.
It's a ceasefire. They don't want to call it a ceasefire yet. And, in what may seem like deja vu, Donald Trump is back to say, I did it. I brought peace.
Give me the Nobel.
Give me the Nobel now. It's in the post, I'm sure. But anyway, here's how the global setup is looking like this morning. US futures have risen after Trump has announced a ceasefire. And in fact, you saw that positive move even as, there were bombs going off from Iran over Qatar. So let's pull up the US future indices if we can. But here's what Trump has said. Congratulations to everyone. It has been fully agreed between Israel and Iran that there will be a complete and total ceasefire. He goes on to explain in great detail how that would work out. There's a timeline, starts from 6 hours from now, then 12 hours from now, etc. But the key points, he says, I would like to congratulate both countries, Israel and Iran, on having the stamina, courage and intelligence to end what should be called the 12-day war. This is a war that could have gone on for years and destroyed the entire Middle East, but it didn't and never will. God bless Israel, God bless Iran, God bless the Middle East, God bless United States of America, and God bless the world. So that's the long and short of the message. But here's what the Iranian side is saying, and the quote that Neeraj was referring to. He says, as of now, there is no agreement on any ceasefire or cessation of military operations. However, provided that the Israeli regime stops its illegal aggression against the Iranian people no later than 4 a.m. Tehran time, we have no intention to continue our response afterwards. The final decision on the cessation of our military operations will be made later. This is from Syed Abbas Araghchi, who's the foreign minister of Iran. So in all, it is a ceasefire for all expected reasons. Markets have risen in early trade in the US, even as Qatar intercepted Iran's attacks on US air bases, and you had the Dow up nearly 150 points coming in. There you go. There you go, about 234 points up on the Dow. Treasury yields have softened as crude has fallen. Fed officials have spoken of a July rate cut, so 10-year at 4.34%. Oil prices dropped sharply as tensions in West Asia de-escalate. Brent is now below $69 mark last I checked, and Asian indices are also looking up in the green this morning. Nikkei, Hang Seng, Shanghai, all up in the green. What we really need to look at is the implied open for India, and that's looking like we're off to a rock and roll start, guys.
Absolutely, and in fact, one big talking point is going to be crude. But before we get to that, I saw a social media post by Bill Ackman, and he said, my favorite line this year and perhaps going forward is, thank you for your attention on this matter. This is how Donald Trump signs off to all of his messages, and I think that was quite interesting. But we should talk about crude, shouldn't we?
And just one last small point before we get to our guest. Tamanna briefly alluded to it, right? The Fed commentary increasingly sounding very dovish, with two of the officials saying that now there's a cut.
July cut. So
so watch Treasury yields as well. We're joined this morning by Muyu Shu, who's a senior crude oil analyst at Kipler, and we've also got Matt Orton of Raymond James Investment Management. Thank you so much to the both of you for taking the time. Muyu, I'll start with you, because ultimately through the last few days of this conflict and even today, crude has to be one of the biggest talking points for those that have not been involved, and that those that have been watching from the sidelines. There was a contemplation of $10 per barrel as a risk premium that was being associated to this conflict, and that has gotten erased. What is the outlook from this point on crude?
I think the drop in oil prices is not something really surprising. It's just a matter of time whether it's gonna the risk premium gonna dissipate like today or next week. Because during the peak time of the conflict, let's say on Sunday, a few hours after the U.S. bombed the 3 Iranian nuclear sites, people were wondering what or how Iran gonna retaliate. But the thing is, there's no single barrel of oil being removed in the market. I mean, the vessels still come in and out of the Strait of Hormuz, and they were doing their job. Yes, some people might be cautious. Some ship owners may want to minimize their waiting time in the Gulf, but still they were doing their business. So right now, we think the oil is just like what happened 12 days before. It was just a knee-jerk reaction. Before it was people priced in the risk premium, but right now is the time to price out. So for us, we do think in the next few days we might see some sporadic missile exchange between Israel and Iran, because they still want to save their face. They want to wrap up the conflict before going into the diplomatic negotiations. But from now on, I think the market will be refocusing on the fundamentals. So oil prices will still find some support because right now we are just about to kick in the peak summer demand seasons, and the traffic fuel demand will be supported. So we do think the oil prices might stabilize above 65, maybe hovering between 65 to 70 in the short term.
Yeah, point well noted. And Matt, come in on this. I mean, yields doing what they did after Fed saying what it did yesterday, and then Donald Trump putting out that ceasefire news, oil coming off. Is this a good scenario for risk assets, or some of it was already priced in, you think?
So I think a lot was already priced in. I was actually fairly surprised by the very muted market reaction. I mean, S&P 500 finished up almost 1% today. The NASDAQ was up more than 1%. And you didn't really see many global markets until U.S. trading really trade outside of a plus or minus 50 basis point range, which to me is a signal that risk assets really understood and had been recalibrating over the past 3-4 months to this increased environment of uncertainty, whether it's uncertainty with respect to Israel, Iran, the Strait of Hormuz, whether it's uncertainty with respect to what the fiscal package might look like in the US, uncertainty with respect to tariffs. All of that was largely priced in. There's still a lot of uncertainty that's out there, though. We still have a July 9th tariff deadline. So the reciprocal tariffs are going to expire. We have one trade deal that has actually been inked. I think now that we're through this, the administration can start to focus again on racking up more wins with respect to trade, build on some of this momentum. So hopefully they're in the mood to negotiate more feverishly. That could provide additional support to risk assets. And through all of this uncertainty, my main message to clients has been not to chase upside, wait for opportunities on the downside. We haven't really gotten some, but as long as you've been well diversified in your portfolios, you've weathered the storm fairly well. And that's why I've liked the US, but I've also liked markets like India that have provided a ballast through some of this uncertainty. And that remains the case today. I think the Fed's almost a non-event to kind of put a bow on your total question, Neeraj.
Matt, very good morning. Tamanna here. I'm just wondering, with all the ifs, buts, conditionality attached to both the ceasefire statements from Donald Trump as well as the Iranian side, can we really be sure that this is done and dusted?
No, you can never be sure anything is done and dusted, especially under the current administration in the US. But I think the involvement of the US and the way Israel attacked Iran heading into the US involvement has really incapacitated the regime. So their ability to respond has been greatly hampered. What they can do has been hampered, and it's not going to serve anyone, especially because their closest allies are staying out of the fray. So again, I think we can write off at this point the worst left tail scenarios that could result from this. Could there be uncertainty? Absolutely. I would be leaning into that uncertainty as an investor, though, if you do get a sell-off as a result of any additional skirmishes that might happen.
Both of you, Matt, Muyu, thanks so much for joining us this morning. Pleasure having you on the program, and thanks so much for that insight. Key takeaway from that conversation: watch out for crude between 65 and 70. And the last call on uncertainty is not over. The attention now shifts to the 9th of July deadline. But let's talk about what happened in trade today, and I'll run through this very quickly because the texture and tenor has changed so dramatically. Look at the implied open. They're pointing to 300 points on the upside. But yesterday you had foreign institutions that sold on a net basis, domestic institutions mopping that up and more, 5,600 crore or thereabouts. And Indian equities ended sharply off their lows of the day. You had signs of nervousness amidst that geopolitical uncertainty, but the broader markets gained quite sharply from the low point. And take a look at the recovery. You had a recovery of over 1%. In fact, 1.2% for the mid-cap index, 1.5% for the small-cap index from the low point of the day. And both of those indices ended at a high point. In fact, you had gains of about 0.8% for the small cap index. Market breadth tilted back to neutral when it started in a very bleak territory. The media index gained the most on the back of that Z Entertainment surge. The defense index also gained and was one of the big gainers in trade yesterday, up about 2% because of that geopolitical tension. Metal index was an interesting gainer because it was up about 0.7%, quite a few of the constituents of that index gaining ground. IT, however, declined about 1.5% after Accenture results flattered to deceive. Now, consumption stocks, and there's a whole raft of stocks, including automotive companies, were under a tad bit of pressure in trade yesterday. I wonder whether that changes and reverses today. But a couple of stocks that I want to mention. One is Z Entertainment, a gain of over 12% on account of the aims to have a break even in the digital business, which is Z5 in the current financial year. And I'm sure that Neeraj is going to talk about this. I won't delve too much, but MRPL Chennai Petro among the key gainers in trade yesterday. Chennai Petro 11% higher. And we talk about why. There may be a question mark about the sustainability of that rally in just a bit. But that's how it stands.
Yeah, and precisely, Alex. So, I mean, and you know, you can argue that that is done and there isn't too much more to add for the fact because the global markets are telling you all that you need to say, right? The only good part was that market reaction yesterday was measured. Tamanna spoke about UPT people who went short. Yeah. They would have been precious few who did because the small cap, mid cap space per se, right, was giving this thing. But she's absolutely right. For people who took that stance that no, let's try and do that brave short, they will be licking their wounds today for sure. And therefore, just seems very unlikely that there will be sharp gashes in risk assets for the time being at least. So that is a really good thing. And yep, Alex, I think both of us are harping on the same thing, that Street is baking in earnings gains for standalone refiners. But I think this oil price downtick will ensure that that will not happen. So you probably expect a bit of a pullback. And I don't know if either you're marking that or no, but allow me to do that. I mean, I was looking at the strategy notes that came in today and the CLSA note that came in. Oh, you're going to do that? Okay, perfect. So I'll leave you to that. But I thought they kind of, Tamanna, putting forward the points that a couple of guests said yesterday that we might have our own fish to fry.
Yeah, no, I agree completely. Just on the part of the uncertainty yesterday, even though markets did seem to shrug off what was happening globally, remember the Iran response was still awaited. And everyone knew that there would be an Iran response because they also, to their domestic audience, have to say that we did something. So this seems to be an orchestrated, safe response. Okay, you can go bomb one spot where nobody really is there and nothing is really going to happen.
There was an advanced
notice
as
Qatar
well.
Is their friend.
Yeah,
everybody but Ramesh Damani.
It was quite orchestrated.
Hey, Iran has more bark than bite.
Yeah, I mean, but in balance,
at a broader level,
in balance, I think everyone was proven right. Yeah. So, okay, just a few factors that I'm looking at this morning, and one is, of course, the fact that relief rally will be seen because tensions in West Asia have eased. So that's an important one. As a result, everything that was up because of this, you could see some pressure there. So that includes, say, an ONGC, oil refinery companies, which were zooming because of the hope that crude will be up. You could see a pullback over there. Likely for defense as well. You might see a cool off in defense stocks, although there are quite a few notes that are focusing on defense today. That strategy that you were talking about, Nirjan, let's go through it. Down but may not rebound soon is what Vikas Jain of CLSA is saying. It says all key asset classes have had a better return than Indian equities in the last 12 months. Equity inflows could come under pressure. Performance begets flows. Indian equity multiples remain elevated due to big cuts in the Nifty's EPS estimates. Combination of poor 12-month performance and elevated multiples along with huge lineup of capital raising and IPOs may pressure equity inflows. Getting sector rotation right may hold the key. IT may be back in favor, also like staples, real estate, utilities, bank and energy in our India-focused portfolio. So you are going to be seeing choppy trade as long as Nifty is staying below the resistance zone of 25,100 to 25,200. A decisive move above this hurdle could trigger renewed buying enthusiasm. Immediate support for Nifty seen at 24,800 to 24,850 levels. If Nifty sustains above 24,850, it may offer buying. So look at Nifty. If it moves above 25,000, it could head towards the 25,350 mark in the short term. Primary trend, though, remains bullish. Some signs of indecision in the Bank Nifty as well. Resistance at 56,200, support at 55,850. But I think you've had quite a lot of action in terms of some stocks going, out of the F&O segment as well yesterday. And I wonder what positions are looking like this morning. What's the setup, Puneet?
Well, thank you for that. So we did close up, somewhere around the level that the GIFT Nifty indicated, roughly about 110 points downtick is what GIFT Nifty indicated yesterday before the trading session started. We ended about 140 points down, but we did see a recovery from roughly about 24,820 odd levels to close above 24,900 mark, and the implied open indicating a very strong start to the trading session today. In terms of banks as well, that was another key aspect. We've seen that sustained build up over banks over the 55,500 level. That seems to be the case again as well, and we've been vocal about that the banking stocks haven't moved yet. That could be one of the other key aspects to watch out for over the next couple of weeks, because we will see the banking updates also come in over the next week post the ending on post June 30th. In terms of the long short ratio as well as let's look at the FI position now, because we've seen index options and Nifty options being positive on the long side for the FIs, but the index long has just fallen by 1%. It was roughly about 23.7% yesterday. It's gone to 22.7% if we can go on to the next graphic and show that as well. 22.6% now. So it's almost fallen by 1% yesterday, but still above the low of 16% seen a couple of weeks ago as well. The net OI PCR has slightly inched up. It's been around 1 to 1.05. It's at 1.13 now. So that'll be other key aspect to watch out for. We've spoken about the FI position. So let's finally look at the open interest distribution both on calls and puts. Again, we have been very vocal about 25,000 being one of the key levels for the calls in terms of open interest, but for the puts 24,800 remains on key levels, and we are not seeing too much change in that. So again, it'll be another session where it's important, as you guys rightly mentioned yesterday, where we end. So again, today it'll be one of the key aspects to watch out for, because we saw that we saw some recovery yesterday post 10 a.m. If we can see that again, but on the positive side, that will be the other key ones to watch out for, because 25,200 is one of the other resistance levels, so as to say. If we can meet that and hold on to those levels, that will be a key positive for the markets.
269 points up is what the implied is looking like. So strong start. We need to hold on to it. That's the question. Okay, what's going to shine? What's not? Starting off with what's on my radar, I'm looking at Tata Motors. They've released the pricing of the EV Harrier. The introductory pricing for the rear-wheel drive variants have been announced. The basic adventure variant starts from 21.49 lakh rupees. Top variant is 27.5 lakh rupees. Bookings open from July 2nd. Buyers will await the price of the all-wheel drive variant. So the price is in line with peers, and just the excitement of a new model is something that could perk up the stock today. So watch out for Tata Motors. Thumbs up for Signature Global as well. Their arm has executed 2 sales deeds to purchase close to 10 acres of land in Gurugram. The lands jointly have an overall potential sales area of approximately 0.53 million square feet. So real estate also in a rotational play might be back. For some buzz, watch out for Signature Global. Dixon Technologies, a thumbs down simply because, logic dictates that when the promoter sells a stake, then it's a thumbs down. But this is a strong company. So Sunil Vachani has sold about 16.7 lakh shares at 1,330 a piece. Motilal Oswal Mutual Fund has bought about 2.5% at 1,3307.96 a piece. You might see some pressure because of the promoter stake sale. But I want to know what you guys think about this, because we've seen mixed reactions in the past, even to a promoter stake sale. And this is a company, the pedigree of Dixon, and someone's standing already to lap it up.
Yeah. It probably the transaction has been done because those guys would have wanted a chunk, and which they're not getting from the open market. So the promoter goes out and sells a little bit.
Demand for something like a Dixon will always be there. It'll be mopped up very quickly. I think that's what we saw, right? For companies which are in the public interest and institutional interest, it gets mopped up very fast.
And yesterday's Jeffrey's note as well, right? With the ROCs that Dixon enjoys, 32%. The nearest competitor on the EMS space is sub 20, right? Or 22. So therefore, this gets lapped up very quickly.
So I think even if you see some pressure because of the promoter stake sale, doubt it will sustain too long.
I have 3 pretty clear indications, right? So these are all positive developments. So let me start with Metro Brands. This, as you know, is the footwear company. It has signed a long-term distribution agreement with Clarks. And if you're unfamiliar with the brand, this is a UK-based brand, footwear brand. And the agreement is to distribute Clarks products exclusively in India and neighboring countries, and several of those neighboring countries at that. The tie-up is both for digital as well as the offline distribution, and it will therefore manage the Clarks online store in India. So this is a positive according to several people, and this is something that MK has written a note on as well. It has maintained a buy with a target price of 1,400, quite a bit of upside from the current market price of about 1,150. And it says that this is part of Metro Brands plugging certain gaps in its portfolio. All told, it's a positive development. A couple of order wins to tell you about. Cochin Shipyard, for one. Its wholly owned arm, Hooghly Cochin Shipyard, has gotten what it calls a notable order, and it has ranks of order. Notable is the least of them. The arm has gotten the order from Heritage River Journeys, and that arm will construct 2 luxury river cruise vessels. This is the first of its kind order, and the order is valued between 100 and 250 crore rupees. We don't know exactly what the order value is, but certainly is a positive for this company. Remember, a lot of these stocks were big gainers in trade and have been big gainers in the recent past, and with a dissipation somewhat of geopolitical tension, maybe to a certain extent you could expect that some of this trade will get reversed. HG Infra is the last stock on my list, and this is also a positive development. It has gotten an order worth 117 odd crore rupees, 118 crore rupees from the Military Engineer Services. This is an order for the creation of an integrated material handling facility. We don't know too much about the order. It's said to be completed within 30 months, but generally you've seen that stocks react positively to order wins.
Yep, hence therefore watch out for all of these. On the 3 stocks on my list, the first one is KPIT, and maybe not the best of updates. I mean, and maybe today because of the high beta nature of the market, any which ways IT might be a bit soft, but KPIT certainly has sounded off. It's not, how do I say, it's a bit of caution for sure. So they say that the pipeline continues to be strong, though conversions are much slower than expected. Ramp-ups for the deal wins are progressing at an even slower pace versus anticipation. Part cannibalization of our own revenues in new wins due to limited budgets. The one good point that they've said that there's a substantial pipeline moving in the positive direction. But this, at the start of the year in the mid-quarter update, is not positive news for a stock which is not necessarily cheap. It is not as expensive as it was when it was at 1900 or 1850, but it's not cheap by any stretch of imagination. And I would suspect that KPIT could actually see a sharp reaction today. So keep an eye out for this one on the downside. Swan Energy and Balu Forge. Now remember, Balu Forge is in the thick of things because they recently, the stock fled up some 10-12%. They've got a US plant which has started operations, etc. Now the 2 companies have formed an SPV, Swan Balu Heavy Industries, for defense and aerospace ventures. Everything. I think yesterday or day before somebody was mentioning that if having a land bank in 2007 was the in thing, having a defense manufacturing facility attached to your operations is the in thing right now. But you never know. For both Swan Energy and Balu Forge, this could actually turn out to be a stock moving item. So keep an eye out. There are no details per se of this, right? So we don't know what they will do. But and Swan is of course in this space for some time, right? But it'll be interesting to see what Balu Forge, a small cap auto anch, might react today. And as we said, we do suspect that MRPL and Chennai Petro, because long positions, not on the FNO side, but on the cash market, because Chennai Petro is only in the cash market, but were built in lieu of higher crude prices. Look at that. Chennai Petro was up 11%, and some of the reversals today may be pretty sharp, almost as sharp as the reversal in oil prices have been. So expect a bit of a downtick in these 2 stocks today.
For manufacturing companies, it seems like it's similar to websites that hit a certain number of words on SEO, right? You have to hit aerospace and defense and a couple more things at this juncture.
No,
because
so we're not alleging. They might actually be doing some really good thing, right? But everything gets
priced. No, I was just thinking about Ajay Srivastav and what he told us yesterday, because that one
it was
clip,
him, right? It was him who said
one
this.
clip we put out has actually got a huge number of views, because he comes out and says there are 800 companies in India making drones. So be very, very careful about what happens next. Having said that, some very positive notes on defense this morning as well. So we'll get through all of that. But I think another piece of news that's important and you should know about before trade starts is what's happening with the US-India bilateral talks. They're experiencing some challenges as the US moves closer to its 90-day pause ending deadline for tariffs. Sources say there are hurdles around agricultural products and how India treats those. Let's go across to my colleague Rishabh for more details.
What we're learning ahead of the July 9 deadline that was imposed by the Trump administration with regards to the 3-month tariff pause is the fact that while India and the US were gunning for an interim trade deal before July 9, there seems to have been some sort of hurdles and challenges that have been hit with regards to completing that interim trade deal before July 9. The challenges being that the US remains insistent on its agriculture produce as well as dairy produce receiving lower duties in India and also better market access for its GMO crops. But that is something that India is not willing to negotiate on currently. Given that India is still largely an agrarian economy, it is a sensitive sector for a lot of its farmers. What we're also seeing is that India is unwilling to provide that sort of an access, that sort of an unlimited access for US products in the Indian market. What we're also picking up is that both sides are still very keen on signing that interim trade deal before July 9. There are rounds of negotiations that are still trying to be completed. There is a pending visit from the Indian side to the US also that is on the cards. So negotiations are very much on. However, that July 9 deadline might seem a little shaky at this given point in time. If a deal is not reached, India will revert to its April 2 tariffs. That was a baseline tariff of 10% plus an additional, I think, 26% tariffs that India was imposed with. So that is the situation that will come again if a trade deal or an interim trade deal is not reached upon.
All right, we're taking a very short break, but before we get into that break, the implied open climbing up. Get ready for a strong start. What do you do in this momentum-filled market? What should be your top trading strategies? We're coming back with all of that after this break.
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis. Conversations that matter. We break it down. Cut through the noise and set the context for you. Hear from top policy makers and thought leaders from the world of business and beyond. The big question really is, are companies
Welcome back. You're watching India Market Open. We've already taken you through several stocks that you should watch out for at the start today, and it looks like it's going to be a positive start, to say the very least, for the Indian equity markets. But a pack that we've spoken about that has been in focus, that has been gaining from strength to strength, is the defense pack. And a lot of brokerages have come in and said that they are still bullish despite the gains that you've seen, 27+% over, I think, just a 1 month time frame. The elevated geopolitical uncertainties around the world are set to aid the pack further. Anushi joining in to tell you what these brokerages are saying. Anushi?
Hi, morning, Alex. So what we are seeing for the defense pack is some interesting moves. It's not just a 1 month or a 2 month scenario that we are looking at. Even in the last 6 months, Nifty India Defense Index has been up over 45%. Now we have two interesting notes coming out. Firstly, JP Morgan just specifically talking about Bharat Electronics, where they have maintained their overweight rating, in fact hiking the target price to 490 as compared to 445, which implies about a 16% of an upside. They see that the steady stream of orders and elevated geopolitical risk has led to the outperformance that we are looking at. Even yesterday, the company came out with a couple of more additional orders, so it has remained in focus on that. Even emergency procurement orders are on the anvil, so that is something that we should be watching out for. And the diversified business should lead to consistent outperformance for Bharat Electronics. Civilian and export opportunities provide optionality going forward for the business. So that's JP Morgan on Bharat Electronics. But Jefferies has a more broader view in terms of where the defense index is concerned. Now India's defense spends, if we see, they have seen about a 25% of a growth in March 2025, and they are in line to achieve the FY25 revised estimate of a 3% of a growth. In fact, if you look at the FY26 defense capex, that has started also on a stronger note with about 122% of an increase in April is what we are looking at. So this is against a 13% of an overall increase expected for the year, especially post Operation Sindoor in May 2025. Government is now focusing on putting India first and is targeting for higher export opportunities as well. If you look at the export data so far, it's seen about a 10% of the rupees 30,000 crore of FY26 target. Do note the FY29 target remains 50,000 crore. Now PSUs continue to remain dominant in the defense space, and private share is also seeing an uptick. The preferred picks for Jefferies remain HAL, Hindustan Aeronautics, Data Patterns, and followed by Bharat Electronics. So Bharat Electronics specifically emphasized in both of these notes that we are looking at. So overall defense pack in focus, and Bharat Electronics is something that we should be watching out for.
All right, thanks so much, Anushi, for getting us those details. Now, let's talk about this in some more detail. Let's get in Kunal Rambia from the streets, as well as Sunny Agarwal of SBI Cap Securities. Thank you so much, gentlemen, for joining us this morning. Very good morning to you. Kunal, let's start with you. The setup couldn't be more positive than it is today. The implied open suggesting a frenetic start this morning. What would you watch out for on the upside, and what are the key levels to watch out for at the index level? And let's also talk about the Bank Nifty.
Good morning, Alex. Thanks for having me on the show, and good morning to all our viewers also. Now, as far as the Nifty is concerned, it's been almost 40 days of sideways consolidation. In fact, Nifty is consistently making highs near 25,200, and on the lower side, we have a support at 24,500. In fact, today's gap of opening is opening right onto the resistance itself. Unless the Nifty closes about 25,200 to 250 kind of zone, we should continue to see the sideways consolidation with positive bias. Certainly, buy on dip is a good opportunity on the index. But by any chance, if the Nifty manages to close about 25,200 zone, then we can expect the targets of 25,750 to 25,800. As far as Bank Nifty is concerned, that's looking more positive compared to Nifty because of higher top, higher bottom formation. In fact, the breakout is placed right at 56,350. Above that, the targets of 57,000 and all-time high are also very likely.
Kunal, what are you picking this morning? And is there enough to pick when you know that momentum will be on your side?
Good morning. So yes, certainly I'm looking at those counters which are in good thrust and good momentum, and right now available near the support. The first counter is the Prince Pipes. Now look at this counter. This counter gave a very good breakout last week and now consolidating near this breakout zone itself. So with the stop of 325, one can go long on this counter and the targets can be 365. Second is Adani Power. This counter is again not really a good performer so far, but making consistent higher to higher bottom available right near the support. So with the stop loss of 525, one can go long on Adani Power and the targets can be 575. And the third is the Indigo Paint. This was a major underperformer for last couple of months. The counter started from extreme low of 52 weeks low, and now it is gaining the momentum. Yesterday, it was up by around 3.5% in the trade. So with the stop of 1140, one can think of going long on this counter also, and the targets can be 1225. And in all three counters, the risk reward ratio is extremely favorable. They are not the breakout counters. In fact, they have started from the support, and that's why I'm offering these three counters to our viewers right now.
Okay, Sunny Agarwal is with us as well. Sunny, good day to be not bearish, good day to be maybe mildly bullish. The question is, with the backdrop being constructive, how do we look at some of the news flow that has come in? And I want to start off with the weaker news flow, because I thought the mid-quarter update from KPIT Tech was cautious and substantially cautious, because they've spoken in multiple ways how deal wins are not ramping up as much, there is cannibalization, so on and so forth, etc. For a stock which is not very cheap, in fact I would say bordering on expensive even now, could there be a sharp reaction, and would it stay lower because of this caution?
Yeah, good morning everyone. Yeah, definitely I think a positive day to start with, especially when the crude is down 6-7%. The concerns on geopolitical tension are easing, and at the same time domestic macro are very favorable. On one hand, we have seen a massive rate cut by RBI coupled with liquidity infusion, and at the same time government has given a booster to the consumption in form of tax cut. So I think overall macro looks pretty robust as far as the Indian equity markets are concerned, and we continue to remain constructive on market from horizon of short to medium term. And obviously on positive side, we believe that the rate sensitive sector, especially NBFCs, auto, real estate, banks should continue to outperform in the short to medium term. Moving on to the negative development from KPIT, yes, definitely a word of caution from KPIT in terms of the way the deal wins, as well as the conversion of existing deal pipeline into the revenue is moving slow. Obviously trading at a slightly expensive valuation. So I believe the analyst community will further downgrade the earning estimates for FY26, which was close to 5 to 6% growth over FY25. And on FY26, there was an expectation that FY27 will be the year where we may see kind of 18 to 19% kind of growth for KPIT. So again, one more round of downgrade may come for FY27. Obviously trading at a slightly expensive valuation. But maybe today we may see a knee-jerk reaction in the entire mid-cap IT, including KPIT. But I feel again, post the knee-jerk reaction today, this stock should stabilize and should consolidate for a pretty longer period of time. Maybe we can say, maybe over the period of next 2 to 3 quarters, we may see a kind of sideways consolidation in the KPIT and many other mid-cap IT names.
Okay. I think the other space of focus is cement. Usually monsoon is a bad period for it, but we might be gearing up for another attempt to hike prices. Will the onset of monsoon though play spoil sport? My colleague Puneet joins in with more details.
Thank you for that. So yes, securities, and we were going to be speaking to the analysts, is estimating that there has been some rollback in prices in Q1, but there have been multiple reports saying that FY25, the fag end saw some price hikes, and we could see some more into this particular year as well. So there'll be 3 things that I'll be watching out from this conversation. The first will be on pricing, if you'll be able to sustain that, and also specific to regions, because South has been a laggard over the last decade or so in terms of pricing. So that will be one. The second key aspect I'll be looking out for is in terms of the capacity addition by the 5th and the 6th largest players like JK Cement among others, where they are looking to double capacity in the next 5 years, and that will add substantial capacity for the industry in the next 5 years. So will there be any kind of pricing power and margins to be for the cement players to be sustained? That's the second. And the third is largely a medium term question on consolidation. We've already seen a wave of consolidation over the last 4 to 5 years. Will that again happen in the medium term? That'll be the third. But these will be the 3 things from this conversation, largely around pricing, but the other 2 on capacity as well as consolidation going forward as well.
Okay, to talk more on this, we're joined now by Girija Shankar Ray, lead analyst, cement and institutional equities research at Yes Securities. Girija, very good morning to you. Great to have you on. I mean, the cement, I think, is one space and sector which is in waiting as far as those who have bet on it are concerned, waiting for prices to go up, waiting for demand to pick up. Is that time finally here in your view?
Hi, good morning, first of all, and thanks for bringing me with us. So we did a recent channel check on cement pricing, and we talked about around 16, 17 dealers and distributors across the geography. So the pricing, if I talk about southern regions, eastern regions, all the 5 regions, and all India average prices remains on quarter basis. I can say it is 20 rupees per bag is increase. See, nothing to be surprised in this because December, January, February, and March, there was no price hike in southern regions. And this 20 rupees, what I am talking about on quarter basis, main contribution is from your southern region and eastern regions. Southern region prices on quarter basis, 45 rupees per bag, I can say it is increased, and 38 rupees in eastern regions, followed by central is 10 rupees, and the rest north and western region was around 4 to 5 rupees per bag on quarter basis. But in June, what we have observed, whatever the prices were increased in April and May, that has 20 rupees around kind of per bag has rolled back in southern regions. See, the positive thing is that the prices are sustaining, and this is a good thing for the cement companies. Although there is a pre-monsoon kind of impact is there, and even we are heading towards the monsoon. Obviously, in July, August, and September, we may not see much price hike, but this price is going to sustain in the market. That's what in the industry. That's what I believe. And with respect to your volumes, March quarter is always a volume-driven quarter, so we saw a great spike in the volume on quarter basis. But yes, in June month there was sluggish in demand. That is the reason volume we do not see much. But overall quarter basis, if we talk about quarterly, first quarter FY26, the volumes are relatively marginally it is better than quarter 4 as well. So if I talk about quarter on FY25, the volumes are around 2% year-on-year jump. Similar kind of level volume also I'm expecting for quarter 1 FY26. In fact, second half of FY26, I believe that the pent-up demand which was laid on your first quarter of FY25 and second quarter of FY25, that is going to pick up.
Okay. Yeah. Okay. So you're saying that the volume growth that you saw in FY25 likely to repeat in FY26, and pricing is holding from what you've said based on everything that you've read, the channel checks that you've done. So now, given this kind of information that you have, what according to you is your top pick in the cement space, and what is the potential upside from this point?
Okay, cool. So see, recently what I can say, regional players are going to be beneficial from this kind of price hike, especially southern regions. So my topic is right now is Dalmia, which is located in your southern region and eastern region. I can say it's a pan-India player. Apart from that, I have a topic of Pillakon. So these are the 2 companies. In fact, ACC is also going to do well.
Okay, thank you so much for that, Girija. Joining in there on cement. So wait and watch continues on those cement companies. All right, Samit Sarkar has joined in, and we're a couple of minutes early to your appointed time. But Samit, since you have to turn up in the studio, that's fine. What's on heard on the street this morning?
Well, a couple of pure play oil refiners that were buzzing in trade as well yesterday, that is Chennai Petro and MRPL. Now, dealers are indicating that smart investors are moving their funds from oil marketing companies to pure play refiners. Now, one of the reasons behind this is the fact that pure play refiners do not have any marketing exposure, so any movement or any sharp spike movement in crude oil prices won't impact them much. And given the fact that refining margins are trending higher, pure play refiners would benefit more out of that. MCX, now there are buy flows on institutional desks. Both FI and DI have been buying this counter. Now dealers are indicating that for MCX as an exchange, the volume number in the month of for the quarter ended June is expected to be very strong. In fact, Morgan Stanley came out with a note today where they have upgraded the rate target price also on MCX. So keep an eye out for MCX as well in trade. Third was Avenue Supermarts and Titan. Now dealers are indicating that large HNIs have been accumulating both these counters on expectation of a strong Q1 FY26 update. Now both the companies would report their update in the next 15 days or so. So keep an eye out for both these counters. Both the counters had actually perked up in trade yesterday. And lastly, it was Polycab. Now, foreign institutional investors have been buying this counter. That is what the dealers are indicating. Dealers are saying that of late, whatever the management commentary has been in multiple conferences, indicate the fact that the first quarter numbers could be very strong for the company. And that is one of the main reason why foreign institutional investors have been lapping up Polycab in trade.
I have a couple of follow-ups there, Somit. One, you meant Avenue and Trent or Avenue and Titan?
Avenue and Titan.
Titan, okay,
Right.
because Trent also perked up in trade yesterday, so that
Yes.
was one. Part two of my question. Since morning we've been talking about this, that because the longs built up yesterday in the standalone refineries were very sharp, and because crude has fallen quite a bit, there will probably be a knee-jerk negative reaction today. I heard you say in your chat right now that dealing room sources are telling you that earnings growth will still be strong. So are your sources telling you that even if there is a dip, the dip could be contained, or maybe there won't be a dip and the stocks could go up even if the oil prices
For oil marketing companies?
No, for the refiners.
For pure play
Chennai
refiners.
Petro and MRPL.
So yes, Q1 will be very strong for the pure play refiners as well. So yes, there could be some reversal in trade given the fact that oil prices have come down and people would want to buy oil marketing companies given the fact that from $80 we have come down to around 69. So that shift can happen, but yes, earnings could continue to remain strong for pure play refiners as well in the first quarter. Also, a couple of things that I would...
Sorry, just before you, therefore the cuts, if any today, will be contained. They won't be very sharp.
Yeah, it should not be sharp.
But the point that you were making?
Right. And two stocks that we highlighted last week actually. On Friday we did highlight that Northern Arc is something that large HNIs have been accumulating, and yesterday it did perk up in trade. At one point of time it was up 10%, and Aventil is one thing that also large HNIs have been getting in given the fact that they're expecting some large order win to come in, and that stock was also up around 7-8% in trade yesterday.
Okay, thank you for that, Somit. So 8:45 a.m. you can see Somit Sarkar on India Market Open. Kunal Rambia, Sunny Agarwal still with us. Sunny, I just want to get your view on the defense play. Do you expect a cool off today? Because some of the perk up, and of course there's one thing after the other, but some of the kind of bounce that we saw in defense stocks yesterday was because of the regional conflict. Are we going to see a reverse trade for defense as well?
Yeah, quite likely. So we have seen historically, whenever there is a flare-up in tension in any part of the world, the defense stocks start to outperform. And whenever there is a kind of a calm over there, then we will see a kind of profit booking in defense. But again, as a team, we continue to remain constructive on the entire defense pack if somebody has got a long-term investment horizon. And again, one should stick to a frontline companies like BL, Mazgaon Dock, where we feel despite of muted Q4 number, execution should pick up in Q1, and there we can see a kind of bit outperformance. So today, yeah, kind of cool off today, but again, long term we continue to remain constructive on the defense.
Let's talk about some of these stocks on the charts as well, because they're still consensus buys for quite a few people. Kunal, on the chart, something like a BEL, would you... If you manage to get, and by the way, I was mistaken, the last 1 month, the gain for the index is 7 odd or 8 odd %, but the last 3 months, 45% on the defense index. What would you sell at this point, if at all, Kunal, or would you ride the rally as things stand?
So, for Alex, for me, it's very simple to ride the rally rather than going contra and shorting something. So on DEL now, again, this counter has made a new all-time high. In fact, yesterday and day before yesterday, there was a massive volume which was recorded almost after 3 to 4 months, which was 122 million shares were traded on that single day. That's what was on Friday. So the trend is very, very strong. But again, I will not really be a buyer at these elevated levels by any chance. If we get some kind of retracement, BEL can be thought of buying. I mean, we can buy this counter near 390 or 385 kind of zone, where the support of 375 is very closer. Similarly, with the case of HAL, the counter is been sideways consolidating since a month. I think the new breakout above 5,200 can drive the counter to 5,600. So yes, if someone is holding, hold with the trailing stop loss. If someone is not initiated a buy on the defense counters, if there is a further breakout, we can certainly initiate a buy.
Okay, so HAL, you can initiate a buy. I think another space that's going to be buzzing is for pharma companies. The global weight loss drug Wegovy is now officially in India, but its launch comes with a hefty price tag and intense competition. We're going to hear from Novo Nordisk, the makers of Wegovy. Today they have an event, but ahead of that, Varsha is joining in to tell us how that landscape is setting up. I mean, Varsha, it seems a lot of the pharma companies we talk to are betting on these weight loss drugs as the big driver.
Yes, exactly. So, you know, Tamanna, the current hot topic in pharma sector is GLP-1, and many pharma companies are actually banking on this product. Just to say, yes, Novo Nordisk will be launching Wegovy, that is the weight loss drug, their weight loss drug in India today. Now, what is that? So, it's a prescription drug containing semaglutide. Now, semaglutide is just the ingredient or active ingredient which is used for weight loss. Now, this, if you see, the launch comes after a delay due to overwhelming global demand that Novo Nordisk had, and because of the capacity constraint, they did not launch in India earlier. The semaglutide is expected to lose its patent in 2026, and this Wegovy contains a higher dose of semaglutide versus Ozempic, which is, you know, approved for your type 2 diabetes. Now, who are the Wegovy's competitor? If I were to talk about, you have Eli Lilly's Mounjaro drug, which they launched in India in March. Even Biocon, Glenmark, and Dr. Reddy's are making generic version of semaglutide, which they're gonna launch post patent expiry, that is in 2026. Glenmark also launched Lirafit, which is a cheaper liraglutide biosimilar, and Sun Pharma is also launching their own product. On the pricing point, if you see, the total monthly cost for Mounjaro goes to around 14,000 to 17,000 in a month. For Ozempic, it is 30,000 to 80,000, because still now that is being imported. That's why the price is higher. Today we are going to see how much, at what price they're going to launch Wegovy in India. And for Lirafit, if you see, the cost is around 5,000 to 50 in a month. Now, if you see the market for GLP when it comes to India is significantly high. This high demand has already created a black market and smuggling in India, and this is being used for weight loss. Now, what is the impact of launch of GLP product in the US? If you see, it's a very interesting story wherein GLP-1 drugs may affect food, beverage, and insurance sector, because you're going to eat less, and retailers are seeing reduction in food purchases, and alcohol consumption is also reduced. Lastly, on the industry analysis, GLP drugs, the semaglutide could cross $100 billion by 2030, and the anti-diabetic market in India is around $206 billion. So huge growth when it comes to, you know, GLP-1 products.
Okay, all right. Thank you for that, Varsha. So, is that going to be the big one? Sunny, just wondering, from you, how you're looking at the pharma pack, and when you're looking at some of these companies, do you apply this filter of who's going to be ahead in this weight loss medication race?
Yeah, I think one source is which is one of the large CDMO players, which competes with likes of Divi's and PPL, Piramal Pharma. So I think they have went on record to say that over the period of next 2-3 years, they are likely to be one of the key CDMO player along with the global brands, and that will be one of the key growth driver for them. So I think one source is the one name which comes to mind when it comes to GLP-1 and semaglutide. I believe ultimately the opportunity is pretty large, and it will flow to other CDMO players like PPL as well as the Divi's Lab. And at the same time, as discussed, many Indian players will try to launch as this drug is going off patent by end of 2026. So many Indian players will also try to launch this drug and try to capture the market share over there.
Okay, Kunal, DRL, one interesting note out on DRL also today. Are you looking at a Dr. Reddy's? Are you looking at any of these companies which are, focusing on maybe these GLP-1 inhibitors, or anything on the charts that you like in terms of pharma?
See, certainly the counters are looking good, and there are many counters like DRL which are in trend. But now one needs to be a little cautious, because Dr. Reddy's is the counter which is reaching the previous highs of August 24, and this counter has been unsuccessful in crossing 1400 mark. By any chance, if it gives a breakout, then one can expect the targets of 1500. But otherwise, this area of 1375 to 1400 might turn as the resistance. I personally like Sun Pharma a lot because again, this counter is available right onto the support with the stop of 1625. I think this is a bargain buying opportunity in the ongoing massive trend of last 4 years with the target of around 1850 to 1900. One can go long, keeping the stop loss of 1625.
I'm just wondering, Kunal, how you're looking at some of the diagnostic companies. We'd seen quite a hit on them yesterday after Amazon announced that it's getting into this space with Orange and delivering home-based diagnostics. So among, the Metropolis, Dr. Lal Path and the likes, any which you think would be ripe to build positions in today?
See, again, these counters are absolutely trending since May or April 23. I'm personally looking at the Laurus Lab counter, which was looking good to me. But now again, these counters have reached the previous highs of 2021. So Laurus Lab, which is trading at 666, I think there is still a little more room for the upside till 720, 725. But then one needs to turn cautious. Metropolis again was a counter which was in absolute trend. Look at the recent correction from 2300, it came down to 1700. So by any chance, if this uptake continues, then the breakout can be placed at 1800 with the stop of 1400. One can go long on then with the target of 2500. Otherwise, I'm just looking at Laurus, which is in trend. Other counters are still sideways consolidating.
Okay, all right. So that's the view on pharmaceutical companies as well, and the broader healthcare space. But you saw these on the bottom band, which is on the ticker line, just a short while back. That's where the news breaks, by the way. That's where you should watch for the latest news breaks. This is a major vote of confidence for global investors. Adani Airport Holdings has successfully secured a landmark $1 billion financing package for the transformation of Mumbai's international airport. Anushi joining in to tell you about the key details here. Anushi, a large amount of funds being raised here.
Yes, absolutely, Alex. And it's a big update and a big story that we are seeing for Adani Airport Holdings. Now, what exactly is panning out over here is Adani Airport Holdings has secured a $1 billion of financing. And this is for the Mumbai International Airport that we are looking at. Now, this marks India's first private investment-grade private bond issuance in the airport industry. And this financing is to be led from global insurance companies as well as institutional investors that we are looking at. Now, this was a Apollo-led funds in a transaction that we've seen with notable names like Standard Chartered, BlackRock managed funds as well. Now, exactly why this financing is what we are seeing now, this is for the longer term picture that we are looking at, which will support Mumbai International Airport's growth forward, which includes modernization, capacity expansion, sustainability initiatives, as well as commitment to achieve net zero emissions by 2029. So this is something that we should be watching out for. If you are talking about the transaction picture in more detail, now issuance of about $750 million notes, and this will be maturing in July 2029, which will be further used for refinancing and includes a provision to raise for $250 million notes as well. Rating also, if we see, is BBB minus with a stable rating and backed by the Mumbai International Airport's asset base along with their cash flows and operational excellence. Now, just a little bit of a picture about the Mumbai International Airport that we are seeing now. This is managed by Adani Airport Holdings and is a public-private partnership between Adani Airport Holdings along with Airports Authority of India, with the former holding about 74% stake and the rest holding 25% stake. Now, with 8 airports already in its management and development portfolio, Adani Airport Holding is India's largest airport infrastructure company and accounts for about 23% of passenger footfalls along with 30% of India's air cargo traffic that we are looking at. So it's a big update that we are seeing for Adani Airport Holdings.
All right, thank you so much for that, Anushi. So AEL is what you need to look out for when you're seeing that story as well. We're opening up in the green, 250 points up. Odd on the implied is what we're indicating. We'll take a very short break. We're back with pre-open rates, top ideas, and much more. Stay tuned.
is an ED seeking explanation on Yuvraj Singh, Harbhajan Singh on why they are endorsing such platforms which are banned by Government of India, and the mule account and Benami transaction, the kind of promotional payout being given to some of the media houses, the ad rates are between 50 crore to 100 crore.
What happens in reality is that under the garb of skill-based game, they end up promoting gambling only.
27,000 crore is what the tax evasion, the top popular betting apps are actually evading. Between January and March alone, they have seen 1.6 billion of traction.
All right, welcome back. First rates hitting, this will settle down. Well, 280 points up. So, you are expecting exactly this. You are expecting a kind of a boost in the pre-open session. You are expecting this to flow through. Now, the question is, what do you do next? Let's talk about stocks. Let's talk about what's moving in the first few minutes of trade. So, Kunal, I want to come to you on Dixon and what you think Dixon will do. There has been about a 2.5% stake sale by the promoter, lapped up by a large mutual fund as well. Probably we might see some pressure, if at all, on Dixon. Would that be an opportunity to buy at these levels?
Absolutely. I'm very comfortable. In fact, this counter was up by 4% in yesterday's trade, and it has bounced right from the support level of 13,750. And so, if this counter manages to hold the support level of 13,750 even going forward, I think we are heading for 16,500 to 17,000 kind of levels. I'm very comfortable with this. The only thing is one needs to manage the risk and the volatility of this counter. So keep 13,750 as a benchmark support, and one can take up the trade accordingly.
Okay, so that there you go for Dixon. Just wondering what you make of this, Sunny. And this is a tricky bit with promoter stake sales at this point. It should, logic dictates that you should see it as a bit of a negative, but depends on the promoter, depends on the stake, and depends on the buyer, isn't it?
Yeah. Again, coming to Dixon, again, the company which is growing at kind of 50% CAGR, where we are expecting our revenue to double over the period of next 2 years. Definitely, there is a story to be bought in by institution investor. I think let's see, time will only tell. But I believe the way kind of the growth with the company is delivering, and with the new lot of growth drivers which are available at company disposable companies, and I think they will continue to report healthy growth. And I'm sure the promoter exit and entry by one of the large institution will be kind of rewarding for the mutual fund holders or of that particular scheme.
Okay. Well, for now, starting okay. Couple of minutes done. And the other point to notice is that we right now have about 156 point uptick. Let's see if we build on from here. Remember, viewers, and I would love to know if Kunal believes that we have a march all the way to 26,000 or no, because Gautam Shah, when it come in, had spoken about 25,600. Lawrence Balanco mentioned that we might actually hit 26,200 or 300 in the current run as well. Kunal, now my question to you is, if we open this 200 point higher, would you go out and initiate a fresh long after that?
So Neeraj bhai, again, just let's go back and check out the last 1 week behavior. On 13th June, when there was a gap down open, and we saw the significant recovery. So the closing matters, right? And even yesterday, when we saw the gap down opening and then we saw the recovery, again, the closing was very important. So I will actually wait for the Nifty to give a fresh breakout about 25,150 to 25,200 on a safer side. If Nifty manages to give a close about 25,200, then I think this last 40 days of consolidation might just come to an end, and we might see the levels of 26,000 very soon. But till then, I'll stay cautious on this gap of opening.
Okay, fair call. Now, Sunny, here's the question, right? The crude price fall and the way it's come off. Yesterday, a lot of people on the street went long on the refiners, right? I mean, he's talking about Somit earlier as well. Today, just before I get to Sunny, though, I just want to mark if there is already a gash on a Chennai Petro or a MRPL, and conversely, is there an uptake? Can we show those stocks, please? Chennai Petro, MRPL, and then the oil marketing companies. So Chennai Petro is flattish, MRPL should come up, and then let's show the oil marketing companies and if there is an uptick there. Yes, there is. So Sunny, my question is simple. For people who park themselves in standalone refiners, would you recommend switching to oil marketing companies now that crude is below 70 again?
Yeah, definitely. I think again the crude oil prices has been pretty volatile of late, and yes, looking at the crack which we have seen in the crude oil price yesterday, definitely makes sense to switch to oil marketing companies. Where there were concern that because of these high crude oil prices, their margins may come under pressure as end consumer retail prices of petrol and diesel are stable, and that has not been tinkered with since long time. So I think it's clear cut. I believe that oil marketing companies will be a key beneficiary in case the crude continue to sustain below $70 for a pretty longer period of time.
Okay, big brokerage call of the day. This is turning out to be an exciting morning. Lots of early buzzers, but what's the big brokerage call of the day that you should not miss? Harsh is joining us with that detail.
Well, yes, it's on Nykaa, and we have CLSA initiating coverage, target price 229, which is a 30% upside from here. They're saying that Nykaa is the leading omni-channel beauty retailer in a $16.5 billion Indian market. So therefore, it's a large market size which Nykaa can tap into, and there is potential for high teens growth all the way up to FY30 for something like a Nykaa. In fact, personal care spending is likely to catch up with other economies, and there's a large gap there is what CLSA is catching on to. They're saying that the market though is evolving rapidly. You're seeing lots of competition as well. Nykaa though has a strong brand connection and is a key channel even for beauty education. All of this is what Nykaa is tapping into. They're saying that there's a clear fashion strategy that they have. It's a crowded place, but they're standing out. The strategy is focused on smaller curated assortments, which is what Nykaa does. Now, talking about the improvement, they're talking about profitability improvement holding the key. Growth is a focus for that purpose. Better profit should lead to investor confidence. You're also expecting around a 310 basis point margin expansion, which is 3.1% absolute margin expansion that they're seeing all the way through FY28 on a Nykaa. The valuation is a blend of DCF and price to earnings. DCF being discounted cash flow, and while the price to earnings of 125 times is demanding for sure, but the growth itself should take care of some of that. Risk is of course faster than expected scale up of beauty retailers like a Tyra, like a Purple, so there is some bit of competition intensifying and slower than expected growth in users. So those are two risks to keep in mind as well.
Okay, Nykaa in focus was Devyani International. So is actually with the focus is everything. It's a reverse trade that you're seeing today. Look at an HPCL. Pull up an HPCL for us, pull up a BPCL, pull up an Interglobe, pull up an IOC. What you're seeing is a reverse trade today, that crude plummeting, the ceasefire coming in, and some of those counters responding. Pull up an Adani ports, for example. The Haifa port and the fears for Haifa port was keeping the stock under pressure. That has clearly eased this morning. Some movement on Lemon Tree as well. It's another lot of new hotel openings that they have announced, and that is working in. KRBL also working this morning. So, you know, an export company with huge market in the Middle East as well. Pressure there has lifted. That's a broad theme of trade that at least I can see in the first few minutes of the pre-open trade. Sunny, are you spotting some of those trends?
Yeah, I think rice player can be one of the key beneficiary from a short-term perspective, as there was concern that because of this ongoing tension in the Middle East, there can be some impact on the business. I think basmati rice player can be the key beneficiary. The reason being that we have seen a kind of flattening in terms of basmati rice prices, which were continuously under pressure till month of March or April, and now henceforth we believe that the basmati prices can move up gradually. So again, we have a recommendation over here in terms of LT food. So Dawat is one of our topic where we feel that it's a proper blend, mix of play on domestic as well as US as well as international play. So we believe the fair value of LT food is close to 480 rupees. So keeping that price target in mind, one can approach it.
LT Foods was under pressure yesterday because of a countervailing duty that America wants to impose on soybean, which would have hit one of their subsidiaries, showing some recovery today. Would you look at any of these rice plays, Kunal, on the charts, LT Foods, KRBL, and some of those options?
Yeah, certainly LT Food is something which we are tracking, but again, this counter is absolutely trending from the highs of 480, it has come down to 415, offering very good risk reward. The immediate support on the chart is 385. Yesterday's low was in fact 388. So it's almost at the same level. Consider that as a good support level and one can initiate buy. I think this trend might just continue till it hits the benchmark level or say round off level of 500.
Okay. Well, as the pre-open rates settle, a couple of other very interesting stocks that I do want to mark and by the way, 200 points higher, which is great. Adani Ports as well as Adani Enterprises. Standard disclaimer, of course, the Adani Group owns NDTV, but there are reasons. Adani Enterprises, the Adani Airport Holdings has completed a one-of-its-kind fundraising exercise of $1 billion. So that's the positive for Adani Enterprises. On Adani Ports, because of the conflict coming to an end and all this Haifa related stuff, it is a sentimental positive. I don't think the stock corrected too much because of that, because they were insulated per se. But maybe there's a sentimental uptick out there, and therefore keep an eye out for both of these as well. Sunny, Adani Enterprises with the airport holdings fundraisers getting done easily, the Navi Mumbai airport coming up very, very shortly, new other businesses like mining picking up steam. Is that something that you've studied?
Yeah, so again, a kind of holdco company where many new businesses are being incubated, and we expect that all those businesses ultimately will come to the value unlocking through listing over the period of next 3 to 5 years. So again, a good play on various businesses like airport and infrastructure. So one can look at Adani Enterprise from long-term perspective.
Okay. Longer term perspective, Adani Enterprises 2504 currently, about 1.25% right now. In fact, the management that is going to come to us, Paras Defense, is the other interesting one because the whole bucket of stocks had a very good move yesterday. It's just trying to see what they're doing today. So Paras Defense, Zentech, etc. should come up. And then I wonder if KPIT is a slam dunk today, or could IT have an okay outing? Actually, it's not a slam dunk, 1.7%. I'm surprised. I thought it would be a bit more. But the other IT names, the likes of Infosys, etc., if with Fed talking of rate cuts, could those stocks actually do well? Infy certainly up 1%, some of the others, not bad. Okay, I think the going seems to be good. Kunal, any of the 3 stocks that you gave earlier in the morning, do you want to revisit based on how they have opened?
No, I think Neeraj bhai, they are doing really good. The pre-opening is almost 1.5% up for almost all 3 of them. So I think they 3 are good to go. But along with them, I think DAM Capital is also looking good now. It's up by around 1.5%. Yesterday, during the second half of the day, it picked up by 3%. So I think that counter is also worth watching at these levels of 260 with the stop of 245.
Okay, just want to talk about Vodafone Idea for a second. And, you know, this is a story you would recall our Shrimi Chaudhary, our Delhi Bureau Chief Shrimi Chaudhary broke some time ago, saying that the centre is very keen for relief to Vodafone Idea. Now, having said that, the Economic Times has a report this morning saying that an 84,000 crore package is being planned for Vodafone. 2.5% on the stock at this point. I mean, there seems to be some will there to save Vodafone at all costs, Sunny. What would you do with this stock? A little under 7 rupees, 6 rupees 71 paise right now.
Yeah, again, I would like to remain on sideline till the time the package is actually being doled out for Vodafone. And at the same time, I believe in case there is some benefit on AGR dues which are doled out to Vodafone, the same will be given to other players like Bharti. So as of now, would continue to remain constructive on Bharti rather than, and would like to remain neutral on Vodafone till the time the actual package is being given to the company.
Okay, constructive of Maruti, neutral on Vodafone. Kunal, how are you looking at those 2 stocks?
Vodafone is a counter which is still sideways consolidating near the lows, so it's a clear avoid for now, unless this counter goes up by at least say 10% and hits the levels of 7.2, then we'll think of, otherwise it's a clear avoid. Maruti is trading near the all-time high and the breakout is now at 13,300. I will not be keen to trade this counter for now, but if it manages to close about 13,350, or say let's round off to 13,500, it's the best counter to trade in the entire auto pack.
Okay, best counter to trade in the auto pack is Maruti. What do you make of Tata Motors? Let's pull up Tata Motors. Has that Harrier EV pricing done anything for the stock? Well, about 1% up, was on our watch list as well. Kunal, any view there on Tamo on charts?
Absolutely. So Maruti is going to be the momentum counter, but Tata Motors is offering that favorable risk-reward ratio. So with the stop of 650, which we discussed even earlier, I think this counter can be bought on every dip. There is no further room for the downside on this, looking at the last 15 years data. So I think Tata Motors can be a positional play with a favorable risk-reward ratio, but Maruti can be a momentum play.
Okay. And Kunal, sorry, is 10 seconds, is DAM Capital your top call for the day, or is it something else? 10 seconds, Kunal.
DAM Capital can be the top call of the day with the stop of 250.
Okay, so DAM Capital is Kunal's top call of the day with a stop loss of 250. Please remember that. Sunny, Kunal, please stay on. We need to talk a lot more post the markets open, but here's how the markets are starting off this morning, and quite a turnaround from how they may have looked yesterday. 186 points, 200 points in the green nearly now. 197, so 212. So really good going, and we're staying steady out there. Banks are okay. IT should come up on your screen. I wonder if IT is doing well too. Yes, up about 1%. If the Fed officials are talking of a rate cut, it should augur well for IT. So keep an eye out here. 1.25% higher. Mid caps 1%. Small caps maybe 1% too. And shouldn't surprise, because they were the ones that were holding out yesterday from the beginning. Let's get the heat map up on the screen. A lot of green, very little red. Very little red, as we said. NTPC, ONGC, likely because of this oil price downtick, and I guess Oil India, etc., could also be there. But look at the green on the screen. It's a merry, merry morning for all investors. Adani Port, 4% higher. This, and I repeat, it's a sentimental reaction, because they had declared, even when the attacks were on, that their properties at the Haifa port were insulated from any kind of attacks this time. So this is more the conflict getting over, so the risk premium that might have been eroded then getting back attached. 4.5% and calling for that one. Shriram Finance, Geofin, Ultratech, Adani Enterprises in that list as well because of that $1 billion raise. Asian Paints up a couple of percentage points. Again, crude price fall. M&M, HCL Tech, effectively Tamanna. Everything under the sun is in the green, but for ONGC, NTPC, I don't know if it's ex-dividend or something, some news. I'm missing that here. So I confess, I don't know why NTPC is down 3%, but ONGC certainly because of the oil price downtick.
Yeah, it's a mood reversal, I would say. And, another indicator of that mood reversal is the VIX. Look at the India VIX over there and see if you can pull that up full frame. Nearly 5% down on the India VIX. Not that it was massively, high, but the volatility index about 5% down. This morning is telling you what the mood is. The implied open indicated this kind of a start. It's delivered on it. Nearly 265 points up. The Bank Nifty up 1%. Let's pull up the mid cap and small cap indicators as well. Remember, mid cap and small cap were in place even before the events of the last 12 hours. What's happened in the last 12 hours though is the fear of a crisis escalating and then dampening before Indian markets have opened. So we're just picking up when the party is starting. 1% up on the mid cap. Small cap 250 also close to 1% up. Let's pull up the sectoral heat map for you and just give you a sense of what's working this morning. PSU banks firing, Nifty Realty doing well, IT stocks getting their moment in the sun. Of course, interest rate concerns and the whole sense that maybe the US will not be dragged into a long war also is helping. Nifty Auto also up there. Maruti and Tata Motors both in focus today. What's not working? We told you India defense would cool off because the threat perception has gone down, and this is what was working when there was a whole regional conflict brewing. So some cool off there in defense stocks expected, which is what is reflecting on the Nifty CPSE as well. Media also taking a breather, but this is a largely green screen and a very positive screen at that, no doubt about that. Let's look at specific stocks. Lemon Tree, let's look at what's happening with Lemon Tree. Every few days, there's an announcement of a new clutch of hotels that they're planning to open. 1.5% today up in trade. But the crude price drop and the reversal of the ceasefire is what we want to look at. BPCL 3.5% up, HPCL 5% up. HPCL set to be really one of the big winners of the day. Indian oil also doing very well. We saw ONGC hurting, that's expected as crude prices drop, 2% down. Interglobe, you know, the relief for the aviation industry right now as some of those skies clear, crude down, travel back up. You're seeing that in the Interglobe stock price possibly this morning. Indigo Paints also, crude is a key raw material for this space, so that's why some relief over there. In terms of the conflict reversing or a ceasefire right now, we saw Adani Ports continuing to fire nearly 4% up. KRBL, LT Foods, I mean these rice exporters and big exports to the Middle East as well, that's helping. GE Shipping was up on the fears of the Strait of Hormuz closing, Red Sea conflict, all of that reversing. So reverse trade there on GE Shipping is what you're seeing right now. I want to pull up and seeing what's happening to Dixon, promoter stake sale. Sunil Vachani is dropping some of that stake. They have a buyer already in MOSL. Yes, as expected, it's up in the green. Let's look at Vodafone Idea. There is a report today saying that there's going to be a relief from the center. This is something NDTV Profit has reported earlier, that this is being mulled at the highest levels, nearly 2% up on that stock right now. NTPC once more, yes, there is a block deal, 81.4 million shares traded in a block on NTPC, which is why you're seeing some pressure there this morning, 2.5% up. And the mid-quarter update for KPIT is a bit of a dampener. That was in our watch list as well. 5% down nearly on KPIT Tech. But that was to be expected, Neeraj, that KPIT Tech would have a tough day, but the IT pack on the whole in a different mood.
Tamanna, and likely because of those Fed rate cuts, as we spoke about, both me and Tamanna. But yep, this is down. Just a couple of other stocks. So, of course, the oil marketing companies are doing well. We marked Swan Energy and Balu Forge. Swan Energy is up 4.67%, amongst the top gainers on the Nifty 500. I wonder if Balu Forge, not a part of Nifty 500, but is it up to? Yep, about 4 percentage points. So, that's not doing too badly. Interglobe Aviation, 3.75% and counting. That's a 2 lakh crore market cap, moving up 4%, likely because of the Middle Eastern routes opening up and crude prices falling. So Sunny Agarwal, first question to you this time, instead of going to Kunal first, because Interglobe catches the eye. Does this resolution that we're talking about and crude prices coming off again make Indigo come into the buying scenes all over?
Yeah, definitely. I think the concerns on crude oil prices and as well as curtailment on certain international routes are off the track, and we believe that will augur well for airline service provider like Interglobe Aviation. So I think the fair value of the business, keeping in mind the investment horizon of 9 to 12 months, is close to 6,200 rupees. So again, I think definitely a good add in a large cap portfolio.
Okay, Kunal, one thing is that, okay, it might be good for oil marketing companies. The second thing is they have opened up 4% higher already, right? HP, BP, IOC. So from these levels, for somebody who's tuning in right now, wanting to know if he can initiate or she can initiate long positions from these levels, what would you say?
So Neeraj bhai, again, BPCL is the counter which I'm tracking in the entire pack. Now this counter is still sideways consolidating since 1.5 months. In fact, this counter is consistently seeing the resistance near 325 and support being 310. And look at the high, it was at 327. It's trading right now near the day's low. So if someone is already holding the position with the stop of 310, one can certainly hold on. But for fresh entry, I think we'll have to wait for the closing, and that should be about 330. With the target of then 375, one can initiate a buy. But for now, it's a clear avoid.
By the way, so I'm sure that a lot of the stocks that are reacting to crude have been marked, and the semblance of normalcy that comes back to global trade seemingly. Of course, we're waiting for the final word on the ceasefire taking effect. On NDTV, I must point out that we had a reporter on the ground in Tel Aviv, and while he was speaking, the sirens were going off. So we're still waiting for that to happen.
If you see Donald Trump's post, he does say that let them finish once their ongoing missions complete. complete, and then there's a 6-hour deadline, then there's a 12-hour deadline. So it's a graded timeline to that ceasefire. And we saw that after Operation Sindoor as well.
Absolutely.
So I suppose in this day and age as well, it takes time to get that message across that, okay, there's a ceasefire.
One stock that I want to talk about on the trading side, which moved up quite substantially because of container costs expected to go up, was Shipping Corporation of India, SCI. It's down about 2% in trade today, perhaps some of that being reversed right now. It was down over 2%. Greatest Eastern Shipping also down about 1.2% or thereabouts. I'm just wondering, Kunal, on the charts, would you see a reason if you had gotten in earlier to book profits and exit this stage?
No, Alex, again, Shipping Corporation is a counter which has seen substantial volume spikes even in the past. On 20th March, the counter was up by around, those 11% and the volume was 58 million. Similar was the case on 13th June where the counter was up by 10% and the volume was 86 million. So it's looking very good to me. In fact, these volumes are showing that someone is clearly accumulating the counter. The trailing stop loss for now should be at around 210 and one should try to enter this position. In fact, this is looking like a beginning of a new trend from the extreme low levels itself.
Another stock that I want to look at is Page Industries. Goldman Sachs has a note out today on Page Industries, and they've initiated a buy with a target price of 52,000. They've said it's poised for a return to sustainable mid-teens growth. Channel inventory reset boosts market conditions. Page's outerwear segment will recover, aided by EBO network acceleration and new on-trend launches. They're poised for return to sustainable mid-teens growth after a long disruptive period. I thought this was very interesting on Page because Page has been in a hiatus in terms of, performance and the stock and, even what the numbers have been showing quarter on quarter. But Goldman Sachs seems to think the tide is turning.
Yeah, and this is coming just, I think, 2-3 days after one brokerage, I'm forgetting which one, downgraded Page as well, saying that, things are going to take a long time. But certainly when Goldman Sachs says and brings out a note, the stock does react. Some very interesting assumptions that they have made around Page's growth. So could be interesting to see how it shapes up.
Yeah, today is also good when the mood is generally,
you
want to believe stuff. Okay, Sunny Agarwal, are you liking Page Industries?
No, as of now, we would not like to ride Page Industries as still the demand environment continue to remain muted for all these OGRE players. So would not like to. In fact, there are many other better bets in the consumption sector. So we believe that urban consumption is likely to pick up going forward, and we would like to bet our money on QSR as a sector. So there, Jubilant Foodwork as well as the Westlife developer, which is a play on burger, McD. So these are the two plays which we would like to ride as far as consumption.
Sunny, Kunal, thanks so much for joining us this morning. Pleasure having you on the program as always. All right, let's talk about Tata Technologies. It's a stock that is in focus as the company looks set to post a strong performance in the current financial year after a relatively flattish performance in the previous financial year. We're joined by Puneet just to set the context before we speak to the management. Puneet, what are the key numbers to focus on here?
Well, thank you for that. So definitely, as you rightly mentioned, it's been a tough year for auto ER&D companies, and Tata Technologies was one of them in the previous year. While we have seen, the demand environment slightly, inch up for the good in this fiscal year, we're seeing some pressure for car makers in Europe, and that could be one of the key watchables in FY26. So there'll be three key things I'll be watching out from this conversation. One is, of course, on the outlook of what the management is anticipating, especially from the auto vertical. That's more than 80% of the company's revenue. The second aspect is the non-auto revenue, because the semiconductor business has been doing well. The company's focus on the education sector is the other one, and the recently formed joint venture with BMW has been scaling up, immensely well in this fiscal year. So they already have more than 1,000 people employed in India. It could also be a very good export opportunity for the company. That's the second aspect, and finally on the sustenance of growth in this year, both from the domestic as well as from the international market, how those things pan out. So those are some of the key aspects, as well as focus on the BMW JV, because that's very interesting in terms of business opportunity as well as revenue growth. So those will be some of the key things I'll be watching out from this conversation.
Okay. In fact, let's take that to Warren. Warren Harris, MD and CEO, Tata Technology, is joining in. Mr. Harris, always a pleasure to have you on NDTV Profit, and thank you so much for your time.
Good morning.
What is FY26 looking like so far? Because FY25 was a patchy year in terms of some great tie-ups for you, but still some headwinds for the entire space. Do you see that changing significantly in FY26?
Well, we certainly are optimistic about having a good year this year. We started the year with a great deal of optimism, given the deals that we converted in Q4, and then all of a sudden the tariff announcements were made at the beginning of April, and a lot of the deals that we have teed up were right shifted. I think that as things are starting to clarify now, many of those deals that we were anticipating to close at the beginning of the quarter are starting to close. And although we anticipate that Q1 is going to be relatively soft, we are still very bullish for the full year, and certainly the second half of the year looks as though it's going to be much better than the first 6 months of FY26.
Let's talk about some of the key aspects that will contribute to this, and I want to specifically delve a little bit into that BMW joint venture. There's a lot of interest from the analyst community as to how this is panning out. Can you give us some color as to the growth that you're seeing there, what the kind of contribution this year will be?
Yeah, well, we're very, very proud of the partnership with BMW. As you've commented, we signed the deal last year. We began trading in November. We've stood up almost 1,000 people in the 3 innovation hubs that we've launched. One in Pune, one in Bangalore, and the other in Chennai. The scope of the joint venture is next generation automotive software and also digital solutions. And one of the things that we're really proud of is that BMW selected Tata Technologies to work with in this space, against the fact that they were already working with incumbent IT and engineering service providers from India, which I think is a testament to the confidence that the market has in the breadth and the depth of capabilities that we've got in automotive software. You know, we expect the momentum to continue. The joint venture will have a material impact upon our bottom line. We will not be consolidating at a top line, but it will be accretive in terms of net profit. And there's also a halo effect associated with partnering with BMW. The endorsement that BMW provides certainly, I think, sends a very strong message to the market in terms of, again, of the capabilities that we represent. So this is a very important relationship for us, and it's certainly something that we expect to build tremendous value around in the coming years.
You can help me quantify that, if at all possible. At least give me a range. When you say that it's going to be accretive to the bottom line, I see in the fourth quarter that 12 crore was a net benefit, and this was about 4.6% of the Q4 pre-tax profit. I'm just wondering whether that share goes up in the current financial year.
Yeah, well, we expect it to continue to build as we stand up more and more headcount. And you know, we're just beginning in terms of the extent of the responsibility that the joint venture will take. So we certainly expect to build from the contribution that was made in the fourth quarter.
Warren, good morning, Neeraj here. No two companies are alike, but one of your peer sets in their mid-quarter update overnight has mentioned a few things about how deal ramp-ups are not happening in the same pace as they would have anticipated. I would reckon that deal closures or the conversations around deals as well might be slow. Now, I'm not saying that you would suffer or you would go through the same thing, but I'm trying to understand that are you facing, for the near term, those issues as well, that ramp-ups are not happening at the pace that you may have anticipated at the start of the calendar?
Yeah, I would echo the commentary that's come from one of our competitors. Somewhat counterintuitively, we expected a significant amount of deal signings this quarter because the delays in decision making last year, in part because of the election cycle in the US and the tapering of EV incentives in Europe. I think many of our customers were delaying decisions because of that, and there was a pent up demand to invest in new product, and we were planning very much to intersect with that. I think that the tariff announcements has compounded the uncertainty, and many countries are waiting for the trade negotiations to provide the clarity against which they will make decisions. And so, we expected a much stronger first 3 months to this fiscal year, and that's not played out. But what we have seen towards the end of the quarter, over the last 3 or 4 weeks, is deals start to get converted, and that's what gives us confidence in terms of the second quarter and the full year.
Just to come back to that for a second, Warren, and I know you've explained it, what do you think significantly changes in terms of appetite for those kind of spends between the first half and the second half? Because yes, the election cycle and all of that is behind us, but the US economy also keeps getting buffeted by one crisis and then another.
It's true, but if you look at the automotive business, and that's 80% of our business, it's a product-led business, and the automotive business is going through a significant transformation as the industry pivots towards electrification and software-defined products. And so the delays that we've seen in the last 12 months cannot continue forever. Companies that continue to delay will be essentially mortgaging their future. And so, from the conversations that we're having with our customers, and because of the cycle that we expect to run through, again, decisions on new products in the short term, it's that really that informs our confidence in the future. Now, as you point out, the economic uncertainty at a macro level will certainly continue to play a part, but manufacturing companies have to invest in product, and so it's that really defines the basis on which we expect the second quarter and the second half of the year to be much stronger than the first 3 months of the fiscal.
Got it. Warren, just trying to zoom out slightly, and about 2 years ago, one couldn't find a fault with the auto spends that the non-tech auto players would have to do and were doing in order to keep up pace with the tech in their car, and it seemed to be a decade-long spend. Now, if there is a bit of a pause here, maybe due to cost, maybe due to the fact that the world is not electrifying as quickly as everybody thought they would, but is the trend still intact? Would you reckon that maybe there is a pause right now in 2025, but 2026 or mid-2026 or 2027 onwards, those heavy spends will come back again?
There is no question in my mind. The future is predominantly electric, and it will be driven by software. And so we see the pause and the delay now essentially being a tactical pause and delay. If you look at the election cycle in the United States, the policy positions of both sides was very, very extreme, and I think because of that, the investment decisions were paused. Now, whether we like the current policy or not, now we at least have clarity, and I think that's what will drive the decision making. And again, as far as the direction of the industry is concerned, we do not see any compromise on the move to electric, and certainly the importance of investing in software-defined and AI-defined vehicles that will define the competitive position of the OEMs and their supply chains in the future.
A point well made, Warren. As you've said, the first quarter is likely to be soft, and the operating environment not really the best at this juncture. But your point on the need for manufacturing companies to spend at some point is well made. But having said that, for you and your company, the focus at this stage, would it be fair to say that it would be to control the costs, and so therefore to protect the margins? And how do you do that? Do you anticipate that the first half will be soft on the margin front as well? You saw a deceleration or a contraction somewhat in FY25. What is the range you expect in the first half? And if in the second half is going to be better, does that move up materially?
Yeah, I think that's a great question. If you look at our performance last year, it was really defined by resilience and our commitment to operational rigor. One of the things that we were very proud about was even though revenues tapered towards the end of the year, we were able to protect margins. We were able to post better than 18% margins for the fourth year in a row, and we'll continue to apply the traditional levers that drive the improvement in gross profit and operating margins, and those things continue to be maximizing offshoring, improving the people pyramid, investing in automation. One of the things that we are doing pervasively throughout our company is applying AI to every key process and every key function, and that's having a material impact upon our productivity and by association our margins.
I'm sorry to nudge you, and it's difficult, of course, to anticipate this, but Warren, directionally, would you say that you would head higher to that 20% mark towards the end of the year in the second half?
I think we will certainly position 20% as our North Star. I think given the softness of the start, this year, it will be difficult for us to achieve that at an aggregate level for the full year. But certainly our aspirations in Q4 will be to get as close as that as we possibly can.
Just one last word, because we've spoken a lot about the automotive segmentation and BMW, etc. Warren, just want to know what the outlook is on the aerospace division. Is that sort of the blue sky bet that you're looking at? Have you started those conversations or are empaneled with large companies? That takes some time as well.
Well, very much so. We are incredibly bullish about aerospace. We doubled our aerospace business last year. We're on track to do that this year. I was at the Paris Air Show last week, and sentiment is very strong. Demand, I think, for new aircraft is going to continue to build, and I think also with military spend starting to increase, I think resources and capacity are going to be sucked out of commercial aerospace, which is going to provide opportunities for organizations like ourselves to backfill. So we are very, very bullish about our aerospace business at the moment. We expect, again, to get close to doubling our business this fiscal year. And our aspiration is to be one of the leading global players in the next 2 to 3 years. And certainly the demand environment gives us confidence that we will not be opportunity constrained as far as that objective is concerned.
So double the revenues from aerospace this year or double the order book?
Double the revenues from aerospace this year. We're coming off a relatively small base.
Yeah.
So in percentage terms, that's a big number. Yeah. In quantum terms. It's obviously a lot less.
Okay, thank you so much, Warren, for speaking with us and answering all of our questions. We always enjoy our conversations with you. Warren Harris there of Tata Technology is talking about the outlook for the company. It's been a soft year for them. First half will continue to be a little worrisome, but that's, the outlook for the space as well. One important headline that came out of that, Warren Harris echoing what we've heard from KPIT, that some headwinds still continue, but he's very confident that the second half looks better. All right, the next company that we're focusing on they say that no matter what happens to coffee prices, it doesn't really make a difference, but coffee prices have taken a hit. They hover close to a multi-month low. What is leading to the decline, and how does it impact, if at all, Indian players? We're going to be speaking with CCL Products, but before that, let me go across to Mahima to set up that conversation. Mahima, first point, lower coffee prices, what does it mean for CCL?
Right, so just to give a brief about how coffee prices have fallen in the past few odd weeks. 1 week, both Robusta as well as Arabica prices have gone down by around 7 to 8 odd %. And in terms of 7-week move, Arabica prices have been down over 21 odd %, and for Robusta it has been over that 25% mark. Now this is majorly because there is higher production on the back of favorable weather conditions, and this means that there is higher supply versus that of demand, and that is leading to kind of downtick in the coffee prices. Now in terms of CCL Products, just to understand how their supply dynamics works, say 60 to 70% of this coffee is procured from large houses and reliable houses, but 30% is done from local aggregator, and this 30% majorly gets impacted by changes in coffee prices. In terms of how FY25 panned out for them, because FY25 had seen significant up move in coffee prices of over and about 100 odd %, and because of which customers were going for shorter term contracts rather than longer term contracts. So the question really here to ask would be that now will customers come back to those longer contracts? And in terms of supply dynamics also, where 30% of their overall procurement is done from local aggregators, will that strategy change, and if yes, how will that change? Plus they adopt cost plus model, so whatever price changes happen in coffee, they either pass it on to customers, but in terms of price hikes that they took in FY25, that's around 30 to 35%. So the question really here is that will these price hikes now see some cool off going forward because of coffee prices going down? And lastly, in terms of the management guidance, they've said that they've reiterated long-term EBITDA and profit CAGR guidance between 15 to 20 odd %. And in terms of working capital and inventory days also went higher in FY25 because of rising coffee. So now that coffee prices are easing, what will be the impact overall on their inventory as well as working capital? So this is the overall view of how CCL Products can be impacted because of volatility in coffee prices.
No, I'll tell you that, and Mahima, thanks for that. And we make it a habit of calling Srishant Challa every time this happens, and he comes. By we as in, I don't mean just NDTV Profit. We hardly do that, because Srishant comes and says every time that, listen, coffee prices go up and down, we don't get impacted. CCL doesn't get impacted. Srishant, good having you. Thank you so much for joining and taking the time out. We know you don't get impacted too much except for maybe short-term things, but has that changed a bit because your business model has also evolved, or are you still completely insulated from coffee price movements?
It's still the same, and you've stolen my thunder, so there's nothing more I'll have to say.
No, I mean, we just wanted to lay it out that we know now by now, after talking to you for so long, that it doesn't have an impact. But just I mean, if you can wear a hat of a commodity expert, Srishant, and just tell us, what do you think of what's happening to those prices? Is it external factors of crop which are leading to this, and is this cool off going to be sustainable? It may not impact your business, but just give us a view if you have one.
Yeah, so actually I need to step a couple of years ago what happened. See, the gap between demand and supply was about 7 to 10%, but the prices moved up by almost 300, 400%. So everyone in the market knew that it was not sustainable. There were a lot of funds taking a position in coffee, and that is also one of the reasons why the market really went up. In the coffee business, everybody has been working on a hand-to-mouth basis. Nobody wants to be stuck with high-priced inventory. So everybody has been working in a certain manner. We were all expecting the prices to come down, and one of the main reasons is Brazil is actually in the process of doubling their capacity. It's already the largest producer in the world, and they want to double their capacity within the next 2 to 3 years. This year was actually, we were expecting the prices to fall a little, which is what has happened. In the next 6 months, we're expecting a further correction as well. So things should start getting normalized in the next year or two. So yeah, that is a broad overview that I can give.
Srishant, very good morning. Just to get a sense, do you expect coffee prices to continue in this trend? Because they've been in an uptrend for some time now. Do you think this reversal now continues?
So at this point in time, we've already seen the correction that we were expecting. We're not expecting a drastic drop at this point in time, but maybe another 6 months down the line, there could be another correction once the Vietnam crop comes in. The demand is there today. And one of the questions that was being asked earlier also, are we seeing any change with respect to long-term contracts and all that? Because we're expecting a correction next year as well, we ourselves are guiding our customers to start covering only for 6 months at a time, not to go beyond that, to insulate themselves.
Okay. Well, so I'm wondering what that means for your local aggregators. Will this be a positive? Because, local aggregators who could possibly default now have less reason to. Does this shore up as a positive for you?
So usually the local aggregators, they work on a cash and carry basis. So they end up, there's no risk involved for them. For the longer term contracts, we only work with the larger trade houses, and they take care of the hedging and everything, whatever they have to do at their end. But you're right. When the prices are falling, the suppliers will want to honor the contracts. We will not see defaults at this stage.
What is the kind of margin impact you're seeing at all? Forget about the coffee prices. You're saying that has zero impact. Am I understanding that correct, Srishant? Coffee prices have zero impact. What is the kind of margins that you're looking at for FY26, all things remaining steady?
So we actually work on a fixed margin basis, so which is why you would have seen over the last maybe even 10 years, we've seen coffee prices at $1,000, we've seen a $6,000, but our absolute earnings have been more or less the same, maybe constantly improving a little bit because of a product mix change. But the actual impact of coffee prices has been very negligible for us because we work on that cost plus basis. That's been our business model for more than 30 odd years, and we continue to follow the same system.
Srishant, one final question really. All through the last 3-4 years, even during COVID times, you've kind of maintained that you want to grow this steady state 15, 20, 25%, whatever the number might be, CAGR for a number of years. Does it still stay the same with this increased size and the increased geographical presence that you have? Part one is that. And part two, some managements, I'm not saying you, but some managements want to grow at 15, 20 or 15%, even though they can grow at 25% for a couple of years, because they want to grow in a peaceful, linear fashion. Are you kind of following the same template?
So that's actually a very good question and difficult for me to answer because, the 15-20% is what we are comfortable with because we believe in sustainable growth. If we have to grow by 25% in any odd year, we can easily do so. We can fill capacity, we can drop prices, we can do a lot of things. But we've always believed in building sustainable growth. Our process of onboarding a customer typically takes between 2 to 5 years. We have to convince the customer, get the right products in place, and we are now focusing more on small packs and actual brand owners. So we don't want to take any shortcuts. So we want to make sure that we get sustainable growth. Once we onboard a customer, we want them to stay with us in the long run as well. So that is the reason why we say that 15-20% growth. If a contract materializes in a particular year faster than we expected, you might see a small uptick in that particular year.
Do you expect any kind of cool off in MRPs? Because we had seen MRPs inching up, especially for the more premium products. Do you expect that to cool off?
That's a coffee lover asking the question.
That's a coffee lover. Yeah, completely. I have noticed, and it has hurt. Dangerous amount of coffee. So yeah, do you expect that to cool off?
So definitely it will, but it will take some time because all the manufacturers, they would have already bought the coffee, they will be processing it, they will be filling the pipeline also accordingly. So it may take around 6 months or so to actually start seeing the impact of lower prices getting passed on to customers. Thanks to the competition that is there, whoever ends up buying coffee at a lower price, they will start pulling the prices down anyway. So everyone will follow. So definitely you will see that impact.
Srishant, out of time completely, but can't let you go without a quick question. People are having, my analyst is asking this, that people are having a lot of matcha. Will it impact coffee consumption? Your best guess. Come on, be honest.
No, not at all. Matcha will be maybe 1% or less than that.
Srishant, coffee for life. This matcha can't give you what coffee gives you, no doubt. So we're with you on that. Thank you so much, Srishant Challa, the MD of CCL Products. That stock has been doing really well. Pull up the 1-month chart. And of course, they say low coffee prices, if at all, will be a boost for them. Okay, we'll take a very short break. On the other side, we're speaking with Paras Defense. I mean, come rain, come shine, this is one sector and of course one stock which just keeps delivering. What's happening with Paras Defense? All of that on the other side of the break. Stay tuned.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Sources in ED seeking explanation on Yuvraj Singh, Harbhajan Singh on why they are endorsing such platforms which are banned by Government of India, and the mule account and Benami transaction, the kind of promotional payout being given to some of the media houses, the ad rates are between 50 crore to 100 crore.
What happens in reality is that under the garb of skill-based game, they end up promoting gambling only.
27,000 crore is what the tax evasion, the top popular betting apps are actually evading. Between January and March alone, they have seen 1.6 billion of traction.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture? behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash.
Welcome back. Markets in fine mood this morning. 25,100, closing in on 25,200 really. So that's going strong. Nifty holding up. Nifty IT, one of the winners today. Bank Nifty also shining quite bright. The advanced decline ratio is something that I just want to quickly pull up before our next conversation and to give you a sense what's happening there, because you have a broad-based strength being seen in the Indian markets, celebrating in a fair bit the ceasefire that has been announced. Now, defense sector, meanwhile, has had quite the 6 months. The index has been up 45% in the last 6 months. Paras Defense is also in focus as one of the major beneficiaries of this boom. We're going to be speaking exclusively with Paras Defense in just a minute. But before that, Anushi, who tracks the sector, is setting up the conversation.
Hey, morning, Tamanna. So what we are seeing for the defense sector in general, it's been a strong focal point, especially the last 1 month in the 6-month period that we are looking at. The index is up over 7% in this last 1 month, while in 6 months you've seen the index returning with about 45% of gains. Now, just on the defense side, what we are seeing, export opportunities, 50,000 crore is the target that we are looking at. FY26, 30,000 crore is the target that we are set for. So companies are steadfasting their progress on this front. Now, coming specifically to Paras Defense, now they are engaged in defense, electronics, defense and space optics and heavy engineering as well. In FY25, they had clocked in a 44% of a growth in terms of revenues. Margins were up at 26% as compared to 20%, while net profits saw about more than 100% of an increase. In terms of the order book positioning also, last that we saw 835 crore was the order book that they had as compared to 215 crore of an order book in FY22. Some of the segments which will continue to remain in focus for Paras Defense is laser system, optical telescope, existing businesses as well as optical system, as the company wants to become global leader in the optics and optronics system over the next 3 years. So Paras Defense in focus on the back of these updates.
Okay, thank you for that, Anushi. Now, Amit Mahajan joining in, Director at Paras Defense and Space Technologies. Amit, great to speak with you and a very good morning. I mean, it's been, I think, if we call it eventful, it would be really watering down what has really happened with the defense space, the sector and the industry. What has it been like for your company through everything that we've been seeing? Is all of this excitement that we're seeing on the street actually translating to conversations, order wins?
Good morning, and thank you for having me on this show. Being a part of the defense industry, it's a little ironic to gain from things that are not otherwise good for human beings. So all these tensions, all these wars and all that is happening around the globe, it's not something that we always wish for. But yes, being a player in the defense industry, the opportunities that arise out of this, our military preparedness, our national security, which is at prime, has come in focus. Now, your question about whether all of this hula hoo that we're talking about in defense industry, that the stock market is presenting, does it percolate down on the ground? The answer is big time. What we are seeing are opportunities. Not only they are swelling up, but all the opportunities which were looking quite distant, they are now looking nearer than earlier. So the buzz is also in the procurement level. The buzz is military preparedness. The buzz is national security, and that's happening on the ground. All Indian defense manufacturers today will get a lot of attention, and everybody needs to be geared up to make sure that we can satisfy, justify all the opportunities, not just for the business purpose, but also national interest at large.
Okay, so give us a sense of your order book outlook.
So currently the order book is in excess of 900 crores. And when I'm looking at just the order book, I'm also looking at the opportunities that are in front of me, which are in excess of 2,000 crores. So what I'm seeing is all of these 2,000 crores, some of that will come sooner than later, and the remaining would come for sure. So all of this will phase out. What if I expect something to come after a year will come before that. So this is the momentum that is there in the industry, and I think we are having a positive problem that we need to keep ourselves geared up for such opportunities.
Amit, good morning. Very happy to see that business momentum. Just tell us, typically, what would the time cycle be for orders that you get? I mean, 2,000 crores is a large number. Assuming you get that in the next 1 year, what over the course of the next 1 year, let's say, what would the time cycle of orders such as these typically be?
So we have orders ranging from, say, some of our defense electronics orders which range from 6 months delivery to some things which range like a laser system to 18-month delivery. So we have a vast cycle from 6 months to 18 months.
Amit, even that, now I'm trying to just think about this and correct me if I'm wrong, right? But when I look at your consolidated numbers and what you did, let's say from 22 to 23 to 24 to 25, and I believe you ended 25 at what, 370 odd crores? Is that the right number?
Close by.
Sorry, yeah, 365, 370 crores, right? And correct. Then if you have an order book of close to 2,000 or 1,000 crores or 2,000 crores or what have you, which is executable over 18 to 24 months, which means that your revenue run rate would actually jump quite significantly over the course of the next 2 years. That is 26 and 27.
I don't want to believe that, because I would like to believe that the projections that we have given of about 40+% is, according to us, is more realistic. Anything more than that, we are geared up for, but we don't want to be optimistic. We have to be realistic. Sometimes some things come up. Every opportunity that is in front of us will come our way, for sure. But when it comes is something that, events like these will decide. So we don't want to be bullish. We don't want to be optimistic. We want to be realistic, or sometimes maybe conservative, so that we can be more towards customers, making sure that we are delivering quality products.
So Amit, just to understand the UAVs through everything that we've seen, I would say in the last 2 or 3 conflicts, whether it's Operation Sindoor, and we've seen that recently as well with what's happening in West Asia, the need for drones and UAVs has become the next big thing. This is also now a space where everyone is jumping into. There are a lot of companies looking at UAVs. How does that position you? Do you see yourself as a first mover advantage? Where are you heading in that direction, specifically on UAVs?
I want to kind of slightly detangle and simplify things here. We see UAV making good amount of impact during these wars, and UAVs disrupting, UAVs being used as weapons, and all of this. I want to take your attention towards why a UAV is able to disrupt so much. That is the lack of anti-UAV systems. So as much as UAV is a weapon of the future, anti-UAV is a defense mechanism of the future. And what makes anti-UAV or counter-UAS systems more critical are because, detecting, then controlling, and then particularly neutralizing a UAV is very, very difficult. And you need more than 6 senses to make sure that you can do all of this together and then bring the drone down. So as much as UAV is important, so is counter-UAS, anti-drone systems are important. Our UAV stance was, when we entered, we wanted to do UAVs for almost all the industries. And then we realized that the whole competition, the whole market deregularized, and we plugged out of it because, we wanted to make sure that we come to UAV market with disruptive technology where we've tied up with a company like Heaven to bring hydrogen powered drones. Now, when we are saying this, hydrogen powered drones are the future. Hydrogen powered drones are going to be, changing the way drones can be used in a particular conflict. Said that, our research on the drones platforms is great, and we are going to be the only company, the only Indian company to make drone cameras. Now, this also is a very path-breaking product in itself. So, what we are trying to
Seem to have lost the line. Let's try and get Amit back, because that was a very interesting conversation where he's talking about technological advancement for anti-drone systems, and that's where it's going to go, Neeraj. I mean, the spotlight on that entire tech and on drones. In all the conflicts we've seen, armies or air force not going into each other's territory necessarily. It's the drones doing all the work, except for, of course, B-2 going into Iran airspace and all of that. Yeah. But Operation Sindoor was all about drones.
Yeah, and therefore these anti-drone stuff should actually be very, very focused. So certainly watch out for that. And, by the way, in a conversation that we'll have with Chetan Seth in just moments from now, we will talk to him about defense and the opportunity presenting, because Amit Mahajan as well, even the realistic picture that he says that he's wanting to present is sounding fairly optimistic. Sorry, Amit, do you want to finish that point? We lost you in between.
Yeah, I'm extremely sorry that I got disconnected. But, the UAV, when we are getting hydrogen-powered drones, a drone platform which can stay in the sky for 12 hours and carry 20 plus kgs is a disruptive technology in itself. And drone cameras, when we are talking about a drone platform, sometimes drone cameras which are very, very high end, they are way more costlier than the platform itself. And there is nobody in the country bringing this technology to the platform manufacturers. So we are taking that initiative. We are being India's first drone camera manufacturers. And I feel with these two product lines, along with counter-UAS, very, very effective homegrown counter-UAS systems, I think we are well positioned to cater to all the new age warfare strategies that we want to deploy.
Just one last point, Amit, what is the kind of capex you're looking at to prep yourself for this new R&D that you will require, manufacturing capability you will require?
We are well stocked up when it comes to our capability, our infrastructure. All that we may require to do is just build some working spaces on our existing real estate, which we have in plenty. All the small capex that we might require, we can do it through our internal accruals as well. So there's no particular need for capex for us to justify not just coming year, but the next couple of years.
Okay, Amit, we'll leave it at that. Thank you so much for taking the time out and being with us. Really appreciate your time, and all the best with the realistic growth targets that you have. They are fairly impressive, I must say.
Thank you.
All right, that's Paras Defense and Space, and the stock has had a great rally. Now, to a very rare voice, and Tamanna, just before we get in Chetan Seth, just wanted to mark this, because in my history of doing this, and I don't know about you in your history as well, possibly, this is the first time that I'm talking to him on air. And even from the small Gujarati area from where I hail from, he carries immense reputations. Ghatkopar. Reputation precedes him, because I believe in some sense he's got his roots there. But just the fact that his notes are so sought after, that it's an absolute delight to get him on air today and talk to him. Chetan, great having you. Thank you so much for taking the time out. And I hope we didn't make you blush when we spoke all of that. But it's actually the truth.
Well, the truth is that I'm not from Gujarat. I'm actually a Punjabi, but that's fine.
No, but what I meant was that you, from where I hail from, which is Ghatkopar, there are a lot of people who apparently know you. They speak very highly of you, and which is the point I was making. Okay.
That's great to hear. Thank you so much.
Not at all. So Chetan, how do you view the current landscape? Simply because it's very, very volatile, and it's difficult to give a call today for something that might change in less than 24 hours, as we've seen overnight with the Iran-Israel possible ceasefire.
Well, that's absolutely correct. And actually, one of the concerns we have or challenges we face in our jobs is that our views could literally change every 2 weeks, and it's not easy to keep up with how the market narrative changes. So, the message I will convey is that I think investors should always have a disciplined risk reward. And what it means is that, let's say you feel that markets are becoming quite exuberant because a lot of positivity is in the price. Maybe look at your portfolio and see where you want to trim or cut risk. At the same time, let's say suddenly you see the narrative is turning quite negative because people are quite cautious or concerned about tariffs or some of these uncertainties. It's probably time to look at portfolios and maybe add risk. So actually our market view is that we think markets will be range bound because we still have a lot of uncertainty on the global front, specifically on the trade front.
Chetan, hi, Tamanna here. I'm very excited to talk to you, especially after Neeraj's setup for you. So, excited about this conversation. Just want to get a sense from you on how convinced you are on something which is now being called the taco trade. Simply because we're seeing various iterations of it, starting from tariffs to statements on geopolitical warfare in all sense. Is that going to continue to be the next big theme over the 3 to 4 years to come of the Trump administration? Is that now one signal that you've started looking at very seriously? That if he says something, it's likely it will reverse?
Well, you can't assume that if Trump says something, it will likely reverse. As I said, it's a huge function of market pricing, valuations, and positioning. And I'd say the time to be buying stocks was 8th or 9th of April when the Trump administration actually paused tariffs. I think that was the point of peak pessimism, at least from our perspective. Now, as you can see, whether it's India markets or Taiwan markets or Korean markets, even China markets, pretty much even US markets, all these markets have bounced back, and we are now above where we were on just one day before Liberation Day tariffs were announced. So I think markets are already pricing in so-called taco. Just to say that anything Trump says, we should just assume that it may not happen, I think it's a bit of a stretch. I think it's really a function of what's really priced in. And as far as geopolitical developments is concerned, I find it interesting that a couple of days ago, it seemed to me that the Trump administration will probably not get involved directly with Iran, but they did involved directly in Iran, which I think now in hindsight is actually positive news because it essentially means that at least that concern for market should no longer be there because this is almost like end of war.
That's exactly what I mean by the taco trade. On Friday, Trump says we won't do anything for 2 weeks. And over the weekend, he does. Then we see everything that's happened in the last 12 months. So that's what brings the uncertainty. Having said that, is it overtly optimistic for us here, and because we look at Indian markets day in and day out, to see India as a relative safe haven, Chetan? Far removed, not far removed, but relatively secure from everything that's impacting a large part of global markets?
Well, I think I do agree with that assessment. In fact, this is also our view. I do think that at least on the trade front, India has very less vulnerability to the trade policy outlook as regards US is concerned. India, always the biggest challenge for India equities or Indian economy has always been commodity prices and energy prices. And therefore, what was happening in Iran and Israel over the last, let's say, 72 hours or, a couple of weeks ago was clearly a risk factor. But now that's out of the equation. So we do feel that India looks okay. Of course, stocks just cannot grind higher and continue to go up in a straight line. There will be periods of consolidation, especially when, suddenly for regional investors or global investors, suddenly some other markets start becoming more interesting. So I think what India is right now seeing a little bit period of consolidation because, suddenly some opportunities in, let's say, Korea or Taiwan look interesting, but that does not mean that the investment case of India is broken. So we are quite positive, and I do feel that India looks quite well positioned, especially from a trade front.
Chetan, a lot of talk on two particular things. I would want your opinion on what it would mean for, let's say, flows into India. One, if indeed what Jeffrey Gundlach or some others say that the dollar will depreciate, they are looking at non-US assets. Does it mean any which ways money floating into maybe APAC as well, part one? And part two, if indeed Japan were to do something with rates and therefore the impact that it may have on the carry trade or what have you. So how do you see both of these things from a global fund flow event into markets like India?
Yeah, so I think this is again very topical point of discussion with our institutional investors as well. And the thing with US is that, US has the world's largest or the deepest markets, whether it's equity market and bond market. So what has happened in the last 10, 15 years since the post GFC environment, that a lot of money has gone to both equities as well as US bonds. Bonds were considered always safety trade. Equities was always, again, a huge attraction with the tech companies. So now that because of dollar weakness, because of this policy uncertainty, there is a question whether this US exceptionalism can last. So what is happening now is investors clearly are looking at other areas where some of these portfolio flows could move to. Essentially they're looking to reallocate. And the most important thing in my view as an equity strategist is that markets which have the depth and the breadth, especially equity markets, that's where the money will go. And on that aspect, I do feel once again, India ranks quite highly. And just to give you a couple of data points here, if you look at US market, US market today has, I think, around 1,800 stocks which trade more than 10 million a day. Now, why 10 million? Because that's fairly liquid for most global investors to invest in. If you go to China, which is A-share versus the H-shares, there are around 2,800 stocks, which is more than US, which you can find which trade more than $10 a day. Now, of course, China is unique, as we know, because of other challenges. And then we look at other markets. So Japan has around 400 stocks which trade more than $10. And then you have India around 260 stocks. So actually, if you look at the depth India has to offer, I think it is substantial for investors to look at India. I would also argue that the breadth is also there. These days across themes, you can find any sort of stocks or any sort of themes you want to play in India. So you were just talking about defense. There are obviously defense stocks. If you want payments, there are fintech stocks. If you want like delivery companies, there are delivery companies. So I think that way, I do feel that if there is reallocation of flows, which I feel on the margin is happening, India should be the beneficiary. Of course, subject to valuations, because one issue or challenge always with international investors as far as India is concerned is valuations. So if you get decent points of entry, I think you will probably see some bit of buying also pick up for India equities.
That was the next point I was coming to actually, Chetan, that how do you feel about the valuations picture as of this point? Because India is always seen as expensive, but then surprises on the upwards as well in terms of a longer time trend if you look at it. Currently, do you see enough opportunities where valuations are something which is palatable for you?
See, I think at the index level, again, given the bounce in Indian stocks, and which is also the case, by the way, with other markets, as I said, India is not alone where the bounce has occurred. So I think valuations are now once again trading on the higher side. If you just look at Nomura's house estimates, or let's say target for Nifty, I think we have just 4-5% upside from here until March 2026. But by the way, which is also consistent with our overall Asia ex-Japan views as well. So it's not starkly different. So, we were trading on the higher side, but, within the market, there are always some opportunities. So, for example, as a house, we do think that banks, financials is one sector where valuations are more palatable. And at the same time, I'd say that the earnings risk is also less because it's a very domestic focus sector. So there are always some opportunities. In fact, as a house, our view is actually take a very bottom-up view. Overall market may be more expensive, but there are always opportunities across sectors you can find. So there's always opportunities, across markets, and India is not different there.
Chetan, one question on that, and which is this, that with the quantum of paper having come in, plus the market cap market-wide having gone up, maybe the size and the liquidity of the non-Nifty 50 or the non-Nifty 100 stocks have also gone up. Are large global investors now open to investing beyond the top 100 names as well? Is that something that you're seeing?
Yes, I think that's again a fair comment. I haven't done a proper analysis on this, but anecdotally, I do feel, there are, beyond the top 50 or the top 100 stocks. I think our investors do look at the stocks which are in the, let's say, the mid cap territory. So again, this goes back to the point I said earlier, that because there is liquidity in these stocks, because maybe the local investors are active, the local mutual funds are active, it's relatively easier for foreign investors to actually also look at those mid cap stocks. And again, many of these stocks are, in sectors which are emerging. It could be defense, it could be, delivery companies. And areas or sectors which can structurally grow. So I think the short answer is yes. I think investors do look at, and I think I would just say that many investors have actually not fully participated. Foreign investors have not really participated because historically the focus for investors has always been large cap stocks, which, as you know, have actually underperformed, let's say, the small mid cap stocks. In fact, I would also share one more data point, is that if you look at the positioning of global EM investors, let's say top 50, top 55 emerging market funds, they're actually underweight on India. And this is underweight on India is not because they don't like the India story. It's just that they've not been able to fully capture this momentum, or they were probably positioned in large cap sectors or stocks which did not do as well as the overall market.
Interesting. Chetan Sheth talking about defense, delivery, mid caps, very, very constructive on India. Excellent conversation. Thank you so much, Chetan. Hope to have this opportunity again. That's the view coming in from the APAC equity strategist at Nomura. We'll need to wrap up the show, completely out of time, but we're ending India Market Open with markets in a great mood, over 1% up on all key indices and roaring to go. Huge corporate voice coming up next after this break. Watch out for that. You will hear Gautam Adani's live address at the Adani Enterprises AGM. All that and more on the other side.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so
elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
Sources in ED seeking explanation on Yuvraj Singh, Harbhajan Singh, on why they are endorsing such platforms which are banned by Government of India, and the mule account and Benami transaction, the kind of promotional payout being given to some of the media houses, the ad rates are between 50 crore to 100 crore.
What happens in reality is that under the garb of skill-based game, they end up promoting gambling only.
27,000 crore is what the tax evasion, the top popular betting apps are actually evading. Between January and March alone, they have seen 1.6 billion of traction.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Welcome to NDTV Profit. I am Mahima Vajrajani and you are watching Ask Profit. Well, let's take a quick check as to how the markets are doing right now. For sure, markets have bounced back from the kind of downtick that we saw in trade yesterday. Let's pull up the Nifty 50 as well as the Sensex and see how they're doing in trade today. Nifty 50 has held up the 1% gain since the start of the trade today, as well as the Sensex is up by about 1% odd. Let's also see how the Nifty Bank is doing. Nifty Bank as well is seeing gains of about 1% odd. The broader markets are seeing to be doing a tad bit lower as compared to how the benchmarks are doing, but the mid cap 150 is up by about 0.8% odd and the small cap 250 is up by about 0.9% odd. Let's pull up the Nifty 50 heat map and see what counters are buzzing in trade today. There you go. There's Adani Enterprises, that's up almost 2% odd. Adani Ports up 4%, Geofinance up 2.5%, L&T up 2.5% as well, Ultratech up 2.3%, Shriram Finance up 2%, M&M also up 2% odd. Wipro also doing well in trade today, has bounced back from yesterday, up by about 2% odd. There's JSW Steel, Tata Motors, SBI, Tata Steel, DRL as well as Titan, all up by about 1% odd. So heavyweights doing the work, and that's why we're seeing gains of about 1% odd in the Nifty. But some counters that are under pressure, there are hardly 5 counters in the Nifty 50 that are under pressure, which is NTPC down by about 2.5% odd, followed by ONGC. There's Bharat Electronics as well as IndusInd Bank, which is down by about 1% odd, and followed by Tata Consumer, which is almost flat in trade today. Let's also pull up the advanced decline ratio and see how the entire advanced decline ratio is panning out right now. Let's pull up this chart and see what's the ratio looking like. In terms of the overall markets, there you go. There's around 1900 odd advances versus that of 350 odd decline. So that's almost 6:1 ratio. In terms of sectoral indices as well, there's significant gains seen in PSU Bank, which was under pressure yesterday. PSU Bank is seeing gains of about 2%. Nifty Metal up around 1.5%, followed by Nifty IT seeing gains about 1.5% after seeing the kind of downtick of around 1% in trade yesterday. Nifty Finance, Nifty Consumption, as well as Nifty Bank and Nifty Realty and Nifty Pharma all up by 1%. Only Nifty Defense under pressure, down by about 2.3%. We saw a significant up move in trade yesterday, and now we're seeing profit booking in the Nifty Defense space and down by about 2.3%. Let's pull up the Nifty Defense counters and see what counters are seeing significant amount of profit booking. Jeffries had an interesting note today, though. There's BML, which is down 6%. There's Garden Reach down by 5%. Mishra Dhatu down by about 4%. For Astra Macro, Paris Defense, Bharat Dynamics, as well as Zen Technology. Also, almost all counters in the red when it comes to the Nifty Defense. Let's also pull up the BSE 500 and see what are the stocks that are buzzing at the broader end of the spectrum. There you go. There's JM Financial, which is up 9%. Swan Energy on the back of the new partnership with Balu Forge up 6%. Capri Global up 5%. Garvare Technical up 4%. KPIT, Mishra Dhatu, Bharat Dynamics, Oil India seeing pressure. Nykaa also down by about 3%. But with that, let's also welcome in our guest for the day. We're joined by Swati Hotkar of Nirmal Bang and Avinash Gorakshakar of Profit Mart Securities joining us now. A very good morning to both of you and welcome to NDTV Profit. The first question that I'm taking today is on IDFC First Bank. This is from Sanjay, who's writing. He's holding 300 odd shares of IDFC First Bank, bought at 786 a piece. And he's been holding this since the past 11 odd months and wants to know if he can continue holding this for the next 2 odd months or not. Swati, I'll come to you on this one. What would you reckon?
Yes, I will suggest to hold on because already the bank nifty is really doing very well and we are likely to witness some sort of a positive momentum into PSU as well as the private banks. So I believe one should definitely hold on this particular counter. Upside, it has a very good potential to reach up to 75 to 78 levels. So as long as the counter trades above 68 levels, which is the support provided by short-term moving averages, you can hold on the positions for a target of 75 to 78 levels on the high side.
All right, so that's with regards to where IDFC First Bank stands. A quick reminder to all the viewers who are watching this, you can either call us or WhatsApp us on the numbers that are flashing on your screen right now. All right, the next question then is on Protein eGov. This is also a short-term question. We don't have the name of the person, but he's holding 1,000 odd shares, bought at 970 a piece and wants to know if he can hold this for the next 3 to 6 odd months. Swati, on the charts, how is Protein eGov faring?
Yeah, my view is a little bit cautious because in this particular counter from the last 2.5 months, we are continuously facing a selling pressures from the higher levels of 1400. Now the counter is trading at 870 and it has given the cluster supports breakdown, which is the really cautious point past 3 days back as such. And I believe that such kind of a selling pressure is likely to be seen or extended at least towards to 850 to 840 levels. So up to that level, we might witness some sort of a selling pressure. But the interesting point is that the counter has entered into the oversold zone. It will try to maintain the support of at least 820 to 840 level. Up to that level, we can see the selling pressure. But beyond that levels, after that levels, we might witness some sort of a pullback or the reversal. So if you're looking for a 3 to 6 to 8 months duration of the holding period, then definitely you can hold on not to book the losses at the current market price. Let the stock find out the support levels at a downward, and then we can see some sort of a reversal which might take a counter towards to 940 to 1000 levels. So it's a hold from my end at the current levels.
Hold is the view on Protein eGov from a 3 to 6 months perspective. All right, the next question is from E. Venkataramanan, who's writing in from Bengaluru. He's holding 165 shares of Sun Pharma Advanced Research at an average price of 204 per share accumulated over 1 year and wants to know if he can continue to hold this for the next few odd months. Avinash, I'll come to you on this one. Sun Pharma Advanced Research is the counter. What's the view like?
No, I think Mahima, as far as Spark is concerned, this is a company which is largely into research activity, and I think the previous quarter numbers were not very encouraging. So I think, if the investor has a slightly medium term view, I think if he can hold on for the next 12 to 15 months, then I think he can definitely hope to get a decent risk reward, because this business is a very lopsided business. It's not a very secular kind of growth business. Whenever there is a new drug discovery, it becomes successful, then only I think the company makes a decent amount of margin. In case the experiment does not work out well, then the entire experiment losses have to be booked in the company's accounts. So I think, keeping a long term view, I think definitely he can look at it. But if he's looking at just few months, then I think it's better that he exits, because this is not going to give any immediate short term triggers. Only over the next, say, 12 to 15 months, he could expect a decent risk reward.
All right, so if you're a long-term holder, continue to hold. But if you're looking at this from a short-term perspective, exit the counter is the view coming in from Avinash. All right, the next question is from Somik, who's writing in from Kolkata. He's bought 10 odd shares of Trill, that is Transformers and Rectifiers India, at an average price of 506, and wants to know that if he can add more at the current levels. And this is from a 5-year horizon perspective. Avinash, I'll again come to you on this one. What's the outlook like on Trill?
No, I think he can definitely add at the current level, because I think the order book continues to be strong. The visibility is very solid, and I think power transformers, typically the business in which Trill is concerned, is definitely growing by leaps and bounds. In fact, we believe that the power generation sector and all ancillary kind of themes which are connected to the power generation sector are going to do well. So I think if he's got a 12 to 18 month kind of time frame, he should stay invested. He can use any decline in the stock price to add his positions here.
Okay, so that's with regards to where Trill stands. Our next question is from Chanchal Nandwana, who's writing in from Mumbai, and wants to know the outlook for Federal Bank from a next 3 to 4 months perspective. Swati, what are the charts indicating for Federal Bank, and what is the support and resistance that you're seeing?
See, the view is definitely positive. Downside, it has a very good support at around 200 levels provided by previous swing supports levels. Overall, the counter is doing really well, trading in the formations of the high top, high bottom, or we can say the upward rising channel. For a short term period of time, the immediate target is 215. Beyond that level, 225 levels can be seen, which is nearby its all-time high levels. So definitely one can hold their long positions by keeping a strict stop loss of a 200 for immediate target of 215, then 225 levels on high side.
All right, so that's with regards to where Federal Bank stands. Our next question is from Sanjay, who's writing it from Noida. He's bought 425 odd shares of Orient Cement at 240 and wants to know if he can add more at the current levels from a longer term perspective. And he's specifically written that this question is for Avinash. Avinash, what's the outlook like for Orient Cement?
No, I think you can definitely add on to the current level. I think Orient Cement definitely should do well in the current year, and hopefully the second half should be significantly better. I think the first half is normally a little softer kind of period because of the monsoon period. But I think Orient Cement is expanding its capacities, plus they've been getting better realizations in the market. So overall, I think, looking at the kind of infra, I think opportunity and the kind of government expenditure lined up.
I stand here today not as a chairman, but as a fellow citizen, humbled by the silent sacrifices of those who guard our borders, our families, and our dignity. This year, during Operation Sindoor, our brave men and women in uniform stood tall, not for fame, not for medals, but for duty. Their courage reminded us that peace is never free. It is earned. And that the freedom to dream, to build, and to lead stands firmly on the shoulder of those who protect. ऑपरेशन सिंदूर ने बता दिया कि भारत शांति की कीमत जानता है, मगर कोई आंख दिखाए तो उसको उसकी भाषा में जवाब देना भी जानता है. As we salute our armed forces, we also bow our heads in grief for the lives lost in the tragic crash of Air India Flight 171. So many dreams were silenced in an instant. So many families were forever changed. May we therefore carry both our gratitude and our grief as a reminder of what truly matters. My dear shareholders, the world around us has changed dramatically over the past 12 months. Over 60 nations went to the polls. Borders were redrawn. Alliances tested and economies shaken. In the Middle East, war continued to cast shadows on energy and logistics. In Europe, economic confidence stumbled. The United States had its own challenges. And yet, in the middle of all this noise, India stood apart and grew faster than any other major nation. This is not a coincidence. It is the result of a vision, of intent, of policy. I say this with a full conviction that the Indian government, both at the center and across the states, has laid down the foundation for a truly historic transformation. A transformation not of a few, but for an entire nation whose best chapters are just beginning. My dear shareholders, as a youngster, I saw my mother as my guiding star. I recall her often saying, "History does not remember sailors who sailed in a still waters. It remembers those who fought the wildest storms and yet returned home." कहते हैं, लहरों से डरकर नौका पार नहीं होती, हिम्मत करने वालों की कभी हार नहीं होती. And my dear shareholders, that is exactly what we have done. Even in the face of the storms, and relentless scrutiny, the Adani Group has never backed down. Instead, we proved that a true leadership is not built in sunshine. It is constructed in the fire of crisis. This was tested again last year when we faced allegations from the US Department of Justice and the ACC relating to Adani Green Energy. Despite all the noise, the facts are that no one from the Adani Group has been charged with violating the FCPA or conspiring to obstruct justice. We live in a world where negativity often echoes louder than the truth. And as we cooperate with the legal processes, let me also restate that our governance is of global standards and our compliance frameworks are non-negotiable. And our numbers tell their own story. Even in a year of turbulence, we saw record-breaking revenue, unprecedented growth, and historic profitability. We are a proof of a group that dares to dream beyond constraints and powered by a nation that breathes possibility into every tomorrow ahead of us. Therefore, I say, मंजिलें क्या है, रास्ता क्या है, हौसला हो तो फासला क्या है. My dear shareholders, in FY25, our numbers were strong across all our sectors. We did more than just scale. We created impact, inspired change, and most importantly, deepened our national commitment. Let me walk you through a few examples of our progress. Adani Power crossed 100 billion units of generations, a scale never before matched by any private sector company. It is now well on track to reach 31 gigawatt capacity by 2030. Adani Green is building world's largest renewable energy park right here in India and visible even from space. From Khavda to the world, our target of 50 gigawatt by 2030 is a proof that scale and sustainability can coexist. In fact, when we combine our thermal, renewable, and pump hydro generations capacities, we expect to have 100 gigawatt capacity by 2030. Adani Energy Solutions handles smart metering, high voltage links, and is keeping India's grid future ready. It secured close to 44,000 crores in a transmission order and is executing 13,600 crore worth of smart metering projects. Adani New Industries is building electrolyzers and solar modules at a global scale, aligned with India's green goals. It is on track to expand its solar module manufacturing lines and will have a 10 gigawatt integrated solar module manufacturing facility in place by the next financial year. Adani Ports handled a record 450 million metric ton of cargo and became the beating heart of India's trade. With marine, trucking, warehousing, and even freight forwarding, we are creating a transport utility for the future. And in line with the Honorable Prime Minister's Gati Shakti mission, our logistic assets are powering MSME exports and reducing friction to increase India's global competitiveness. Natural resources produce a record 47 million tons of coal and iron ore and is on track to achieve over 30% growth by FY26. We also pioneered India's first hydrogen-powered mining truck. 2.5 years ago, when we acquired Holcim's cement business in India, we had made a bold commitment to double our capacity to 140 million ton by FY27-28. Today, I am proud to share that we have already achieved 72% of that target and crossed the 100 million ton per annum milestones. The fact is, we don't just build business, we build India's capabilities. Adani Airports also had a massive year of growth. We handled a record 94 million passengers in FY25. We also completed the first test flight at the Greenfield Navi Mumbai International Airport. This airport will open later this year with an initial passenger capacity of 20 million of what will then become a 90 million passenger airport, giving us a 35% share of our India's airport passenger traffic. When it comes to Adani Defence, Operation Sindoor called and we delivered. Our drones became the eyes in the skies, as well as the swords of attack, and our anti-drone systems help protect our forces and citizens. As I have always believed, we don't operate in a safe zones. We operate where it matters, where India needs us the most. And the same applies to building the data centers India needs to stay competitive and secure. We have projects exceeding hundreds of megawatt in the various stages of constructions with the global hyperscalers, and have also launched gigawatt scale renewable powered data center campuses across multiple states. Coming to Adani Total Gas, this business now serves 1 million PNG customers and runs 3,400 EV charging stations across 22 states. This is real climate actions, not just climate talk. But perhaps our most transformative project is unfolding in Dharavi, Asia's largest slum, now being reimagined as India's most ambitious urban rehabilitation project. Our Dharavi social mission is uplifting youth through skilling, healthcare, and employment programs. And over 1 million people will move from a narrow lanes to our townships that will feature spacious layouts, dual toilets, open spaces, schools, hospitals, transit hubs, and parks. My dear shareholders, in terms of consolidated numbers at the group level, revenues grew by 7%, EBITDA by 8.2%, and our net debt to EBITDA ratio remained healthy at a 2.6x. Total revenues were 2,71,664 crores, and our adjusted EBITDA was 89,806 crores. And as I have stated in the past, our objective is not to just build businesses. It is to create new possibilities, not just to serve markets, but to serve our nation's destiny, not to chase valuations, but build the valuations brick by brick. And in this context, our capital investment across businesses is set to break all records. We anticipate an annual capex spend of $15 to $20 billion for the next 5 years. These are not just investment in our group, but investment in the possibilities for doing our part to build India's infrastructure. And before I start wrapping up, let me outline some of the programs that have me the most excited. Exactly 3 years ago, on my 60th birthday, my family pledged rupees 60,000 crore to redefine healthcare, education, and skill development in India. The Adani Healthcare temples are our first major steps, world-class, affordable, 1,000-bed campuses in Ahmedabad and Mumbai with medical colleges, research centers, and wellness spaces all integrated together. Mayo Clinic is our partner in guiding us to create a future-ready, AI-powered, patient-first healthcare ecosystems. In parallel, we have committed rupees 2,000 crores to build a world-class skill university and finishing school in Mundra, designed to empower youth from across India. Through schools of excellence, global certifications, and partnerships with leaders like ITES Singapore and IGCC, we aim to create an industry-ready workforce. And finally, let me end by talking about our participations at the Mahakumbh Mela. Over 650 million people came together, not as strangers, but as a one soul, one purpose, one heartbeat. Along with ISKCON, the Adani Group initiated the Mahaprasad Seva, offering free meals to lakhs of devotees. More than 5,000 of our employees volunteered, reflecting the values we cherish: at the Triveni Sangam. I had the honor of performing the sacred Ganga Aarti with my family. And for the Adani Group to be part of this event was one of the most moving days of my life. My dear shareholders, let me conclude by saying that our nation's future is not written in our policy documents. It is written in the risk its entrepreneurs dare to take. We are not laying concrete. We are laying convictions, highways that carry ambition, ports that ship hope, and grids that light our futures. And history should remember us not for the size of our balance sheets, but for the strength of our backbone. Not for the markets we entered, but for the storms we handled and emerged stronger. For it is easy to lead in sunshine, but true leadership is forged in the face of crisis. कई मोड़ आए, कई तूफान गुजरे, पर कारवां रुका नहीं क्योंकि आप साथ थे. I promise you that the legacy of the Adani Group will not be reflected in the height of the towers it builds, but in the height of the beliefs we execute on. That is our truth. That is our promise. Thank you for being on this journey with us. The greatest chapters of our story are still ahead. Jai Hind. Bharat Mata ki Jai.
That's huge. That is a biggie. It's out of there.
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर.
Sources in ED seeking explanation on Yuvraj Singh, Harbhajan Singh, on why they are endorsing such platforms which are banned by Government of India, and the mule account and Benami transaction, the kind of promotional payout being given to some of the media houses, the ad rates are between 50 crore to 100 crore.
What happens in reality is that under the garb of skill-based game, they end up promoting gambling only.
27,000 crore is what the tax evasion, the top popular betting apps are actually evading. Between January and March alone, they have seen 1.6 billion of traction.
imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in?
Welcome back. You're watching Ask Profit, a show that gets all your stock related queries answered. For viewers who are just tuning in, you can either call us or WhatsApp us. Now, let's take a quick look as to how the markets are also doing before we go on to the queries. The Nifty 50 trading with that good range of 200 odd points, up 1 odd percent. The Nifty Bank is also up by about 1 odd percent. Mid cap 150 up by about 0.8 odd percent, and small cap 250 is recovering in fact, and soaring higher by up by about 1 odd percent as well. The overall markets are also seeing gains of about 1 odd percent. Nifty Defense is the top losing sector today, down by about 2.3 odd percent, and seeing profit bookings from the gains it saw yesterday. So that's with regards to where the markets stand. We're also joined by Rajesh Bhosle from Angel One, who's joining us now. Rajesh, a very good morning to you and welcome to NDTV Profit. The next question is from Prasannan, who's writing from Hyderabad. He's holding Orchid Pharma stocks, and he's bought this 2 days ago and wants a short-term target on this one, considering the current pharma situation. But since it's a short-term question, Rajesh, I'll take this up with you. What are the charts indicating for Orchid Pharma?
Good morning. And if we see the charts of Orchid Pharma, it's an underperforming stock, continuously trading around its 52-week low. So bias would be that this stock can continue to underperform. So one should look to exit positions on any bounce. So what we are seeing since last 1 year is that any bounce towards its 50 EMA is getting sold into. So from here onwards, if there is any bounce towards 750 or 755, that should be an opportunity to exit position. From pharma space, we have a positive bias on Glenmark Pharma. The stock has shown strong traction since last couple of months and continues to look positive. So switching from Orchid Pharma, he can switch to Glenmark Pharma. Glenmark Pharma looks positive, and possibly from here onwards, it can move towards 1842, 1850 levels.
Interesting. Switch to Glenmark Pharma from Orchid Pharma is the view coming in from Rajesh. Next question is from Kanan, who's writing in from Kerala, and his question is on KPIT Tech. He's holding 93 odd shares at an average price of 1310 and wants to know if he can add more at the current levels to average out or not for the next 1 to 2 odd years. Avinash, I'll come to you on this one. We had an update on this company yesterday, and it said that it's buying 100% in Caresoft's global engineering business. What's the outlook like when it comes to KPIT Tech? Should he continue to hold and add more at the current levels?
Yeah, I think MyMy can continue to hold within the mid-cap IT company space. KPIT is definitely a promising play. Our sense is that not only is the order book quite encouraging, but I think execution has also been quite solid. My sense is that you could see a little bit of more order book trajectory in the second half of this financial year. And I think if he wants to add, I think he should probably wait for a slight, deeper to moderate correction, and that could possibly give him a better risk reward. But I think definitely 12 to 18 months, if he can hold on, he could definitely expect a decent risk reward going forward.
Continue to hold for the next 12 to 8 months to see a decent reward on KPIT Tech. All right, the next question is from Harshad, who's writing it from Mumbai, saying that he's a senior citizen and he's bought 7,500 odd shares of Suzlon Energy at 68 apiece from a longer term perspective and wants an outlook on this counter. Avinash, I'll again stick with you for this one. Suzlon Energy, what's the outlook like?
I think, currently the price at which he has entered, I think he needs to take at least a 2-year view, because I think wind energy market is growing rapidly. Suzlon is a market leader here. They have a very large order book, which I think continues to give very strong revenue visibility. So I think things stand to be quite positive. But I think in the very near term, there could be some selling pressure because a lot of old investors who have entered earlier may book out, a little bit of profits. But I think recently the company saw a lot of new institutional investors have entered the stock. My sense is that 2 years is definitely a good amount of time frame where he can think of making a decent alpha, and probably he can stay invested here.
Yes. Okay, so that's with regards to where Suzlon Energy stands. Our next caller, Kiran, is calling in from Hyderabad. Kiran, a very good morning to you. How can we help you today?
Good morning, ma'am. So I would like to invest rupees 4 lakh rupees.
Right.
2 lakhs in Adani Enterprises and 2 lakhs in Tube Investment. Are these the right levels to enter? And I would like to know from both the analysts some stock recommendations from current levels for the short term, ma'am.
Okay, got your question, Kiran. I'll take this up with Rajesh. Rajesh, what he's saying is he's got 4 lakhs to invest in and wants to invest 2 lakh in Adani Enterprises and 2 lakh in Tube Investments. Do you think these are the right levels to make an entry into these two counters?
So if we see the charts of Adani Enterprises, the stock has not participated in the current broader uptrend. But overall, if we see chart structure, it is now started moving in a higher top, higher bottom formation. And also if we see the May month, there was a strong bullish gap left. So we expect from here onwards there can be a strong traction possibly towards 2750 to 2800 in Adani Enterprises, and strong support is placed around 2350 to 2400 levels. So yes, positive looking ahead, and dips can be bought. The second stock is Tube Investment, currently trading at 793. This stock is already in an uptrend, and we have a positive bias expecting stock to move towards the 900 levels. And on the downside, if we see higher bottom structure is formed around 760 to 750 levels. So in case any dip is there, because last 3-4 sessions the prices have corrected, and if in case there is a dip towards 760 to 750, that would be a great buying opportunity in Tube Investment.
Positive on both the counters with respect to where charts are concerned. Standard disclaimer, NDTV is a part of the Adani group of companies, so is Adani Enterprises. All right, the next question is from Amit Kumar, who's writing in from Gurgaon. He wants a view on Tata Motors. He's holding 30,000 odd units of Tata Motors bought at 708 a piece. Wants to know if he can continue to hold the counter or not. He's sitting on a loss of 7 lakh rupees right now. Avinash, what do you suggest? The stock has recovered from its lows, of course, but do you recommend him to continue to hold Tata Motors from a longer term perspective?
Yeah, I think Mahima, Tata Motors should be held on. I think you could see a strong volume recovery from September onwards because I think with a good monsoon, our expectation is that the commercial vehicle sector, especially for the domestic market, should give good traction. Plus, Tata Motors management has clearly indicated that by this December, the demerger of the JLR business and the domestic business is going to happen. So that itself is also going to be a big re-rating trigger for the stock. My sense is that with a good GDP growth, with good infrastructure spending by the government, Tata Motors looks well positioned, and I think downside seems to be protected. So I think definitely one can hold on.
Okay, hold on Tata Motors from a longer term perspective is the view coming in from Avinash. All right, our next caller, Naveen, is calling in from Faridabad. Naveen, a very good morning to you. I believe you have a question on First Cry.
Yes, good morning.
Good morning.
Yes, I got this First Cry shares during the IPO, one lot.
Okay.
And there is like 27% loss. I thought that it is like would be a play on both e-commerce and then growing demand across India.
Right.
Through the like physical and digital both infrastructure.
Right.
But I think so the earnings are not delivering. So shall I hold this one or shall I transfer to any other stock or something?
Okay, understood your point. Avinash, I'll again come to you on this one. Q4 overall, it was in line with what the street was expecting, the kind of growth that Brainbees saw. But we've seen that overall the counter has done well in Q4. What's the sense like? Can he continue to hold? He's holding it since the IPO.
No, I think the investor is right in saying that the company has underperformed significantly. I think there were very high expectations from First Cry, considering its brand equity, its geographical reach, its product categories. But I think, the investors have been let down. So I think, you could probably wait for another 3 to 6 months. I think everything depends on how the company puts out its performance. And as you rightly pointed out, Q4 has seen a good recovery. We expect that, at least in the first half of FY26, things should get little better. So till that time, I think one should hold on. I think you would take a fresh review once the first half numbers are out.
All right, so hold is the view on Brainbees from a longer term perspective. The next question is from Mufaddal Ansari, who's writing from Raipur, Chhattisgarh. He's holding Lloyd's Engineering shares, bought at 58 a piece, and he's got 511 in quantity and wants to know if we can continue to hold this from a longer term perspective. Avinash, I'll again come to you on this one. Lloyd's Engineering, what's the view like?
No, I think he should hold on. See, company has got a very strong order book of almost 1,500 to 2,000 crores. And I think they are in the, engineering business. They have a very large, kind of list of marquee clients. And I think after the rights issue, the stock is stabilized. My sense is that if the investor can hold on for the next 6 to 12 months, he could expect a decent risk reward. I think he's still very near to his cost price, but I think if he can hold on for the next 8 to 12 months, he could expect a decent risk reward.
Okay. Hold on to the next 6 to 8 months for seeing decent returns is the view coming in on Lloyd's Engineering. All right, our next caller, Sudhir, is calling in from NCR, Delhi. Sudhir, a very good morning to you. How can we help you today?
Yeah, good morning. I have 1,200 shares of ACC Limited, averaged at a price of 1885. I picked it up among its cement peers because it came out to be one of the most attractively placed in terms of price to earnings, and it's a profit-making company with no debt.
Right.
So I just want to know the view on this. Should I hold it for another 1 year?
Okay.
Because right now I am at a little loss, but not much. But I can hold it for a period of 1 year.
Okay, so they got your question, and since you've studied this company fundamentally, Avinash is sitting on a loss of 28,000 rupees right now. But do you think he should continue to hold for a year to recover his losses and probably make some profits?
Yeah, I think my sense is I think he needs to give in some more time here. I think ACC is now Adani Group company, and I think clearly in terms of volume, in terms of the opportunity for infrastructure, I think cement is going to be a very important building block. I think, if we can give in at least say 12 to 15 months and wait for the FY26 numbers to be out, definitely pricing is improving, volumes are going up. So I think he needs to give in a little more time before he, takes a decent risk reward. So I think better to hold and not panic now.
All right, standard disclaimer here again, the NDTV is a part of the Adani group of companies. With that, Avinash and Rajesh, we're completely out of time on this edition of Ask Profit. Thank you so much for joining in and giving us all of those insights. But viewers, stay tuned in. Know your company on the other side.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
Sources in ED seeking explanation on Yuvraj Singh, Harbhajan Singh, on why they are endorsing such platforms which are banned by Government of India, and the mule account and Benami transaction, the kind of promotional payout being given to some of the media houses, the ad rates are between 50 crore to 100 crore.
What happens in reality is that under the garb of skill-based game, they end up promoting gambling only.
27,000 crore is what the tax evasion, the top popular betting apps are actually evading. Between January and March alone, they have seen 1.6 billion of traction.
Hello and welcome. You're watching KYC here on NDTV Profit. I'm Harsh Saita. Today is a special one because it's a company which stands out in the global marketplace, and likely a company which a lot of other companies export facing would want to aspire to be. Quietly doing R&D on one side and on the other side trying to deploy capital very efficiently. We have one of those, Garware Technical Fibers. We're going to talk about this one today, and what I want to know first off is they have a decent market share, but can growth continue to go up at a healthy clip? They have also made an acquisition today in particular, and that's why you're seeing some zing on the stock, but can they grow materially over the next 3, 4, 5 years? And what will be the direction of that growth? Can they capture market share? Will value-added products aid the market share and expand or aid margins in any fashion, or will the margin number be 21%? Can they continue to gain market share in some of the other verticals that they have diversified to? For example, sports. For example, they manufacture nets for football goals as well. And therefore, an interesting play in that sense, where they continue to diversify in very healthy fashion. Margins, pricing, competition, of course, all of those is what we will ask management, and whether consolidation in the customer side in the industry, at least in the fishing industry, in the farming industry, which Garware operates in, or Garware's customers operate in, whether consolidation there could be a risk. How much of an impact do local taxes play on Garware's numbers, given that it's export facing? How should one look at profitability and growth there. They've also made an acquisition. How does this acquisition add value to the company, both in terms of top line as well as margins? We'll quiz management on all of that and more. And that will give us, hopefully, the full picture with regard to a Garware. But first off, trying to understand what the company does in Know Your Company today. Let's start off. It was founded in 1976 as Garware Wall Ropes. It was rebranded as Garware Technical Fibers only in 2018. It listed on the NSE and the BSE in 2002, and it's a Pune-based company. In terms of business segments, and this one can go on for a while, I'm going to start off with fisheries. All right, so as those graphics play out, there you go. So fisheries. Now, what does it do? Fully assembled trawls, purse nets, gill nets, dole nets. These are all different type of fishing nets which Garware makes, and a lot of the R&D is also done in-house. The production, of course, done in-house as well. Then they're into aquaculture. Now, what is aquaculture? It is basically growing or farming of fish, right? So you'll have these very large nets in the open ocean, and you'll have fish seeds which are put inside those nets, very large nets, and thereafter fishes will grow within those nets, and thereafter they are used for the purpose of either fish feed or feeding the world. And therefore that's aquaculture. They do cage nets, predator protection nets, and anti-bird nets. Now those in itself are quite self-explanatory in terms of their terminology. Then let's talk about shipping. You have mooring and tow ropes. What does that do? You would have maybe at some point seen a ship towing another boat or a ship. A lot of that is done through a tow rope, and therefore you have towing ropes, which Garware sells as one of the many products that it does within the shipping industry. Also anchor ropes, a lot of those are also made by Garware. Let's talk a little bit about sports. So tennis nets, volleyball nets, basketball nets, ski nets, cricket nets. You also have football goal nets, goal posts, the nets between the two goal posts. All of those are made by this company. Agriculture, they have anti-bird nets, anti-hail nets and shade nets, sericulture nets, floriculture nets. So all of those also is what they cater to. And last one, and most interestingly, geosynthesis. And this took me some time to understand. So basically it's to ensure that, for example, the soil does not erode. So the rope sticks to the soil and stops erosion of soil, erosion or causing landslides also. We would have seen some of these if you have been to hilly areas. There are large ropes across mountains which have been put, not only in the Western Ghats but also north. And some of those ropes is what Garware manufactures. So rockfall protection, landslide protection, a lot of that is also what Garware does. Again, very niche and very interesting as well while I was reading it. Let's talk a little bit about market share, because it has a dominant market share in the domestic fishing industry. 50 to 60% is the reported market share. And even within global fishing, it has nearly a 20% market share in global fishing, around 17% the last count. 40% in the salmon industry is what it has. Again, salmon industry is a lot to do with aquaculture, and aquaculture is the other place where this one is used. So again, large market share in some of these. But the question really is, can they grow market share in the other domains that they ventured into? And how are they going to drive that? Because that will add not only to top line, but because it's value added product, it will also add to margins. And I would want to see as to how they play that and what competition is doing in that space. They have 2 manufacturing facilities, 27 patents, and they have a presence in 75 plus countries. Now, I'm not surprised by any of that, because they have a large global presence and a large global demand as well. Beg your pardon. So, so all of that about Garware. Now, I want to also talk about the latest acquisition, because that is the key as to why the stock is moving today, as well as might hold the key on the future outlook of the business as well. What they have bought in terms of their latest acquisition is Offshore and Troll Supply, which is a synthetic fiber rope company. Its factory is situated in Norway, and it's one of the modern sites in this line of business within the European geography. You're also seeing it as a leading manufacturer in premium synthetic fiber ropes, and the application is for offshore oil and gas in Norway. Now, it specializes in production, design, engineering, and within the high-tech fiber ropes business, and it's going to likely help the company achieve growth plans in the value-added rope segment in the longer run. I would want to see very interestingly how and where this takes the company. The acquisition is going to be completed by the 30th of September, and the cost of acquisition is 105 crores. It's an all-cash deal, which the company is going to shell out. So this one's going to be a very, very interesting play with regard to this company. But let's talk about the key metrics now, and we'll try and break down all of those. We'll look at income statement, balance sheet, cash flow, and return ratios to start off. Thereafter, we'll look at shareholding, street cred, valuations, and street coverage. We'll look at all of those and we'll sum it up for you, and thereafter speak to management as well. It's going to be an interesting discussion. I can't wait. Let me quickly start off with the income statement. In terms of how this one has evolved, it's just about less than a double-digit growth on the top line, so more to be desired there. But margin expansion has aided the company. Margins have gone up from 19 to 21%, and therefore profitability is up roughly 12% on a YOY basis over the last 3-year CAGR. So that's how it's played out. We'll give this a neutral because more to be desired on growth, right? I mean, this is a sub 10,000 crore market cap company. It wanted to grow faster, but look at the efficiency with which the margins have evolved. FY23, it dipped a bit, but thereafter we've seen a bounce back with regard to margins. Let's talk about the balance sheet now. In terms of equity capital, you're seeing that sharp expansion in equity capital, and that's because of a bonus issue which it had done. But outside of that, you look at the way book value has moved. It's moved on a increasing trajectory. The borrowing number has come down, which is a positive, and I'm excluding these liabilities here again. And you have your cash and bank balances, which have also inched upwards. And I want to make a small correction here in terms of the cash and bank balance. If you look at the cash and bank balance for FY25, it's at 51 crore. I beg your pardon. So they do have a decent amount of cash bank balance at the end of FY25. They also have a decent FY24 cash balance of around 174 crore, and FY23 was at 46 crore. So the cash bank balances have evolved quite well. There you go. So some of those numbers playing out on your screen. So that's on the balance sheet. We'll give this a thumbs up. Low debt, good cash levels, and efficient management. They don't keep cash levels too high. I want to talk a little bit about the way in which your return ratios have played out, but before that, the cash flow. Now, the cash flow, again, it's fascinating. You've started to see receivables inch up where the cash flow is concerned. So you have your free cash or your cash flow from operations at 189, 219 and 195 crore. That's how your cash flow from operations has played out. Now you look at profit after tax. Sorry, that's the EBITDA number that you're seeing there. Again, there's an error there. EBITDA number seen there. And then you have your, again, your EBITDA to cash flow from operations, right? And that EBITDA to cash flow from operations number is slightly on the weaker side. Let me put it out there. CFO to EBITDA stands at 83% for FY23, 81% for FY24, and 61% for FY25. If you can see the way in which that has come off, it's because the receivables have inched higher, and I'll explain it to you. Your receivables number went up by 25 crore in FY24, but nearly by 70 crore in FY25. So that's a large increase on a cash flow from operations of just about 200 crore. And that's what's really pulling down your cash flow from operations. The other piece that's played out is that your payables number has also inched up, but just a little bit. So your working capital changes number has gone up by 51 crore in FY25. And that is essentially what's pulling down the cash flow from operating activity number from that 80% to the 60% number. All right, so that's the long and short with regard to cash flow. We've given this a neutral. We'll want to see more. Again, the net cash flow number is negative over there. If you see the 138 crore negative number, right? The other numbers are okay, but then the negative number of 138 crore, that one is really signaling that there has been a buyback which they've done, and which is why they've used some of that cash in the buyback, which is what has created that dent with regard to net cash flow. But again, the more relevant number here is the cash flow from operations, which is what you really want to understand, right? So that is the long and short with regard to cash flow. Now let's look at return ratios. Again, it's an interesting chart with regard to return ratios. They've been very healthy and this really stands out among all the companies that we've done. Just look at the way in which ROCE has been 18.5% to maybe 16%, but very, very stable over a 5-year period. Look at the ROE numbers as well, around 17.5 to 20%. Very few companies doing this on a recurring basis, extremely efficient use of cash flow as well as internal accruals is what this company has really charted for itself, and that is evident from the ROCE and ROE numbers. Let's look at shareholding now. And when I look at shareholding, there you go, it's healthy. You've got decent promoter holding, you've got decent public shareholding as well. Public to promoter is not too skewed. You have around 5 to 10% cumulative which FIs and DIs hold. It's a very small company, very closely held. 9,000 crore in market cap, out of which 5,400 crore is held by promoters alone, 61%. And therefore, what you want to also understand is FIs, DIs may be discouraged from playing this game too much, because you have very little room in terms of free float to actually buy and acquire a large amount in a company which has a free float of only 3,500 crore. That's a thumbs up for us. There's no problem there. Promoters have a very, very healthy holding. Let's talk about street cred now. And here also we've seen very healthy numbers. While year to date the stock has not done much, but you look at the 1-year returns, it's healthy at 15%, and the 5-year returns is a near 3.5 bagger. So no complaints per se from investors. Now let's talk about valuations, and this is where it starts to get tricky, right? Because you have very few companies in a space like this, and therefore we have to rely on the very few analysts who actually cover and track this stock. Let's talk about valuations though. The EPS for FY25 was around 23 rupees, expected to go to 27 in FY26. FY27 is on your screen as well, 31. Your price to earnings should shrink towards the 29 times number, which is largely fair, which is largely in line with the way the 5-year valuation also has looked, and therefore we'll give this an absolute neutral, because valuations don't look extremely lucrative, at least at this point. Let's talk about analyst recommendations now. Very few analysts cover it. I did mention it, just 2, and therefore we've given this a thumbs down. No fault of the company. It's a smaller company relatively, and the upside is 10%. Some of that would have obviously gotten evaporated with today's gains as well. So again, something that you want to keep in mind. But nonetheless, that really stacks up all of the parameters that we've just covered, and that gives a rating for Garware Tech at 5.5 out of 8. Let's bring in the management now. Let's speak to Mr. Vayu Garware, who's standing by, Chairman and Managing Director at Garware Technical Fibers. Thank you, sir, so much for joining us on this very critical day. You've made an acquisition as well. Let me start off with that as the cue. What does this acquisition add, one, to the company in terms of R&D and in terms of specific knowledge to the company? And 2, how do you see the top line or how do you see the contribution to the top line from this acquisition, both top line and margins? Give us that perspective, sir.
Great. Thank you for having me on the show. Yes, it's been an important, yesterday we actually announced this acquisition, the signing of the definitive agreement. And we have entered our 50th year this financial year. So it's an important milestone in the 50th year. overall, as our company is very focused on our mission, which is to deliver value-added, innovative solutions for our customers, being primarily B2B customers. We have done this with a lot of focus over the last decade, particularly on our netting side of the business, where we do it in aquaculture, fishing, geosynthetics, and other areas. And that has allowed, over the last 10 years or so, our mix of value add to commodity to change from almost 30% value add, 70% commodity to now 80% value add and about 20% commodity. The last 20% is where this acquisition comes into play. The last 20% of what we would normally call non-value add products, it tends to be, has been around the rope area, where we have really not been able to focus enough. And the last couple of years, we've decided to focus on this and bring this segment of our business also up. So we have carved out a separate team in our company, and we have really started to focus, and it's paying good dividends even organically. But this company, OTS in Norway, is one of the very advanced players in this field. They are at the leading edge of technology in this area, as well as have very strong customers across Norway and Europe in this space. So actually, it fits our strategy very well in this 50th year. The values of the company are very similar to ours. The strategic intent and fit is very good. And actually, the team there is also excellent. So we're very happy with this acquisition, and we think it can add a lot of value to both sides.
Sir, talk to us about the cost of this. Around 105 odd crores, if I'm not wrong, is what you pay out. How would you view that in terms of relative valuations?
We think it's a fair value on both sides. It is finally for us, it will come out of our internal accruals. You know, we have been generating a lot of cash, and we are quite cash positive. Obviously, that pulls down our overall ROCE, since our investment strategy on treasuries is very risk averse, and we're very careful. Our ROIC, for example, is in close to 50%. So we want to deploy the money better, but our overarching strategy has been that we need to have the right strategic fit for this kind of acquisition, and which we have now found. So the valuation is a fair valuation on both sides. It will be for us finally EPS positive as well as ROCE positive. So overall, I think it's the right way to go. In terms of potential benefits for both sides, you know, we have already been in Norway for many years. We have a strong customer base there, which is not overlapping with OTS. So we have the potential to bring some of OTS's products to our customers. We definitely have the potential to bring some of our products to OTS's customers, and then bring OTS's technology to other potential markets in Southeast Asia, including India. Such products today are still imported into India also, because the technical capabilities and the machinery is not available here. So with this, we'll even be able to service the local market, which we have not been able to really do so far.
Mr. Garware, give us the texture. You said that 80-20 value added versus commodity core. How quickly does that shift given this acquisition now? You suggested that this acquisition will accentuate the shift. How much does it shift? What are the goals like?
That's a little bit difficult to define today because this has just happened. So we will be working on it. We have already seen the shift even organically. So it's more a matter of focus. We have the core capabilities, the core machinery, and OTS certainly builds much, much further on that. So over the next 3 to 5 years, we will be looking at a significant shift in this portfolio.
So talk to us about the 1-year growth path, which is FY26, given this acquisition, and then talk to us about the 3-year growth path. Do you see potential double-digit growth on a CAGR basis over the next 3 years or not?
Definitely on the bottom line, yes. So we do look to grow bottom line in the 15 to 20% range per year.
Okay.
I will be a little bit cautious on top line. It tends to have a lot of different factors. So, for example, freight rate changes or raw material changes, these are both up and down factors. So we will expect top line to be in maybe low double digits or high single digits, and we'll certainly be looking to grow profit at a much faster rate than that. And that's our key focus.
15 to 20% PAT growth, will that translate to cash profit?
Yes. So as you would see, normally our conversion of operating profit to cash is quite high.
Yes.
I did see that you were mentioning about last year, and we did have some. This is primarily because of some of the movement of material in Norway. We have shifted our billing from India to local Norway. So it moves then to Norway and is then locally billed from there. So a lot of that billing has happened towards the end of the year, and obviously that little bit of receivables collection happens in the beginning of the next year. So this is almost a one-time cycle that will get adjusted. But we do generate quite a lot of cash. Obviously, if our return on invested capital is in the range of 50%, we will be generating a lot of cash. So we do see that to continue.
So I fully appreciate you're extremely cash prudent, and from whatever I have done in terms of reading, you are that, and you need to give you that credit. I want to talk about certain risks in the business. One is you have the risk of consolidation within your customer base, within the farmer base, that a larger cohort of customers that you have. Is that a real risk? Give us some perspective on that.
Sure. Our customer concentration is actually quite low. So we are fortunate in that sense. There are 2-3 things that we're fortunate with. One is about 70% of our revenue comes from customers who finally produce food, be it aquaculture, fishing, or agriculture. So we tend to get a little bit insulated from economic cycles, both ways, up and down. So that's one good thing. Our customer concentration also is relatively low because we're spread over so many countries and many, many customers. Consolidation for us actually is not a concern at the moment. It's a good thing. We are with all of the larger aquaculture companies around the world. So Movi, which is probably the largest globally, customers like Cermaq, which exist it's owned by Mitsubishi. So these kinds of companies are the ones that are generally acquiring, and they have contracts with us. So the acquired companies would also generally will become, part of our customer base, which is great. So we are not very concerned with consolidation at the end user level because we already have good market shares, and we are with the major companies who are generally the acquiring companies actually.
Do local taxes therefore impact the way in which customers buy from you? Does that make an impact?
There was an issue in Norway where the Norwegian government imposed a resource tax on our end user customers for use of the Norwegian waters. That is very much a local Norwegian government tax issue. It certainly was not, liked by everyone, obviously, but I think from where the initial tax was intended and where it ended, things are very much accepted now and back to normal, even for the last year and a half or so. So there was a small pause in capex investments, etc., but that's well past, and it's very much now part of the system. So we don't see that as a challenge anymore.
So you've done ROEs of very stable, 18 to 20 odd %. Is there room for upside?
Certainly, even last year, in fact, our return on capital employed increased further, particularly if you remove treasury, and our return on invested capital has increased quite significantly, almost 4%. So we do see further room, and we will continue to focus on this. Within our company, our number one metric is return on capital employed. So, the entire team is aligned towards this. And this is something now we'll also be taking to this Norwegian company, and they're very keen and positive to work on further improvements of their ROC as well.
Excellent. Thank you so much, Mr. Garware. This has been insightful, this has been concise, and you've been very precise with your replies. Thank you.
Thank you so much. Thank you.
Okay, out of time, in fact, on this edition of KYC. Thank you for tuning in. From all of us who put the show together, really appreciate all the support we're getting. Thanks for tuning in.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make in our categories that we have been supplying to our defense forces some of the best platforms in the world.
Sources in ED seeking explanation on Yuvraj Singh, Harbhajan Singh, on why they are endorsing such platforms which are banned by Government of India, and the mule account and Benami transaction, the kind of promotional payout being given to some of the media houses, the ad rates are between 50 crore to 100 crore.
What happens in reality is that under the garb of skill-based game, they end up promoting gambling only.
27,000 crore is what the tax evasion, the top popular betting apps are actually evading. Between January and March alone, they have seen 1.6 billion of traction.
The markets move fast.
And so should your portfolio.
Nifty managed to scale 25,200 levels, Sensex jumps 1%, Nifty PSU Bank and Metals lead gains, autos also in the fast lane. And it's the defense rally that seems to be cooling off at this point, with de-escalation in the Iran-Israel conflict being penciled in, HAL and data patterns shed over 2%. Meanwhile, Tata Technologies echoes KPIT Tech's mid-quarter update, and NDTV Profit exclusive lined up on the show. And beating all odds to generate record-breaking revenue and playing a crucial role with their drones in Operation Sindoor, Adani Group Chairman Gautam Adani says the group is all set to carve new paths ahead with an annual capex spend of $15 to $20 billion for the next 5 years. Meanwhile, it's also a blockbuster week for the primary market. Kalpataru, Ellen Berry, as well as Industrial Globe Civil IPOs open for subscription. Hi there, you're watching Markets at 12 with me, Shreyansi Singh, and this is the show where we get you a highlight with everything that is happening with the markets. So let's do just that before we get a little stock specific and sector specific. You do have Sensex as well as the Nifty jumping nearly 1% higher. For the Nifty, you've had those, in fact, you've had the Nifty clawing back to those 25,200 levels. Over a 1,000 point gain coming in as far as the Sensex is also concerned. When you take a look at the sectoral picture as well, that's also looking quite good, especially for the metal sector. autos as well in the fast lane. So that's something that you're seeing emerge as far as the sectors then are concerned. So largely that's the kind of picture that you have. When you take a look at the list of top gainers from within the Nifty 50 pack, there's Adani Ports that's leading gains there within this particular pack. Jio Financial Services, Ultratech Cements, Tata Steel, Adani Enterprises as well, and M&M. So those are some of your counters that you should be looking at. As far as some of those stocks from within the Nifty 50 pack are concerned, but tell you what, Adani Group founder and chairman Gautam Adani addressed investors at the annual general meeting held today while outlining the group's achievements in the past fiscal. Also assured investors that though the road had been rough, the group, in fact, has emerged victorious through all its trials. Let's go across and listen in.
In the face of the storms and relentless scrutiny, the Adani Group has never backed down. Instead, we proved that a true leadership is not built in sunshine. It is constructed in the fire of crisis. This was tested again last year when we faced allegations from the US Department of Justice and the ACC relating to Adani Green Energy. Despite all the noise, the facts are that no one from the Adani Group has been charged with violating the FCPA or conspiring to obstruct justice.
All right, then key commentary coming in from the 37th annual general meeting. Let's keep getting you all of that commentary then, from Trump's tariffs to economic slowdowns of various large economies. The past year has been one of turbulence as well as uncertainty. And despite all these headwinds, the Adani Group created history, said Chairman Gautam Adani. Let's go across and listen in.
Our governance is of global standards, and our compliance frameworks are non-negotiable. And our numbers tell their own story. Even in a year of turbulence, we saw record-breaking revenue, unprecedented growth, and historic profitability. We are a proof of a group that dares to dream beyond constraints and powered by a nation that breathes possibility into every tomorrow ahead of us.
All right, then let's keep it going with important commentary coming in. Then in fact, he also outlined the important role played by Adani Defence in Operation Sindoor. Let's go across and listen in.
Operation Sindoor called, and we delivered. Our drones became the eyes in the skies, as well as the swords of attack, and our anti-drone systems help protect our forces and citizens.
Tell you what, Gautam Adani also laid out the group's plan for the next 5 years, annual capital expenditure of $15 to $20 billion, and the group's plans, in fact, towards helping the society.
Investment across businesses is set to break all records. We anticipate an annual capex spend of $15 to $20 billion for the next 5 years. These are not just investment in our group, but investment in the possibilities for doing our part to build India's infrastructure. And before I start wrapping up, let me outline some of the programs that have me the most excited. Exactly 3 years ago, on my 60th birthday, my family pledged rupees 60,000 crore to redefine healthcare, education, and skill development in India. The Adani Healthcare temples are our first major steps, world-class, affordable, 1,000-bed campuses in Ahmedabad and Mumbai with medical colleges, research centers, and wellness spaces all integrated together. Mayo Clinic is our partner in guiding us to create a future-ready, AI-powered, patient-first healthcare ecosystems. In parallel, we have committed rupees 2,000 crores to build a world-class skill university and finishing school in Mundra.
All right, then some very important commentary coming in for Mumbaikars as well. The brand new Navi Mumbai Airport is all set to be open for passengers later this year. In fact, it is a project that is awe-inspiring in size as well as scale. With this airport, the group is going to be having 35% of India's airport passenger traffic.
Adani Airports also had a massive year of growth. We handled a record 94 million passengers in FY25. We also completed the first test flight at the Greenfield Navi Mumbai International Airport. This airport will open later this year with an initial passenger capacity of 20 million, of what will then become a 90 million passenger airport, giving us a 35% share of our India's airport passenger traffic.
All right, and that's some very important commentary coming in from that annual general meeting. Tell you what, let's take a look at a couple of counters. In fact, Adani Ports, that's doing quite well for itself in trade, 3.5% uptick thereabout. Coming in as far as the Adani Ports is concerned, Adani Enterprises as well, 2.4% uptick coming in for Adani Enterprises, as you can see on your screens as well. But let's get you some more news and updates then. Kalpatru opens its over 1,500 crore IPO today, aiming to also repay borrowings. In fact, you have the IPO that is priced between 387 to 414 rupees, will be closing on June 26th, with shares also expected to list on July 1st. My colleague Anushi is joining us with more details.
All right, thanks for that. So, what we are seeing for this Kalpatru IPO now, as you stated, the IPO is opening today. So, interesting one to watch out for, considering the financials if we are looking at, and even the issue size. Now, issue size is about 1,590 crores, and this includes market valuation of about 8,524 crores. So, it's a big number that we are looking, big IPO that we are seeing coming in. In terms of how the financials have shaped up in FY24, we did see about a 16% of a revenue decline, but EBITDA was about in negative negative, but it is important to note that for real estate companies, it's the other key operational metrics which take precedence over these P&L numbers that we are looking at due to the lumpiness of the revenue recognition pattern followed. Now, how these proceeds are going to be utilized? Now, 1,192 crore would be used for repayment of borrowings. But let's also discuss what are some of the key strengths and weakness that we should be analyzing before we subscribe to this IPO. So in terms of where the strength is concerned, promoter infused capital, which is roughly at the size of 1,440 crore, and it is at a valuation of 517 per share that we are looking at. It operates in regions of Mumbai metropolitan region along with Pune, which are both lucrative real estate markets that we are seeing. FY25, if we look at the pre-sales collection, that stood at 4,585 crore. That targeting a pre-sales collection of over 7,000 crore in FY26. So this includes about 25 million square feet of ongoing projects which will be completed in next 2 to 3 years. Meanwhile, forthcoming projects includes roughly at the size of 16.33 million square feet. Now, valuation is the biggest story that we should be watching out for. If you look at the EV to EBITDA multiple, that is expensive, and this is because of the profitability numbers that we are seeing. So more emphasis would be on EV to sales number over here, which is at a discount to Mumbai-led based peers that we are seeing. So that is also something that we should be checking out for. In terms of where the weakness is concerned, firstly, we have seen a track record of the company incurring losses. Along with that, it's a high debt company, including promoter debt of around 3,532 crores. And margins also, if we look at, they are lower than the Mumbai-based real estate players that we are seeing. In terms of brokerage recommendations, now we have a note from the Vinchoksi Research wherein they've issued the issue is priced at 186 of FY25 EBITDA, which appears expensive. So they have assigned a neutral rating to the issue. So Kalpataru is the IPO that we should be watching out for, and it would be open till June 26. So do keep this IPO on your radar.
Well, absolutely, Anushi. There's a lot on our radar when it comes to the primary market. It's going to be a blockbuster week, in fact, for the primary market. 17 IPOs that are going to be hitting the street this week, 6 main board issues, 11 SME offerings, looking to raise a combined total of 15,800 crores as well. We have Astha Jain, who's a senior research analyst at Hem Securities, joining us. Astha, very good afternoon to you, and happy to be chatting with you again. I just wanted to get your sense, first things first, on what you think about Kalpataru in terms of the IPO. Do you think it is worth subscribing to?
Hi, good afternoon. So it is a real estate company basically focusing on MMR and Pune region, and the 80% of their total project is in the premium and the luxury segment, while the 95% of the total project is into the residential areas. So now, or residential development. So now, talking about the fundamentals of this company, this is a 55-year-old company, and now with the kind of pre-sales which we are witnessing, they are witnessing very strong traction in the pre-sales, although they have made certain investments few years back, and due to that, I think the cash flow will start delivering 1 to 2 years down the line. So I think, and that's why we have seen the borrowing is also increased because of the investments made a few years back. They have taken the borrowings, and that's why we have seen the increase in borrowings. So overall, what we feel is that the valuations are little higher, and that's why we are not very much optimistic on this counter. We are advising our clients to just wait till listing, let the listing happen, and then deploy the funds in case if company will be able to show good numbers going ahead. Because right now they are into the losses. Only in the 9 months of FY25 they have posted profit. So whether they are sustainable or not, it is really key to watch. So we are advising just to wait for get it list and then make any decision after their first financial performance or the first announcement of the quarterly numbers. So right now it is just wait and watch from our side for this IPO, and we are not recommending it to go for it.
All right, then let the dust settle. That's the verdict coming in from Astha Jain about this particular IPO. But tell you what, let's take a look at some other initial public offerings as well that you should be keeping on your radar this week. And add to that list, in fact, Globe Civil Projects, that is the one that's going to be open for subscription. We have Anushi joining us with details about that also.
Okay, so when we are talking about Globe Civil Projects, now do note, we'll talk about the company prospects first. Now, it was incorporated in 2002, and it's a Delhi-based infrastructure company that we are looking at, which is engaged in EPC contracts, that's engineering, procurement and construction related contracts. So it executes government contracts, including road, flyovers, bridges and other civil structures as well. Now, in terms of where the issue details are concerned, again, this IPO opens for subscription today and will close on June 26. Now, the price band for this is about rupees 67 to 71, and the total issue size sums up to 119 crore, which is a full fresh issue that we are looking at. Now, objects of the issue for mainly this, why they want to raise funds, is to funding the working capital requirements for the business. Along with that, for the capex plans also, which include purchasing of construction equipment. Now, it's the financials where we'll focus on more in terms of where the revenue is concerned. From FY23 to 24, if we check the revenue growth, it's a 42% of a revenue growth that we are seeing, but it's the margins and the EBITDA which is even more impressive. Where here we are looking at EBITDA growth of around 114%, while margins have been on an upward trajectory from 9% to 15% as of 9-month FY25 period. Net profit also seeing more than a 200% of an increase in terms of where the growth is concerned. In terms of where, let's also do a SWOT analysis on this company. So in terms of where the strength is concerned, order book is on the healthier side. 779 crores is the figure that we are looking at, which implies a book to bill of around 3 times. So that provides revenue visibility going forward. But in terms of where the weakness is concerned, it's the bidding pipeline. In terms of where the company had applied for about 11 projects in which they could only secure about 1 bid. So bidding pipeline is something that we should consider in terms of where the success rate is concerned. In terms of opportunities, they are expanding in terms of where the geographical footprint is concerned, and they are also bidding for single projects which are roughly to the size of 650 crore. However, now where the threat currently lies is higher dependence on JV projects, which accounted for about 36% of their revenue. Along with that, the business requires higher working capital needs. So how that could impact on cash flows is something that we should keep a track of. So this is the overall picture that we are seeing for Globe Civil Projects.
Alright, and that's the overall picture and what it looks like when it comes to Globe Civil Projects. That's also SWOT analysis coming in from our research team here. But tell you what, Elenberry Industrial Gases is also the one that you should be looking at. That's also the one that's open for subscription today, aiming to raise about 400 crore rupees. Price band is set at 380 to 400 per share. Company in fact plans to allocate 210 crore rupees for debt repayment, and Somit is standing by with the key highlights.
Well, when it comes to Elenberry Gases IPO, the price band has been fixed at around 380 to 400 rupees. The company is looking to raise close to 852.5 crore rupees, of which 400 crore rupees would be via fresh issue, while the remaining 452 is an offer for sale, where the promoter and the existing investors will be selling their shares. The implied market capitalization of the company at the upper end of the price band would be close to 5,637 crore rupees, while the promoter holding post this fund raise would come down to around 81.6% from 96.5%. Now, how the company will utilize this fresh issue of 400 crore rupees? They will deploy the same towards debt repayment. Around 210 crore will be utilized towards debt repayment, while the capital expenditure for capex they have kept aside around 105 crore rupees, while the balance will be used for general corporate purpose. Now, if you look at the business of Elenberry Gases, they manufacture and supply industrial gases such as oxygen, carbon dioxide, acetylene, nitrogen and various other gases, and their main clientele include sectors like pharma, chemical, steel, railway, defense are among the key clients. Now, if you look at the financials of Elenberry, over the last couple of financial years from FY23 to FY25, the company's revenue have increased to around 312 crore from 205 crore rupees. EBITDA has grown nearly 3 times to around 112 crore rupees from 40 crore. Margins have expanded to 36%, while the net profit has come in at around 83 crore in FY25 as against 28 crore reported by the company in FY23. Now, if you look at the valuation and compared with its peer, the only listed peer on the stock exchange is Lind India, but also do remember that Lind is nearly 10 times the size of Elenberry Gases, so not a fair peer. But just for valuation perspective, if you look at Elenberry for FY27 P stands at around 47 times, while the FY27 EV to EBITDA for Elenberry stands at around 36.3 times. Now, if this compared to Lind India's FY27 P stands at around 82 times, while FY27 EV to EBITDA India stands at around 51 times. Now if you look at the grey market premium, it's just at 10 rupees, which means that it's trading at a premium of just 3% at the upper end of the price band, that is 400 rupees. Now if you look at the positives of this IPO, obviously the company will be using most of this fundraise towards debt repayment. So this debt repayment will lead to lower interest costs. The capacity addition that the company will be looking to do will boost its financials in FY27. The issue is at a steep discount when compared to the only listed peer, that is Lend India, and there is less competition in the market and more entry barriers for new players to come in. So that is also one of the positives. On the negative side, if you look at the industry growth has been quite slow. In fact, from 2024 to 2028, the industry is expected to grow at a CAGR of just 7.5%. There could be some delays in payment from government, which is one of the key clientele of the company. In FY25, they generated around 27% of the revenue from government, so that could be one of the risk factor here. When it comes to client concentration, nearly 34% of the top line comes in from top 5 customers, and then there is regulatory risk that also prevails for this company in the market. And lastly, what analysts are saying for this IPO, well, SBI Cap Securities has an applied rating for this IPO, while Arihant Capital has a neutral rating for this IPO.
Alright, then that's a take coming in as far as this particular IPO is concerned. Those are some of the key details that you should be looking at. Tell you what, let's take it back to Astha Jain as well. Astha, thank you so much for waiting by. I also wanted to get a sense about both of these IPOs from you. What do you think about the key weaknesses and the strengths? Do you think about Globe Civil projects, in fact, in terms of the concentration of revenues, is that also a concern for you? What do you make of this particular IPO as well as the Lenberry?
So first of all, talking about Lenberry, yes, the company is into the industrial gases, and now with the object of the issue, they will definitely going to repay the debt. So that will be helping the company in showing strong bottom line. So that can be a one positive. In fact, if we talk about their margin profile also, so they have got a trajectory of rising margin profile, and there's a reason behind it because of the increasing share of argon gas. Now this argon gas is always a higher margin segment, and that is helping the company posting good margin profile. If I compare it to Linde India, which is the only listed peer, then definitely from CAGR growth in the top line, bottom line, operating profit wise, the company Lenberry has an edge over Linde India. But if I talk about the valuations and the size, definitely Linde India is much bigger in size. So overall, if I combine all the positives and negatives together, we find this issue long-term subscribed basically. So if anyone who has a long-term horizon can go for this issue, maybe on the listing day we may see some sort of a small gain also, but not a very high return which we are expected on this counter. So it can be a small gain if macro support on the day of listing. So overall, if anyone has a longer term point of view, then keeping in that mind, one can invest in this or subscribe in this IPO. Now talking about the Globe Civil, the most important point and the main highlight of that, it is a very, very small size issue. It is only 119 crore, the total issue size is. So what happens in such cases where the issue size is such a small, then definitely there are certain things which can make this issue a good bet to subscribe for a listing day purpose also. So here also our idea is if one can take the risk, then subscribe for listing gain, and that too very small listing gain. And if one cannot take the risk, so again for Globe Civil also, we are recommending it for the longer term subscribe. So for both these IPOs, our stance here is if anyone has a longer term horizon, then they can go with these IPOs.
Right, and that's the take coming in as far as both of those IPOs are also concerned. So when it comes to Kalpataru, wait for the dust to settle when it comes to this particular IPO for Lenberry as well as Globe Civil. Globe Civil, in fact, you can be betting in terms of the longer term picture. That's something that you should be looking at. But thank you so much, Astha, for joining us. In fact, that's all the time that we have on this edition of Markets at 12. Thank you so much for tuning in.
That's huge. That is a biggie. It's out of there.
Gold Plus Clear Glass. पार हो या नियर, सब कुछ दिखे क्लियर.
Sources is an ED seeking explanation on Yuvraj Singh, Harbhajan Singh on why they are endorsing such platforms which are banned by Government of India, and the mule account and Benami transaction, the kind of promotional payout being given to some of the media houses, the ad rates are between 50 crore to 100 crore.
What happens in reality is that under the garb of skill-based game, they end up promoting gambling only.
27,000 crore is what the tax evasion, the top popular betting apps are actually evading. Between January and March alone, they have seen 1.6 billion of traction.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Hello and welcome to NDTV Profit. A very good afternoon to all the viewers. I'm Hiral Dadia and with me is my colleague Varsha. You're watching Profit Buzzers, but let's quickly take a look at what markets are doing at this hour. An interesting day of trade, a lot of buzzers that we've been picking up as well. Strong up move coming in. Nifty 50 as well, seeing gains of little over 300 points. We've actually surpassed that 25,300 mark in intraday trade, though we're trading below 25,300 right now as we speak. At what levels we close is going to be interesting to watch out for. In terms of Bank Nifty as well as the other sectoral indices as well, let's quickly look at what's happening on that front. Bank Nifty, similar kind of gains coming in there, 1.3% uptick. And you just have the defense pack, which is down and about. No war is no gains for the defense sector, and that's what the markets allude to. The defense sector itself is seeing cuts of nearly 2% in trade today. PSU Bank Index is gaining really strongly. Metals is up in trade. Auto, apart from auto, you're talking about infra, which is buzzing. You have even consumption, IT, all the other sectors which are up in trade. It's only defense and media which is absolutely on a back burner in trade today. Let's quickly look at the constituents in terms of Nifty 50 and see where the gains are coming in from in today's session. If we can just have the heat map on that front. But you have a HDFC Bank, L&T, RIL, ICICI Bank that are contributing. In fact, HDB IPO will be opening tomorrow. And ahead of that, you're seeing some smart moves coming in from in today's session. If we can just have the heat map on that front. But you have a HDFC Bank, L&T, RIL, ICICI Bank that are contributing. In fact, HDB IPO will be opening tomorrow. And ahead of that, you're seeing some smart moves coming in with regards to HDFC Bank. What's losing is ONGC again. That's because crude is below that $70 per barrel mark, and that's what is putting pressure on a ONGC. NTPC Power Grid also trading under pressure. BL, again from the defense pack, is down in trade, and this is again with regards to the defense sector being a downtick in today's session, seeing profit booking as we speak. So that's with regards to the large cap space. But individual stocks in terms of broader markets, as Varsha, are doing absolutely well. I mean, the kind of strides some of the stocks are making is spectacular.
Yes, absolutely. Let's pull up what Nifty Midcap 150 is doing, because on the gainers, so it's up in trade today. And on the gainer side, though, you have Vodafone, you have Timken, you have SAIL, Hitachi Energy, Gujarat Fluoro are doing well when it comes to broader markets. On the loser side, though, you have KPIT Tech, All India, Linde, Bharat Dynamics and Nykaa, which are not doing well when it comes to mid-cap 150. On the small cap 250 though, let's see what that index is doing is up. And on the, you have Usha Martin, JM Financial, Swan Energy is buzzing as they have formed SPV Swan Balu Heavy Industries. One of the reasons why the company is buzzing, there you go, the stock is up almost 6.3%. Even KRBL is also buzzing in trade today. Even Balu Forge is up 4.2% on this, SPV formed. On the loser side though, you have Garden Reach, you have BEML, you have Data Pattern, you have Chennai Petro, MRPL, which are losing when it comes to, small cap 250. So yeah, overall here, if you see broader markets are buzzing on the companies are buzzing on the back of news flow that has come yesterday.
Right. So lots of stocks that are on our radar, and one company that we are looking at today is a Narayan Hridayalaya. Interesting one, the stock actually hit a 52-week high in terms of yesterday's session. If you pull up a one-year chart, you'll see the kind of gains coming in there. On a year-to-date basis as well, the stock is up upwards of around 50% as we speak. So that's what Narayan Hridayalaya is looking at in terms of markets. But let's understand, why are we talking to the company as well? Because Varsha clearly had done an interesting piece with regards to the kind of capex that we are seeing with regards to hospitals over the next 3 years versus the kind of spends that they had done in the previous 3 years. Varsha, if you can quickly highlight with regards to Narayana as well, what are the key aspects that you're picking up?
Yeah, so, Hiral, the trend is that, hospitals are doing huge capex, and especially into the brownfield projects. That means that they're going to just add to the existing facilities. Although Narayana is doing a mix of greenfield and brownfield capex, and the current bed capacity stands at around 5,745. The target for this company is 7,680, and they're going to invest 3,000 crore over the next 3 years, and they're going to employ a mix of greenfield and brownfield expansion. While so overall, so brownfield expansion is the current big hot topic when it comes to hospital sector. But let's hear it out from the management itself, that is Sandhya J, who will be joining us, who is the Group CFO of Narayana Health. Welcome, Sandhya. Always pleasure to talk to you. Sandhya, so as I was, telling our viewers that currently the hospitals are moving towards brownfield capex versus greenfield capex, considering the, good capital ratios that you get, and, the incremental margins that you achieve when you go for the brownfield capex. I just wanted to have your view on the capacity expansion that Narayana is doing, and what kind of top line can this expansion add over the next 3 years?
Good afternoon. Thank you for having me here. Regarding our capacity strategy, currently a lot of our commitment on the capacity growth is on either greenfield or build to suit opportunities in locations which are not near our current facility. The reason being that we are doubling down on cities of our strength like Bangalore, Kolkata, Raipur, etc. And we are building capacity in these cities to be more accessible to the patients. And also with our insurance launch, we want to be having facilities across the city and not just concentrated. So Raipur is a brownfield. Other than that, all the other growth that we have announced are all either greenfield or long-term leases, BTS arrangements that we have signed.
Right, got that view, Sandhya. Well, Sandhya, so this was about the capacity expansion. But my other question to you was how much revenue potential, if you can, I don't want the exact number, but any ballpark range that you can give us, because almost you are tripling your capacity. If I'm not wrong, in FY22, the capex was at around 1,000 crores versus 3,000 crores, which you have announced this year. How much so what is the revenue potential that company may see in the next 3 to 4 years from this capacity expansion?
So the thing is, all the expansion that we are doing is either greenfield or build to suit, which means that the capacities are only going to go live 3 years from now. So if you've seen, maybe one facility is coming up in FY27. The rest of it is either coming up in FY28 or FY29. So which means that we are not going to have any inorganic revenue addition coming from the projects that we have announced over the next 3 years. Whatever growth we will deliver over the next 3 years will be basically organic growth. Just to put this in context, the last 5 years, we have not added a single bed. So we have not added any capacity. In fact, we have scaled down capacity at places. But we've been able to deliver significant growth every year. And that comes on the back of being able to improve throughput in our existing facility, improve the payer mix. So we will continue to do more of what we've been doing for the past 5 years, for the next 3 to 4 years, till our capacities go live.
Yeah, good morning, good afternoon. This is Hiral on this side. So my question to you is, with everything stagnant from a capex perspective, where you're looking at 3,000 odd crores, the bed capacity targeted is around 7,680 beds. If you have to look at peak at the end of the third or the fourth year, what is that peak revenue that you would be targeting with the existing capacity as well as the incremental capacity that you will be adding over the next 3 years?
I think it's too forward looking to say, but what you could typically, if you want to do the math, what people end up doing is you take an organic growth on our existing revenue, like what we've done in the past. And our average revenue per patient or average revenue per bed is publicly available. So typically, you can take an occupancy of anywhere between 60 to 65%. That's really the range in which we operate. So we can assume that occupancy gets hit over a period of 2 years or so. And multiplied by the average revenue per bed can give you a broad number, because we don't want to guide that number. Having said that, I just want to call out saying the dynamics of healthcare is completely changing. The way we are looking at healthcare today, which is that I add a bed and therefore it is assured revenue, that's not going to be the situation 3 years, 4 years from now. Even if you say here and now, the disruption is real. We have to start looking at throughput. We have to look at revenue per patient. We have to look at maximizing patient value and customer value. So the way our healthcare growth and numbers will evolve in the next 4 or 5 years will change. So take Narayana, for example. We are building this entire integrated care model. What this does is that we have clinics which are closer to where patients are, and therefore that's the point of service for patients. And we want to resolve their health issues early, catch it early, resolve early, so they don't have to come to the hospital. And if they have to come to the hospital because they have to get a treatment, then we want to pay for it, which is why we have the insurance layer. So the entire dynamics of how this healthcare model is going to work is completely changing. So it's very difficult to give a forward-looking number in this context.
Sandhya, so recently you have announced regarding opening up the chemotherapy centers. Now, is it possible to share further details on the same, number one? And considering the typical size of a center, what kind of revenues we are expecting? Something on those lines? Any capacity expansion that you would be doing, or any capex have been aligned to these centers? So, any view on that?
So this is a venture investment. So we are only participating in the capacity of a investor. Therefore, the entire decision making on what are the goals that this center wants to do, what they want to build out, how they want to run their process, etc., is run by an independent management that is running that organization. So we cannot give a forward-looking statement on that center. It is left to the discretion of the leadership that is running. We are providing, in addition to capital, every support that can be provided, whether it is technology, whether it is any service support that is needed. So we are operating more from a supportive investor capability. So we cannot really comment on the goals that this new investment is going to undertake.
Sandhya, apart from that, the kind of incremental margins that you see with regards to where hospitals go, that somewhere is getting lost on the back of higher losses in clinic and insurance business. I wanted to understand from you, when do you expect those two businesses to break even, and what's the outlook going ahead?
So we have committed to 400 crore of investment in both these businesses put together over the next 3 to 4 years. And the model is that it goes on a cohort by cohort model. So for example, the first set of clinics that we set up, which have passed the 18 months threshold, broken even. Now the second set of clinics in which we are investing are burning cash. Similarly, in insurance, we are going on the geography by geography model. So we have now launched in Bangalore, we are launching in Kolkata. So the Bangalore model, we are hoping that will break even in 2 to 3 years time frame. Similarly, from now to 2 to 3 years, Kolkata will break even. So the entire model will work on a cohort by cohort basis. So we will continue to invest behind these businesses, but over a 3 to 4 year time frame, I think these businesses will start positively contributing to overall Narayana's profitability.
Also, Sandhya, so last question before we let you go. The yesterday's announcement that Amazon has entered into diagnostic market. Now, I agree that you have only one diagnostic center, but you do provide reports on that, and wherein so Amazon is promising doorstep sample collection in under 60 minutes. So just wanted to have your view whether this is gonna impact you. If yes, how?
So this whole initiative, we believe, is a positive development because as a country, we don't have enough access to care. So anything that enhances the care available for the country is a positive movement. And the other part which we have always focused on is that we as a country have to start focusing on preventive. And the earlier a particular disease is caught, then the shorter will be the treatment and the better will be the prognosis. So we believe that this play, and I cannot comment on what Amazon will do or not do, but such kind of interventions will have an overall positive effect on the ability of the industry to serve its customer better. Amazon promises to have a strong technology play. As Narayana, we have also invested through our integrated care model. We have also invested on doorstep services. And we have also heavily invested on technology. So, for example, today for most of our tests, the report is available on the app in under 60 minutes. So, it will motivate the hospital players to invest more and more in such innovation. So, overall, we only see this as a positive step.
Right. So this is going to be a positive step, taking into consideration the demand-supply situation in the country as well. But thank you, Sandhya, so much for speaking to us at NDTV Profit. Always a pleasure to have you. In fact, we also spoke to Amazon and Orange. In fact, as we know, they've launched their first ever home lab service testing service in India. Let's understand from both the companies as to what they had to say as well.
The intent is to stand out through our customer experience, and the whole intent is to kind of build healthcare as a longitudinal continuum. These are not siloed experiences which customers can operate. Of course, the customer has a choice of taking one experience versus the other. But the intent here is like, to put it in a simple anecdotal way, if a customer has a blood test in the morning, a fasting sugar kind of a test, and he or she kind of can talk to a doctor in the afternoon with the reports, and the medicines prescribed can be delivered to the customer the same evening. That is what I call connected healthcare. And there's a huge opportunity to build this service in a way healthcare is an intuitive, seamless, convenient experience for customers, and we'll be pushing the needle on that.
Since COVID has been a one-way revolving door in terms of people moving away from at-center testing to at-home diagnostic testing, I think the biggest challenge in 2021 when this change happened was that there was nobody who was being able to come to you fast enough to do testing real time. At-home testing was essentially for wellness packages, which was done later in the week or maybe booked next day. Orange Health was the first company that was able to create, I think, arguably India's fastest logistic network for blood sample movement, which allowed us to deliver, get samples in 60 minutes and process results in 6 hours. That started the journey for moving at-home testing from just 5% of the market to 15% of the market today. With the might of distribution of Amazon and their brand name, we believe that the market soon will move from 15% to even as much as 50% in 10 years' time.
That's an interesting take coming in with regards to where the diagnostic space goes, and you have an Amazon which has entered as well. But let's get in Vineet Bulinchkar, Head of Research at Ventura Securities as well. Vineet, good afternoon and welcome to the show, and always a pleasure to speak to you at NDTV. My first question coming to you is, how are you looking at the diagnostic space? Because currently what we are picking up is that the pricing with regards to where the online companies go, which are not really listed, they've gone ahead and stopped the discounting trends. And the volumes over there are coming up, which obviously becomes a positive for the incumbents. You have Amazon now, which has entered this space as well. How would you advise an investor to look at this aspect of healthcare, and which would your top picks be? Vineet, I think you're on mute.
First of all, Amazon's entry is going to mean that the market is going to expand. Because now it is going to cannibalize the unstructured market very quickly. And all the players are also going to up their ante on expansion. And in this, I think one of the players or a couple of players which we think will definitely benefit is Krishna Diagnostic, because they have a very, very strong pool of the underserved market where they have tied up in a PPP model. And the other one which we think will do very well is Suraksha Diagnostics, because Suraksha Diagnostics in the East is the largest incumbent, and that market is the most unorganized. So we think both these stocks should do very well in the coming few days.
Okay, so that's the view that we are seeing for the overall diagnostic space. In fact, we spoke to Muyushu, senior crude oil analyst at Kepler, about how the Iran-Israel conflict would impact oil prices. Here is what she said.
Right now, we think the oil is just like what happened 12 days before. It was just a knee-jerk reaction. Before it was like people priced in the risk premium, but right now is the time to price out. So for us, we do think in the next few days we might see some sporadic missile exchange between Israel and Iran, because they still want to save their face. They want to wrap up the conflict before going into the diplomatic negotiations. But from now on, I think the market will be refocusing on the fundamentals. So oil prices will still find some support because right now we are just about to kick in the peak summer demand seasons, and the traffic fuel demand will be supported. So we do think the oil prices might stabilize above 65, maybe hovering between 65 to 70 in the short term.
Yeah, in fact, what we are looking at in terms of whether crude prices are concerned, they have dropped sharply after the announcement of the ceasefire between Israel and Iran. Now, do remember that US President Donald Trump had posted that announcement earlier today on his Truth Social account. But the question really is this a good news for oil marketing companies? Somit joins in with more details on this.
Yes, if you look at the Brent crude prices, which is the Asian benchmark for crude, it has fallen from its peak of around $81 that we had seen recently, couple of days back, to around $69 per barrel. So clearly, the war premium that was there of around $10 per barrel has been wiped off. Now, which companies or which oil companies stand to benefit out of this? Well, specifically the oil marketing companies, that is IOCL, BPCL and HPCL, stand to benefit out of this, given the fact that the fall in oil prices will boost the marketing margins of those oil marketing companies. Now, the integrated margins before, when the crude was at around $81 per barrel level, was at around 1.5 rupees per litre, which means that they were earning around 1.5 rupees per litre on sale of every litre of retail fuel, that is petrol and diesel. Now, given the fact that crude prices have come down to around $70 per barrel, these integrated margins will shot up to around 9 rupees per litre. So a clear boost or a clear gain in the marketing margin that we can see in the next few days, and every 0.5 rupees per litre gain in the marketing margin boost Indian Oil Corporation, BPCL and HPCL's EBITDA by anywhere around 7 to 11%. However, on the negative side, it's the oil explorers that stand to lose out here. That is the ONGC, Oil India, Vedanta and HOEC. For them, it's clear negative, given the fact that oil is the key product for them, and fall in oil prices lowers the realization for them going forward. And generally, every $5 per barrel drop in the oil prices lowers ONGC and Oil India's EPS by around 7 to 12%. Also, lower crude oil prices is beneficial for India as a country, given the fact that we import nearly 90% of our crude requirement, and inflation, if you look at fuel, has a direct weightage of around 4.4% in the CPI, while when it comes to WPI, the weightage is higher at around 7.95%. And generally, every 10% reduction in the crude oil prices lowers the WPI and CPI by around 80 to 40 basis points. And when it comes to current account deficit number, the oil accounts for nearly 26.5% of the total imports and 61% of the commodity imports. And as per analysts, a 10% decrease in the crude oil prices narrows the current account deficit by around 30 basis points. So clear win-win, not only coming in for the country, but also for the oil marketing companies.
That's the overall breakdown that we are seeing in terms of the companies as well as the economic stand view as well. But Vineet, coming to you now, we are seeing this shift in terms of where the narrative is concerned. Just a few days ago, we were talking about it's a positive for oil explorers, but now with the fall in the price of crude oil, now we are seeing a shift back to these oil marketing companies. I want to understand your outlook, whether you continue to favor OMCs or oil explorers, your view.
So I think the war cycle is coming to an end, and there is no immediate conflict that is going on apart from the Ukraine Russian conflict, and that is also at the fag end of its culmination. So I believe that the pricing environment for OMCs is going to be very strong, because low volatility means good profits, and I think OMCs will do very well from current levels. BPCL is our top pick.
So that's the view that we are seeing for OMCs. So that is in favor. But let's talk about defense now. That has remained in focus. In fact, let's pull out the Nifty India Defense back today and see how that is faring. It's down about 2% in trade today. If you take yesterday's move, it was one of the top gainers. In fact, it was up over 2%. So it's a shift in narrative again that we are looking for the defense pack as well. All Garden Reach, BML, Mishra down about 6% in trade today. But what's happening here? Still, is it in bust? That is something that we we should be focusing on. Now, in terms of where Jefferies is concerned, they just came out with a note in terms of defense, wherein they continue to favor the defense space. In fact, they are seeing that India's defense spend was up over 25% in the March period itself. Even if you look at the FY26 capex, the defense capex, now that was up over 122% in April itself, and this is against a target of a 13% growth expected for FY26. Top picks over here continue to remain something like a Hindustan Aeronautics, Data Patterns along with BEL. BEL is another stock that is in focus. Now JP Morgan came out with a note wherein they maintained the overweight rating and in fact have hiked the target price to 490, so which implies about a 16% of an upside. So Bharat Electronics, two notes that we are looking at. Vineet, coming to you on the overall space. Now what's your outlook? Do you see that despite the 45% jump that we are seeing in the overall index in the last 6 months, the valuation continue to be favorable, and if so, which are your favorite picks in this space?
So I think HAL has not rallied as much as the other PSUs have rallied, and HAL and BL remain two of our top picks. We believe that there could be some kind of profit taking given the war cycle, drumbeat coming down, volume coming down, and there could be some profit taking. But after that, we expect this rally to resume soon after.
So that's with regards to defense companies, but let's quickly slip into a short break. And as we get into that, let's also listen into Amit Mahajan of Paras Defense and Space Technologies, who talks about their order book picture and what's in store.
So currently the order book is in excess of 900 crores. And when I'm looking at just the order book, I'm also looking at the opportunities that are in front of me, which are in excess of 2,000 crores. So what I'm seeing is all of these 2,000 crores, some of that will come sooner than later, and the remaining would come for sure. So all of this will phase out. What if I expect something to come after a year will come before that. So this is the momentum that is there in the industry, and I think we are having a positive problem that we need to keep ourselves geared up for such opportunities.
गोल्ड क्लास ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
Sources in ED seeking explanation on Yuvraj Singh, Harbhajan Singh, on why they are endorsing such platforms which are banned by Government of India, and the mule account and Benami transaction, the kind of promotional payout being given to some of the media houses, the ad rates are between 50 crore to 100 crore.
What happens in reality is that under the garb of skill-based game, they end up promoting gambling only.
27,000 crore is what the tax evasion, the top popular betting apps are actually evading. Between January and March alone, they have seen 1.6 billion of traction.
markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold
CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
Nifty managed to scale the 25,200 mark. Sensex jumps 1%. Nifty PSU Bank and Metals lead the gains. Auto also in the fast lane.
The defense rally seems to be cooling off with de-escalation in the Iran-Israel conflict being penciled in. HAL and Data Patterns shed over 2% in trade.
And Tata Technologies echoes KPIT Tech's mid-quarter update. An NDTV exclusive lined up on the show.
Beating all odds to generate record-breaking revenue and playing a crucial role with their drones in Operation Sindoor, Adani Group Chairman Gautam Adani says the group is all set to carve new paths ahead with an annual capex spend of $15 to $20 billion for the next 5 years.
Welcome back. You're watching NDTV Profit and Profit Buzzers. Very quickly, let's look at what markets are doing, whether they're sustaining at the levels we started off at 1230 or not, or have inched higher. There you go, 25,200. So some cooling off is happening from the day's highest levels of 25,317. Whether we break 25,200 or not is what we need to wait and watch and see. Let's see if Bank Nifty is also mirroring a similar trend in today's session, because that itself was up around 1.5%. There you go, similar kind of trend seen in terms of Bank Nifty as well, with gains of around 1% coming in there. But today is an interesting day that we are watching out for on the back of what's happening in the pharma space. You have Novo Nordisk, which has gone ahead and actually launched its GLP-1 diabetes drug in India. My colleague Agni is at the event, and in fact, he has been in a conversation with Vikrant Shrotriya, MD at Novo Nordisk India. Let's quickly listen into that conversation.
Right, so we are joined by Vikrant Shrotriya, Managing Director at Novo Nordisk India. The company has just launched their drug Wegovy, which is meant for obesity patients, and what kind of a market the company is targeting. So Vikrant is here to tell us more about that. So Vikrant, do tell us in brief about the Wegovy drug and the addressable market share that you have for it in India.
No, thank you very much, and this is quite a momentous occasion, and we are very pleased to launch Wegovy in India, which is actually semaglutide, and it is being launched from 0.25 to 0.5, 1 milligram, 1.7 milligram and 2.4 milligram in disposable devices. So one pen will carry 4 dosage, and that is fantastic because patients can actually take the injection for semaglutide at their home. Now, the question about the market share, the market, I think that's not something very important. We are a very purpose-driven, patient-centric organization. But what is very important is 254 million people with obesity, and very few are actually taking the medication for the treatment. So there is one end of diet and exercise where probably 3 to 5% weight loss can happen, and it is not managed over a long period of time, and then you have got bariatric surgery. In between, for such a large population, there is a vacuum there is a gap, and we are trying to address that gap. And if we are able to address that gap, I'm sure that you will agree that the byproduct is also going to be good commercially. But the focus is how patients can benefit.
So, sir, behind me we see a set of 5 pens, and the pricing was something that the pharma market was keenly watching. So, can you tell us what the pricing for the pens are?
Yeah, the pricing for the pen, we have what we really call is the smart pricing. 0.25, 0.5, and 1 milligram. They are priced at 17,345, and that means that weekly treatment for all the 3 stents is actually 4,336, and that is actually very, very good, because patients start with a dose of 0.25, they escalate to 0.5, and then they go for 1 milligram. Then we have got 1.7, which is 24,280, and then we have got 2.4, which is also rightly priced 26,015. So it is priced very smartly right in the beginning, so that patients can start and they can escalate without having a hole in their pocket.
Right, so my next question would be again with respect to your rival who had a first mover advantage in India, Mounjaro by Eli Lilly. So as we know, the pricing is competitive right now, but Mounjaro is again priced slightly lower, below what you are offering, and there are also headwinds ahead in the form of semaglutide losing its patent. There's already people in the market who are currently making their generics around it. So do tell us more about how you plan to tackle this first mover advantage which Eli Lilly has in India, and what is the course ahead that semaglutide loses its patent?
I don't think so. We are rivals. I think we are friends.
Right. In fact, we've just lost little audio on that one, but that's an interesting one coming in, where pharma companies are actually betting big on the weight loss drug. In fact, let's quickly look at what the competition is doing. You have companies like Glenmark, Dr. Reddy's, Sun Pharma, all of them are in queue. In fact, we've just got the conversation back yet again. Let's quickly listen.
The same pricing for escalation of the dose to 0.5 and 1 milligram, and I think that's a very significant advantage. The advantage also, which the advantage also is that this particular medication is not only for weight loss, but along with the weight loss, there is a 20% significant cardiovascular benefits. The problem is not only weight, which we are actually doing. The problem is that 2 out of 3 patients, they succumb to cardiovascular disease, and it also tackles the burden of cardiovascular disease in patients with obesity, and that's very important for us.
That was Mr. Shrotriya and Novo Nordisk's promising new drug launching in India to a very targeted and large market. Stay tuned for NDTV Profit for more updates.
Right. So that was Agni at the event, getting us a quick update on what's happening in this market as we speak. In fact, shortly we'll be joined by Vishal Manchanda as well to help us diagnose this space in terms of what's happening, what are the players, how big is an opportunity, and which companies you should be betting big on as well. But moving on, Adani group of companies that are in focus in today's day of trade. Let's quickly pull up all the stocks and see what the companies are doing, because from Adani Ports, Adani Enterprises, both the counters seeing some smart moves in today's session. You have ACC, Ambuja, Adani Power, Adani Green, Adani Energy Solutions, all of them seeing some smart moves on the back of the commentary that's coming in from the AGM as well today. In fact, in a major vote of confidence from global investors, Adani Airport Holdings has successfully secured a landmark $1 billion financing package for transformation of Mumbai's international airport. In fact, Anushi has further details on it. Anushi.
Right, so it's a big story that we are looking at now. Adani Airport securing about a $1 billion of a financing, and this is from global investors that we are looking at for its Mumbai International Airport. Now, what does this mean and what does this signify? Let's break this down. So it marks India's first investment grade private bond issue in the airport industry. So this is an important update that we are looking at. The financing received is from Apollo managed fund-led transaction, and we are seeing names along with that with BlackRock managed funds, Standard Chartered, among others. Now this issue, why this $1 billion of funding that we are seeing is now this will support Mumbai International Airport's strategic vision, which includes modernization, capacity expansion, sustainability initiatives, along with commitment to achieving net zero emissions by 2029. Now, in terms of where the transaction details are concerned, this includes a provisional to raise an additional $250 million along with the $750 million of notes maturing in July 2029 to be used for refinancing. Again, if you look at the rating also, the notes are rated BBB with a stable rating that we are seeing, which is backed by the stable asset base of Mumbai International Airport along with the cash flows that the company has. So this is the overall bid that we are looking at, but the brand new Navi Mumbai Airport is all set to be open for passengers later this year. It is a project that is awe-inspiring in size as well. So let's look at what is happening on that front as well.
I think the bite is something which is...
Adani Airports also had a massive year of growth. We handled a record 94 million passengers in FY25. We also completed the first test flight at the Greenfield Navi Mumbai International Airport. This airport will open later this year with an initial passenger capacity of 20 million, of what will then become a 90 million passenger airport, giving us a 35% share of our India's airport passenger traffic.
Right, so that's the conversation that's coming in with regards to where Adani Ports is concerned and the kind of uptick that everyone is expecting on that front. In fact, we have Vinay Rajani, CMT Senior Technical and Derivative Analyst at HDFC Securities, also joining in. Vineet Bulinchkar is also with us. Vinay, let me come to you. Adani Group of Companies, strong moves in terms of today's day of trade. What would your recommendation be? Are you seeing further strength which could be of buying interest?
Yeah, so Adani Port has been into a primary uptrend as it is trading above the 20, 50 and 100 days moving average, above 200 days moving average as well. And recently we saw that it corrected from 1450 towards 1334, and for last 3 trading session it has been recovering and started its uptrend, primary uptrend again. So the overall trend has been quite strong. This is one of the stock which we are expecting it to do well in the coming weeks and months. So it is not for the short term, very short term, but yes, if you are taking a positional view, more than 2-3 months view, then definitely this stock is looking very strong on the weekly and monthly positional charts, and this should be bought into. As far as support is concerned, the recent swing low of 1334 is a strong support that should be utilized to buy on dips. On the higher side, if we were to if this stock were to cross 1450, which is 50 rupees away from this level, then we can expect it to go beyond its all-time high, which was placed at 1575. So overall trend is bullish. Adani Ports, buy on dip should be the view. Positional charts are looking very strong.
So that's with regards to Adani Ports. That's the topic coming in from Vinay. In fact, just a quick disclaimer, you have NDTV Profit, which is a part of AMG Group, which is a part of Adani Group of Companies as well. But talking and coming back to the GLP-1 product portfolio, with Novo Nordisk actually launching a Wegovy in India. To discuss further on this, we have Vishal Manchanda, Senior VP Institutional Research at Systematics, joining in. Vishal, good afternoon and welcome to the show. We've already seen a Wegovy which has been launched right now, and I'm sure you've gone through the pricing that has come in. Looking absolutely competitive overall, how would you look at Wegovy versus a Mounjaro, plus you have a Lirafit which is coming in as well. So from a pricing strategy perspective, your initial comments?
So I think pricing is attractive, and I think it will go down further. So I think it's just the start. The pricing is at a discount to Mounjaro. So I think Novo is targeting a larger market. They are looking to penetrate a larger population versus Monjaro pricing was a bit steep and they were actually targeting a very niche population. But I think Novo is trying to make it big, and they are kind of now about 9 months ahead of a generic launch. So generic launch is expected in March 26, and they have 9 months of lead time before which they can kind of build their brand in India.
Hi Vishal, this is Anushi joining in as well. Now my question to you is about once this patent expires in 2026, let's say, a lot of pharma companies, as you specified, will be making generic versions of it. Which are some of these counters which are expected to benefit from this, if you can emphasize more on that front as well?
So I think on the generic side, we'll see almost all the large players participating into the market, at least all the large players in the diabetes space. So Sun, Lupin, Cipla, Reddy's, Zydus, almost all of these large players. Eris Life Sciences would launch their own brand of GLP-1. It's going to be fiercely competitive, and I think pricing, whatever pricing that we are seeing today, it should significantly correct. I think maybe 60-70% discount even from where it is today is something we can expect a year down the line.
Vishal, if you have to look at playing the pharma pack through the GLP-1 portfolio, which companies would be your top bets right now? Because you have companies like Sun Pharma, Glenmark, Biocon, Dr. Reddy's, all of them who are looking to enter this space. Biocon, Glenmark, Dr. Reddy's, I know they're waiting for the patent expiry with regards to semaglutide. Eli Lilly's Monjaro, which is already in the market, and you have Sun Pharma, which is developing a new patentable molecule. Ahead of, what would your top bet be?
So I think this opportunity is largely, I think, going to be more of a brand play rather than. So basically, anyone who has a strong brand presence in India would be the winner. And I think Sun is one company that has done well in diabetes. Lupin is another company that is a strong presence in diabetes. So I would look to look at these names from a GLP-1 standpoint, and GLP-1 standpoint in as far as India markets are concerned. While there are export markets also that are going to open up, and I think Sun, Lupin also have a strong presence in the emerging markets, so they can also kind of take benefit of the opportunity arising outside India.
Thank you, Vishal, for joining and sharing that perspective on which are some of these counters that could be in focus. But with that, let's shift to something like a KPIT Tech, which is down about 5% in trade today. Now, the street was not impressed with the company's weak guidance in its mid-quarter update. Just Hiral, talking to about this update that we are looking at, global environment has remained uncertain. This is due to a lot of geopolitical developments that we are seeing. In fact, US and Asia also remains weak, contributing to about 22% of our revenue that we are looking at. Even if we talk about the margin trajectory, now they have plans to send more work offshore to cut cost as well. So even in terms of where the margins are concerned, that is something that we are seeing on the softer side, right?
Right. So that's with regards to KPIT Tech. In fact, concerns with regards to conversion, that is an issue. Secondly, the regions where they're operating in, where they get 22% of their revenues, is weak. And the acquisition will only show up in the second quarter of FY26. Beneath, a quick view with regards to KPIT Tech.
I think, given the slowdown internationally in EVs, I think there will be a little bit of correction in the stock. Of course, they're taking amends to restrict margin, restrict margin decline. But I think I'm not very optimistic at current levels on the price of the stock.
Vinay, do you think KPIT is a buy at current levels, taking the downtick that you've seen in today's session?
So whatever strength was there previously, it has been fizzled out and stock has breached its to long-term moving average. So now we need to see whether it is sustaining or not, because there is a news, and that is why the stock has come down by more than 5% today. I can see there is a strong support around 1300. I think if that is broken, then we can expect some more weakness in the counter. So previously the stock was doing quite good, but this is a news or whatever announcement company has come out with. I think that is reaction towards it. We need to see whether it is holding below 1300 or not. So according to me, if I go by the technicals, 1300 is a very strong support. If it were to close below that, then we can expect some more weakness and some kind of underperformance in the counter. But overall, I'm not that much bearish, positionally not that much bearish. So this could be a short-term short-term weakness for the counter. So 1300 should be the stop loss in the trading long position, below which we can expect some more weakness and underperformance. But positionally, if you are an investor, I think long-term charts are still very good, and investor should look for the buying opportunities if stock corrects in a healthy way.
That's the view that we are seeing for KPIT Tech. But let's also talk about something like a Bajaj Consumer Care. Now, this is buzzing in trade today, currently up over 19%, cooled off some of it and seeing 17% of gains. And this is on the back of a management change that we are looking at. In fact, they've appointed a new MD as well. So a lot of optimism building on that front. Vineet, let me come to you on this news. Bajaj Consumer Care is the stock in focus.
Yeah, I think it's time for, the entire sector, FMCG pack, to do very well. We believe that this entire segment should do well, and Bajaj consumers are going to be no exception.
So Bajaj Consumer, positive view coming in on that front. Let's look at a Swan Energy and Balu Forge. Both of them have actually jumped in trade after announcing a pact to tap into high growth segments, including defense, aerospace, railways and nuclear industries. Vinay, taking the kind of strength that you're seeing in terms of both of these counters, what are charts indicating? Strength or no weakness?
Definitely the stock, if I were to go by Swan Energy, this stock was consolidating since long. If I were to take exact, since February 2025, starting with this year, this stock was trading in the range of 460 to 390. So 70, 80 rupees range was there since the starting of this year, and I can see that there is strong resistance around 480. So if this stock takes out 480 resistance, then there is a good chance that it will do very well positionally. And as I can see, there is a strong volume jump in the today's trading session. The stock is up by almost 7%, and the kind of close we are getting here. So if definitely there is a good chance that this stock will give a positional breakout. Positional breakout level is 480, above which it will turn positive on the weekly and monthly time frame, and that is definitely we can expect very good returns in the coming months. So waiting for 480 to be broken out on the upside, then we can expect 15-20% move immediately after that. So yes, today's movement is good, but positionally it will turn bullish above 480.
Okay, so that's the view that we are seeing for Swan Energy. Now, I want to bring up something like a Tata Motors, and this is after the company is entering in the EV space. In fact, now the competition here would be intensifying. This is with the introduction with its Harrier EV. If you look at the basic model price, that stands at about 21 lakh, while its top model will cost around 27 lakhs. Vineet, let me come to you on this. Now, this was a much expected release, that we were looking at in terms of where the pricing is concerned. What is your view on Tata Motors?
I still think there's a lot of downside room in Tata Motors. We think the stock can come down to 600 odd levels. And so we are not buying into this counter currently.
Vineet, not buying into this counter. And what's interesting is the buyers are actually awaiting the price for all-wheel drive variant for this one. So Vineet is not really buying the stock right now, and you have buyers who are waiting for the new variant, so they are not buying the car right now as well. That's what it comes across so far. So that's with regards to Tata Motors. Vinay, very quickly, you have the auto pack which is buzzing in trade right now. Your top pick taking into consideration the trade today?
So technically speaking, Mahindra & Mahindra is looking the strongest amongst the packs, and a few days back also we saw a breakout, and today also it participated well. So Mahindra & Mahindra would be my top pick from the auto space, followed by TVS Motor, which is from the two-wheeler space.
Well, That's the overall view that we are seeing for the auto space. Thank you, Vineet, and thank you, Vinay, for joining. But that's all the time that we had on this edition of Profit Buzzers. But do stay tuned in. We have Profit Top Trades coming up next.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis. Conversations that matter. We break it down, cut through the noise and set the context for you. Hear from top policy makers and thought leaders from the world of business and beyond. The big question really is, are companies using dark patterns to take you for a ride? The big question we're asking today, is the US heading towards a recession? The big question is, are we sacrificing our health at the cost of convenience? The questions you care about, asked and answered. The big question.
Sources in ED seeking explanation on Yuvraj Singh, Harbhajan Singh, on why they are endorsing such platforms which are banned by Government of India, and the mule account and Benami transaction, the kind of promotional payout being given to some of the media houses, the ad rates are between 50 crore to 100 crore.
What happens in reality is that under the garb of skill-based game, they end up promoting gambling only.
27,000 crore is what the tax evasion, the top popular betting apps are actually evading. Between January and March alone, they have seen 1.6 billion of traction.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
Welcome to NDTV Profit. I am Mahima Vajrajani and with me is Varsha, and you are watching Profit Top Trades. Now, Metro Brands is in focus today, and this is on the back of the company announcing an exclusive partnership with Clarks, which is a British brand. And to take this conversation further, we're joined by Nissan Joseph, CEO of Metro Brands, who's joining us now. Always a pleasure speaking with you, Mr. Joseph. Just wanted to get a sense as to, how entire FY25 was a good year for you in terms of partnership, and yet another partnership on the cards. Just trying to understand as to what this partnership means for Metro Brands.
I'm sorry, I think you are speaking to me, but I can't hear the audio, so you might want to just take a break and fix that.
All right, we'll do that for you. I'll ask the technical team to fix that. But till then, just to give viewers a brief perspective as to what is happening exactly. So Metro Brands has announced an exclusive partnership with Clarks, and in terms of what this means for the company, it's a strategic move to transform comfort footwear segment. The company is appointed as an exclusive retail as well as online partner for Clarks in India, and this is after Reliance in fact ended partnership with Clark. The company has exclusive right to sell both in terms of online as well as offline sales, and this will tie up their entire digital as well as offline brand. I think we have Mr. Joseph back with us on the channel. Mr. Joseph, I was just trying to understand from you as to what this partnership with Clarks mean for Metro Brands exactly.
Yeah, I think anytime we look at a strategic brand to add to our portfolio, it has to do a couple of things. One is it needs to be able to play in our Metro Mochi stores. And we've had a long history with Clarks in our Metro Mochi stores in the past, and it has done very well for us. So we were quite excited at this opportunity because of that one foundational reason. The other thing the brand must be able to do is have its own exclusive brand store, so we create some critical velocity with it. And the third thing, as India is evolving, it's important to have that omni-channel play. So having all three of those channels of distribution, channels of sale is very important to us, and we think it's a great strategic fit for us.
Got that point. So just want to get a sense also on the fact that you also onboarded Fila as well in the last 1 odd year. Plus Foot Locker was also onboarded. Just wanted to get a sense that now that these partnerships are reaching at the level where they've started to contribute significantly to the company's revenue. FY26 perspective, what percentage of your total revenue do you think will come from Fila, Foot Locker as well as Clarks?
Well, I think all those three brands are still very much in the embryonic stage, right? So to say that they would cross even a double-digit % in the first year of operating is probably a good number that you could cross. But what's more important about these three brands is the future, right? So as India's footwear needs are evolving and they're quite diverse, as you know it, what we feel is these kind of brands, these kind of retail positions allow us to capture that market as India grows.
And in terms of your margins, margins as a picture, FY26, how will this, and the entire partnership playing out impact your margins? Will that have a short-term impact because of the entire implementation going ahead, or will you see margins picking up by the end of FY26?
Well, we don't expect Clarks to be in any way dilutive to our margins for two reasons. One is we have a healthy margin mix with Clarks, and number two, it's still a small part of our business. So even though we will be investing in getting the brand up and running in India, it's not going to be a significant piece or a significant dent to the overall margins. We've always guided our margins, EBITDA margins, to be in the 30% range, and we're confident that this will only add to it as we go forward.
How do you expect this to operate? Will there be separate stores for this, or will this be a part of your Metro brand stores as a whole? And in terms of the overall sales, how are you expecting the divide to be in terms of your offline as well as online sales? Because it's an exclusive partner for both online as well as offline sales.
Right. Well, I think the answer to is it a Metro store, is it a Metro Mochi store brand, or is it a standalone brand? The answer is yes. Because we do plan on playing the brand both ways. We want to be have exclusive brand stores open up in the country, and we definitely intend to continue the strong sales we had with Clarks in the past in our Metro Mochi stores. And third, but definitely not the least, is our e-commerce business. We, like all our rest of our business, we don't see any reason why this shouldn't be able to achieve its own 10% of our total revenues when it comes to the digital channels.
Is there a specific number in mind for your exclusive brand outlets for Clarks specifically?
I think when you look at brands like Clarks and Foot Locker and FitFlop, I think in a course of a runway of time, they have opportunities to go from anywhere from 50 to 100 doors, depending on, the specific brand. But we also believe in the long-term future of India, the premiumization of the category, the comfort seeker that's looking for comfort and quality premium products. And we think Clarks hits those and resonates really well with that consumer that already shops with us and is looking for that.
All right. And in terms of the Foot Locker, when I was going through your con call transcript, it did mention that there were supply chain concerns, and of course the delay of, in fact, the BIS implementation as a whole was an overhang on the entire store edition part. Do you think this will also have some impact on opening stores for Clarks, or no, supply chain won't be a concern here?
Yeah, I think one of the reasons that we are excited about this partnership, one of the many reasons we're excited about this partnership, is that Clarks has been able to effectively overcome the BIS constraints that were in place. They've moved a lot of their production to India. They also have production in BIS approved factories. So there's a lot of things going in the favor. So we don't see BIS as being a significant factor as we continue to launch and roll out the brand in India.
All right, understood. One last question, Mr. Joseph, before I let you go, just want to get a sense, if not a near-term target, let's say 3 to 4 years down the line, just want to get a sense as to what is your vision with respect to the partnerships that you've entered in the past 1.5 years, Foot Locker, Fila, as well as Clarks very recently. How do you think these brands, will play out in the next 3 to 4 odd years, and what contribution to the overall revenue will they be at?
Yeah, I think when you look at where the Indian consumer is going, they're evolving, they are getting more athletic. At the same time, they also seek premium comfort. I think the brands that you mentioned just recently there resonate with those kind of consumers, which is where India is going to see most of its growth come in the future. I think if you lump our entire strategic outside brand portfolio in the company, it comes to about 30%. I'm talking about the entire brand portfolio, right? So, and sometimes what you see through a journey of 5 years is some brands go up, some brands go down. We think that's a mix we'll continue to keep somewhere in the 30% range as an overall business. So that's not going to dramatically change as we look to the 5-year period. What's more important is, we don't see Clarks as in any way being dilutive to our existing metrics that we run. So that's the exciting part about Clarks.
Mr. Joseph, thank you so much for giving us all those insights, and all the best for future. In fact, all three brands, all the best for seeing these brands flourish under your leadership.
Great. Thanks very much.
Thank you so much. Well, with that, let's also shift focus as to how the markets are doing. Let's pull up the Nifty 50. It's cooled off from its day's highs for sure. Let's pull up the chart and see it's trading around 0.3% higher. There was a point in the day where it was trading almost 1% higher. But it's trading almost at its day's low point as we speak. Let's also pull up the Bank Nifty. The Bank Nifty has also come off from its day's highs, trading at 0.4% higher. Let's pull up the constituents on the Nifty 50 and see how the constituents are faring. There's Adani Ports, Adani Enterprises that are leading the chart, but there are counters like HDFC Bank, Kotak Mahindra, L&T, as well as Adani Ports doing well. But something that's not doing well is Reliance, ONGC, as well as NTPC and Power Grid. Let's also pull up the advanced decline ratio and see how that is faring. That chart would have narrowed by now because of the downward movement in the Nifty that we're seeing. There you go. That's the advance decline ratio. You have around 35 odd advances versus that of 15 odd declines. Can we also pull that up for the entire market and see how that advance decline ratio is falling? Because we're seeing the broader markets come off a tad bit, and there you go. But it's upheld. It's 1600 odd advances versus 500 odd declines. So that's almost nearly 4:1 ratio that we're seeing there. In terms of the broader markets though, Varsha, we're seeing that the mid-cap 150 and the small-cap 250 have, however, kind of upheld the kind of moves they had since the morning.
Yes, exactly. And to that point, if you see, they're still up. It's up almost 0.61% if I talk about Nifty mid-cap 150. Let's see who are, let's just pull up, BSE 500 index also, because you have Vodafone, Timken, SAIL, Hitachi Energy, Gujarat Fluorochemical, who are buzzing when it comes to mid-cap 150. Even you have Usha Martin, GM Financial, Swan Energy is also buzzing, is up around 5.6% because of the SPV formed by Swan and named Swan Balu Heavy Industries. Balu is also surging in trade today. It was almost up 4% in trade today. While on the loser side though, you have, when it comes to BSE 500, you have KPIT Tech, you have Oil India, you have Linde, you have Bharat Dynamics and Nykaa, which are on the losing trend. Even Garden Reach, BEML, Data Patterns, Chennai Petro, MRPL are also on the losing trend. So overall, yes, broader markets are up, but so basically a lot of companies are buzzing on the back of news flows. But with this, let me invite our guest, who is Sneha Poddar, who is the Vice President and Research of Wealth Management, MOFSL. Hi Sneha, welcome to the show. Pleasure to have you. Just wanted to have your view on the markets. Good day for the markets though.
Very good afternoon, and yeah, it's a good day for the market. In fact, it was a pleasure in the morning when we heard that the ceasefire has been announced by Trump, which led to the rally in the global market. So and Indian market is reacting to that. Obviously, with the crude oil prices coming off sharply to below $70 per barrel, that provides a lot of relief, especially for the Indian economy. So keeping that in mind, as well as with the ceasefire actually holds on, then all the export-related sectors, it will be a relief for those sectors, those companies, and along with that, the HSBC data which came out for India on the PMI side, that was also encouraging number, and that added further positivity to the overall the global cues that we were witnessing.
Right. Thank you so much for that view, Sneha. Well, Finance Minister Nirmala Sitharaman said that medium and small enterprises need to every bit of help because the challenges for exporters were quite high globally. She was speaking at an event by Exim Bank. Do have a look.
Since the last time I attended till today, challenges have only increased. They've not come down, nor is the export world getting more and more facilitated. Within India, yes, but outside, you find the challenges are going up. And therefore, every encouragement given for those small and medium units which are coming up in the export area will be of immense importance and significance.
All right, shifting focus to the cement space, cement companies are gearing up for another attempt to hike prices, but the onset of monsoon could play a spoil sport. Let's listen in to what Girija Shankar Ray, lead analyst of cement and institutional equity research at Yes Securities, had to say about this.
The pricing, if I talk about southern regions, eastern regions, all the 5 regions, and all India average prices remains on quarter basis. I can say it is 20 rupees per bag is increase. See, nothing to be surprised in this because December, January, February and March, there was no price hike in southern regions. And this 20 rupees, what I am talking about on quarter basis, main contribution is from your southern region and eastern regions. Southern region prices on quarter basis 45 rupees per bag. I can say it is increased, and 38 rupees in eastern regions, followed by central is 10 rupees, and rest north and western region was around 4 to 5 rupees per bag. on quarter basis. But in June, what we have observed, whatever the prices were, increased in April and May, that has 20 rupees around kind of per bag has rolled back in southern regions. See, the positive thing is that the prices are sustaining, and this is a good thing for the cement companies. Although there is a pre-monsoon kind of impact is there, and even we are heading towards the monsoon.
All right, Sneha, a question on the entire cement space. What the analyst was saying, in fact, was that because of the price hikes being taken in the quarter, there might be, there might be some positivity in this space going ahead in the next quarters. What's your view with regards to where cement space stands, and any particular counters that you like in the space?
Okay, so with regards to cement, if you see in the month of April and May, the capex done by the government has accelerated at a very sharp pace, and that is actually driving the demand. So, though we acknowledge that the monsoon is coming up and it might slow down the pace a little, but then with the heightened capex that we saw in the month of April, May, that has really provided a lot of buoyancy to the overall demand, and that is providing a lot of support to the price hikes that the cement players are taking up. So, though it might though prices might not hike in the recent 1 or 2 months time, but then the chances of prices coming down looks really bleak, and I believe that the demand is likely to just moderate a little and not come down sharply. So overall cement space looks really good, because from second half, once again, once the monsoon settles down, the demand and the price will move up in the northward direction. So keeping that in mind, we are really liking the cement space, and in this, Ultratech is the best pick among the large caps, and among the mid cap names, we like JK Cement.
Right. Well, thank you so much for that view. But moving on, it's been a tale of two tapes on Dalal Street so far in 2025, with a stark divergence between two of the market's most heavily watched sectors, that is banks and IT. So Amit joins us to tell us more.
Well, if you look at the divergence move of the Nifty IT and the Nifty Bank for 2025 on a year-to-date basis, it has been a clear divergent move for both the main indices. Nifty IT index is down around 10% while the Nifty Bank index has managed to gain around 10% so far. Now, if you look at the last 15 years, we have tried to bring it here, how the performance has been for the Nifty Bank and the Nifty IT. Now, Nifty Bank has outperformed the Nifty IT index nearly 8 times, 2010, 2011, 12, 14, 16, 17, 19 and 2024, while the Nifty IT has outperformed the Nifty Bank index nearly 5 times in the last 15 years, while for these 2 years, that is 2023 and 2015, the outperformance or the shape or the index performance of the Nifty Bank and Nifty IT were quite similar. Now, it's important to know how the second half turned out to be for the Nifty Bank whenever they have outperformed the Nifty IT index for the first half of any calendar year. So they have outperformed 8 times. For the second half, if you look at the nearly 5 times, the Nifty Bank index has managed to outperform the Nifty IT index. First in 2012, as you can see, the Nifty Bank index gained nearly 57%, while the Nifty IT index was down 2%. For 2014, the Nifty Bank index has managed to gain nearly 65%, while Nifty IT was up only 80%. In 2016, the Nifty IT index was down 7.5%, while the Nifty Bank index was up 7.5%. In 2017, the Nifty IT was up just 12%, while the Nifty Bank was up around 41%, while in 2019, the Nifty IT index was up just 8%, while the Nifty Bank index, that was up around 80%. So what has played out so far for both the bank and the Nifty IT index? Now, for the bank, if you look at, it's the liquidity infusion that RBI had done, coupled with the fact that there was improving asset quality and unsecured lending related stress was also peaking out. So these factors have led to a better performance coming in from the banking index. But when it comes to IT index, it's the slowdown in the key market, that is US and Europe, coupled with the fact that there was tariff war, which also led to more uncertainty, and these two factors have led to the underperformance when it comes to the Nifty IT index. But when you look at the outlook is quite different than what has played out so far. For banking index, if you look at the next couple of quarters are expected to be weak owing to the rate cut. Analysts are expecting the net interest margin to come in on the weaker side. They also expect a pickup in credit growth only in the second half of this financial year, and they're saying that easier project financing norms will aid PSU banks and not private banks, and asset quality could improve for the banks in the second half. But when it comes to the IT index, they're expecting no material deterioration in the spending environment. Revenue growth outlook is expected to be little better than what the street was estimating earlier. There was limited room for upside surprises, but it could be still on the better side. And they're also expecting a pickup in order booking, and deal pipeline related commentary is something that will be important to watch, and they're expecting some improvement to come in on that front as well. And now if you look at the valuations are largely at par when it comes to the Nifty Bank and the Nifty IT index. The 12-month forward Nifty Bank Index price to book, if you look at, it's around 2 times, while it was around 2.1 times, that is a 12-month forward, while for the Nifty IT index, if you look at the 12-month forward valuation, stands at around 25.3 times, while the 5-year average stood at around 25.5 times. Now lastly, what is the conclusion that we are getting out of this? The conclusion is the fact that the Nifty IT index is better placed, at least in the near term, as per analysts, because the earnings could be better as compared to bank, which could see pressure on the net interest margin. However, the long-term outlook for the IT index would completely depend on what is the management commentary coming in the first quarter of FY26 earnings. Currently, only 4 stocks in the Nifty IT index have a return potential that is in the positive territory. TCS has a return potential of 11%, Oracle Finance with a return potential of 9%, while Infosys and Mphasis have a return potential of around 3.5 to 4%. But this could change based on what commentary is coming in from the management in the first quarter of FY26 earnings.
Right. Thank you so much, Soumit, for all the details. Well, Sneha, you heard Soumit, and now how are you seeing Nifty IT as a sector? And clearly, because of the earnings growth expected, Nifty IT is expected to perform better. But your view on the overall sector and your picks from the same.
Okay. So see, basically with regards to IT sector, though Somil was talking about that in the near term, the numbers might be like, a little better, but it's very difficult to say so because recently the Accenture numbers that came out and the kind of commentary that the management gave, so that clearly shows that the uncertainty is still there, though the companies have they are showing confidence that the uncertainties are manageable, but for the a new technology cycle to start, still there's a lot of time. There's a kind of disconnect between the Indian companies are talking that only the cost related deals are getting announced with while Accenture is saying that the AI related deals are getting awarded more. So somewhere there was this disconnect recently that we noticed. But having said that, what we believe is that the uncertainty is there, but then it's not completely on the on the negative side, because given the global uncertainties, we've understood that the impact of this is a little limited, and probably in few months time the clarity will emerge with regards to how the the companies are placed with regards to their discretionary spending, and thus from second half we are expecting some sort of recovery for these IT companies. So hoping for the best, and we believe that the one can really do the bottom fishing in this sector, and really hold on to the companies which are a better place in terms of earnings. And thus having said that, TCS is in the large cap space, we like TCS and HCL Tech, while in the mid cap space we like Coforge and Persistent.
Right. Well, thank you so much for that view. Moving on, KPIT Tech is down about 5% today. The street was not impressed with the company's weak guidance in its mid-quarter update. Jasmeet has more details on that.
Well, as I rightly said, KPIT is under pressure on the account of weaker management guidance, given that the global environment is still uncertain and the tariffs are not set yet. While the company also says the US and Asia market remains weak, while we see the US contributes roughly 22% of the overall revenue. The Europe looks better than the other sectors. Well, understand the deal pipelines and the conversions. Good deal pipeline, but again the conversion is slower. While there are some new projects picking up, but they're hindering the existing revenue growth given that clients have lesser budget. While the new projects in trucks and off-highways are starting to pick off. Let's understand the margin trajectory and how the management is focusing to cut the cost, while the management plans to move more towards the offshore to cut the cost, while they also see that this time there will be no one-time gain as it was in the previous quarter, while they also say they might earn less on the account of forex charges. While understanding the acquisition, how this will add benefit to the management in the coming quarter, the acquisition to be revenue assertive from the coming quarter, not this particular quarter but from the Q2, and we see that this will add roughly 4% to the overall revenue. This will also speed up management's expansion in the China segment. It'll be interesting to watch out how the stock reacts to the coming up news and how the quarter turns out for the management.
Thank you so much, Jasmeet, for all the details. Well, Sneha, any view on KPIT Tech?
KPIT Tech, I mean, few quarters there might be pressure because there is global uncertainty, so obviously that will have a big impact on the company, and on the basis of that only the management has given a weaker guidance. And secondly, it largely caters to the auto segment, wherein we are seeing some sort of moderation in terms of growth, so that will also have an impact on its overall numbers. So overall the industry is struggling with higher cost, and because of which the pressure is clearly there on the margins. So the near-term challenges will be there, though the long-term prospects are really bright. But for at least 2 to 3 quarters, we might see that the numbers are little on a weaker side.
That view, Sneha. Well, thank you so much for joining this conversation. Pleasure to have you. Now, moving on, faced with criticism over slow delivery of aircraft, defense giant HAL explained that the issue is expected to be sorted out this year. He explained the delay in aircraft delivery was due to the delay in engines from the Tejas from GE. Do listen in.
As of today, we have 6 aircraft lined up, but the engine deliveries have not happened from General Electric USA. They were to deliver the engines in 23, but even till date, we've got only 1 engine. And the technical issues are, we are told, now sorted out, and we will be getting 12 engines this year. So we will be able to deliver those 12 aircraft this financial year.
Okay.
So I think the criticism has been that the expected deliveries not happen, but notwithstanding that, I can assure you that as of today, 6 aircraft are ready. We have fitted them with Cat B engines, flown them, and they're ready. So there is no let up from our side. We are building those aircraft, getting them ready.
Well, that is all the time we have in this edition of Profit Top Trade. Stay tuned to NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
Sources in ED seeking explanation on Yuvraj Singh, Harbhajan Singh, on why they are endorsing such platforms which are banned by Government of India, and the mule account and Benami transaction, the kind of promotional payout being given to some of the media houses, the ad rates are between 50 crore to 100 crore.
What happens in reality is that under the garb of skill-based game, they end up promoting gambling only.
27,000 crore is what the tax evasion, the top popular betting apps are actually evading. Between January and March alone, they have seen 1.6 billion of traction.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on Good afternoon and welcome, folks. This is India Market Close here on NDTV Profit. I'm Harsh Saita. Let's look at how markets are doing, and the Nifty has seen a bit of a cool off from the day's highs. We're up 100 points nonetheless. We're holding 25k, so those are the positives. The Nifty Bank outperforming as well. You can see that on your screen. Let's look at it intraday as well, and we'll see that minor cool off because in the morning we were of course doing very well. In fact, we clocked the day's high somewhere at midday, and thereafter we've seen a bit of a drift downwards. We'll be curious to know as to what Kush thinks of this because he's standing by. But let's look at the heat map as well. Try and zoom in. This is the Nifty Bank for you as well. Geofin, Adani Ports, no surprise frankly, Adani Ports being there, but the top gainer on the Nifty is Adani Ports today along with Jio. Shriram Finance is the other one along with Adani Enterprises. Grasim are some of the gainers. The losers are an IndusInd which has held really well over the last few days despite the kind of volatility we've seen. ONGC is the other one, and again no surprise there. The cool off in oil prices is keeping ONGC under pressure today. Let's look at the contributors as well on the Nifty. I'm curious to know whether the heavyweights are doing anything. There you go. And HDFC Bank is, but really no meaningful or punchy contributions coming in from any of the heavyweights as we can see there. Let's look at the advanced decline overall on the index or rather on the exchange, and there you go. 540 declines to 1700 advances, so the breadth is strong, but we're seeing a bit of a taper with regard to the advances as we speak. Let's also look at the mid cap and small cap indices, and that gives us a texture as well. You're seeing a cool off on at least the mid cap index, 0.7% higher nonetheless. The small cap index as well seeing a bit of a cool off, 0.8% higher. So you're seeing a little bit of a cool off from the highs, but they are outperforming the Nifty 50 index for sure. At least that's reflecting. Now let's look at the sectors very quickly, and defense right at the bottom, 2% lower, along with oil and gas largely flat. The Nifty IT also in fact has cooled off from the day's highs. The PSU banking index though continues to roar on, 1.5% higher. Metals also up 1% or thereabouts. So those are the two top gainers. Auto also seeing some bit of zing, around 0.7% higher on the Nifty Auto, along with the Nifty Bank largely in tune. The Nifty Bank 0.5% higher. Anyway, what we're going to do is we're going to quickly look at the BSE 500 top gainers, top losers, give you a texture of what are the big gainers. The JM Financial is sitting right up on top. But along with it, you have a Swan Energy where you've had developments. You've had Garware Technical where you have an acquisition which has happened. We spoke with them as well, and we'll give you nuggets of those conversations all through the next hour and a half. KPIT Tech also down around 6%, the top loser on the BSE 500. But let's take it across to Kush, who's standing by with us ever so patiently. Kush, good afternoon. Talk to us about everything that's happening. What's the sense like? We're seeing we started with very good zing and gusto, but we've cooled off from those highs. Would you be cautious at this point, or are you ever bullish?
Hi, Harsh. First, a very good afternoon to you and to all the viewers. I remain ever bullish. However, the small caveat is, if the closing would have been above 25,250, there's still some time for it. But I don't think it will happen given the kind of options setup that we're looking at. But if the closing would have been above 25,250, the view would have been slightly different. Is that we would have completed a breakout, and if you would have been in a new territory, a new up move territory, and from there on, 25,500 and 25,700 would have been the next targets. Right now, what we are seeing is that resistance being acted, being respected right now. So I think if you have a position, it's not a bad idea to continue to hold. I wouldn't create a fresh, because what happens from here is that the resistance comes close to the 25,200, 25,250 mark, but the support is slightly a deeper place, which is 24,800. So the risk reward ratio not favorable. I will still focus on the bank Nifty, where on the upside you've got 56,800, 57,200 as your targets, 56,000 or maybe just under that comes as a good support zone. Trajectory remains bullish. So on the whole, a little more constructive on bank Nifty. However, this too could see some sideways consolidation. Also, let's not forget, we've not had any fresh positive triggers, in the sense, we've had a good, a rather good news flowing in this morning, but that is more of bad news being taken off rather than any good news flowing in from a domestic perspective, at least. So I'll wait and watch. For me, this is a hold kind of a situation, not really adding on fresh longs. As I said, 25,250 remains the mark. Closing above that will push Nifty into a new, up move, new uptrend.
Okay. Talk to us, Kush, about your top picks as well. Let's take that out of the way before I push some questions onto you.
Sure. Have to be on the long side, both of them, Hindalco and SBI Life. Both these stocks have seen, a good build-up over the last few sessions. Didn't really react much to what the rest of the market was doing. In Hindalco's case, you have a good breakout above the 650 mark, which it was resisting for the last month or so. So 680, 698 are your targets. 640 is where you place that stop loss. On the other hand, SBI Life too, very interesting moves, consolidation with the positive bias over the last 15 sessions. Today, it's given that break above the 1830 resistance zone. So on the upside, you've got 1895, 1945 as your targets. 1800 comes in as a stop loss.
Okay. Kush, what do you make of the moves in defense? Are you cautious at this point with regard to defense?
I am, Harsh. The reason is that there aren't any fresh positive big up moves in some of these. And while they have corrected to some degree, the likes of HAL, BEL, while they have corrected to some degree, from their highs, the momentum isn't just strong enough to take them past that, and they still remain at slightly elevated zones. That said, I still do like, Hindustan Aeronautics. It's close to that support zone of 4,800, 4,850. That is respected. I think it could consolidate and give you that run up close to the 5,100 mark again. But barring that, I think there are very few and far in between names which could give a very big upside from here on, in the defense space. So as long as you don't see another 5, maybe 10% kind of a correction in some of these names, the risk reward ratio will not be as favorable. So you could play the smaller trends, but for a larger trend, I think a correction of 5, maybe even 10% is due.
And Kush, curious to know your view with regard to a specific counter, JM Financial. That one is just flown off today. It's around 8% higher as we speak, despite the cool off, not seeing any cool off on that one. What's the sense like at 151 apiece?
In fact, Harsh, the move for this one started about 2 months ago. At 82, this was on a roar, and it had a tear away rally. what happened in the last few sessions is actually more of profit booking than anything else. I think it's back to its winning ways. Once it takes out this 155 mark, the rounding bottom formation from a near-term perspective will also be complete, and you're looking at targets of about 165, 180 as well. So if you have a position, you should continue to hold. Fresh positions should be added above 155.
Okay, and what do you make of this PSU banking rally, Kosh? I'm curious to know, because you've not been as bullish in that pocket, unless I'm wrong. But talk to us about what's the sense like now. It's very close to starting to go towards all-time highs. Give us a sense of what you think.
Now PSU banks become an interesting play. They had a stellar run early May, late March, late April. Then you saw a round of profit booking. Now they've corrected to all meaningful support levels. For example, if you take a Canara Bank, it did correct to its 50-day moving average and is rebounding from there. If you take a PNB, the convergence of the 50 and the 200-day moving average acted up, and then it's rebounding from those levels. So now the risk-reward ratio is favorable, and the price action is also showing an uptrend. So a Canara Bank for targets of 120 and 130, becomes an interesting play with a stop loss around the 100 mark. PNB also, this convergence of 50 and the 200-day moving average around 101 becomes your stop loss. On the way up, 111 and 115 become your targets. So some of these moves are now starting to become interesting. The correction that was due had come about, and now you're seeing that uptick. So yes, you could now positively participate in some of the PSU names as well.
Sorry, but does it have legs to touch all-time highs, the PSU banking index, on the back of the kind of move that it has already seen? Of course, all-time highs are far away, but even 52-week highs at 7,500 is a decent upside from here.
So Harsh, I think the volumes on the way up right now aren't really as big to suggest that you could reach the near-term highs that also they made. But what's happening is that the trend is starting to turn positive from the price action perspective and the volume action, which is starting to pick up, but not there to suggest that we'll cross the recent swing highs that we made. But as I said, the profit booking due, rebounding from support levels, we'll take these as first indications of a new rally beginning in some of these names.
Okay. Kush, always great getting perspective from you. I know that this was a bit of a googly, but thanks for that perspective. Give us your take with regard to a trend, Kush, because that is one stock, while may not be buzzing in trade today, but has done ever so well. It's 1% down today, but yesterday was the top gainer on the Nifty. So give us perspective on what you think of a trend.
Good moves on this one, steady upswing, but I think now it comes at the 200-day moving average, also the rounding bottom resistance around the 60 to 50 mark. So I would wait and watch. If I had a position, I would continue to hold, but any fresh position should be added once 60 to 50 is taken out. And again, here to the volumes, except for a day, about 2 sessions ago, aren't really as encouraging to suggest a very clear breakout and a sustained, uptrend in a big way. So yes, the bias remains positive. I will continue to hold, but I wouldn't suggest adding fresh positions.
Okay, and Kush, do you have a view on an Adani Ports?
So, among the entire pack, this is one stock which has actually done well. Even Adani Power, for that matter, shows strength. Right now, this has come up to the 20-day moving average resistance, 1420 being that number, not able to take out. If it crosses that and sustains above that, yes, that's when you should consider, a long trade for targets of 1490 and the stop loss around the 1360 mark. But right now, we've seen it give up, the gains that it had made during the day in terms of the highs at least. And 1420 becomes a bit of a resistance. So once it crosses that, should you consider a long trade on Adani Ports?
Okay, Kush, thanks for those views. Stay with us. What we're going to do is we're going to go across, because Ashok Leyland is one of those which is in focus. You have the company which has expanded its reach in North India by adding 50 new checkpoints. My colleague Rishabh Bhatnagar spoke to Sanjeev Kumar, who is the president of the medium and heavy vehicles division at Ashok Leyland, to understand the company's expansion plans, among, of course, other things. But listen in to a slice of that.
I'm joined by Sanjeev Kumar of Ashok Leyland. Thank you so much, sir, for taking time out. Firstly, about your announcement today, you're adding about 50 plus checkpoints in northern India. Talk to us about a couple of headwinds as well as a couple of tailwinds that you're seeing for the MHCV industry in northern India as well.
So, hi Rishabh. Let me talk about tailwinds first.
See, the government capex which started which gained momentum in Q4 of last year is something which is going to create demand in core industries like steel, cement, and it's going to help overall CV industry. We expect overall monsoon to be in a positive side, and it will definitely improve the overall agri output. As you know, all these things are positive for CV industry, and we expect CV industry to get benefited out of this. Even e-com is showing a positive trend, whereas now customers in tier 2, tier 3 cities are opting for products through e-com service, and this again leads to demand in the truck industry. Government requirements from state transport undertaking are also very encouraging, and we expect orders from majority of state transport undertakings to continue even in current financial year. Talking about headwinds, I would not call it a headwind. I would call it a temporary blip. We have seen the advent of dedicated freight corridors both in east and west, and railway is also getting very efficient. So this would definitely pose some challenge to logistic industry, and in a way it is good also, because it will help us to improve overall efficiency of the sector. This could, for some time, can take away some loads from road to railway. Otherwise, I would say that all other indicators are positive only.
All right, so that's the focus on Ashok Leyland. But just a quick look at what's happening in the markets, and you're seeing a pretty sharp come off from the highs of the day. So some pressure coming in, especially in the last half an hour, 45 minutes or so. Nifty still in positive territory, but giving up most of its gains through the day. I mean, from a day's high of 25,317, you're seeing quite a steep fall there. But what's working though are certain stocks, especially those which are seeing the reverse of the ceasefire. So look at an LT Foods this morning, for example, a KRBL. I mean, some of those stocks really firing up. All Adani Group stocks also in focus, as you've seen that reversal in stress and tensions, geopolitical tensions in West Asia. Now, to further this conversation, I'm joined now by Alok Agarwal, Head of Quant and Fund Manager at Alchemy Capital Management. Alok, great to have you in the studio. Thank you so much for joining in. Just looking at how rocky the last few days has been, and some kind of finality that one hopes for. Frankly, no one can say anything in these days. Do you think that the worst is behind us as far as the geopolitical play is concerned, and now we can start, worrying about domestic factors?
So rightly put, in fact, in the last 3 months or so, what not has happened, starting this quarter with the tariff war kind of stuff. Who would have imagined that would cool down so easily? Thereafter, the Pahalgam attack, Operation Sindoor, and this Middle East war as well seem to have started and ended in less than 2 weeks' time. We can't really be too unhappy with the way markets have reacted to it. They have been pretty resilient, pretty strong. And all this is happening at a time when corporate earnings came off better, the macro indicators are improving. So we are in a much better spot than one would imagine, given the kind of backdrop of events that have happened.
Okay, and in this space right now, if you're looking at the markets right now, obviously come off the highs of the day, do you think that underlying concern is there that you will see a sell-on rise in the market even going further? I mean, we've seen quite a sharp drop from the highs of the day today.
Yeah, regarding 1 or 2 days, they may react to the news events. Markets in general, over the medium term to long term, they try to react more to the earnings side and the growth side, which numbers are improving. In fact, if you look at the current quarter's numbers also, when we went into the quarter, the estimates weren't really high. They were barely about touching double digits. But with Nifty 500 reporting close to 11-12% earnings growth, that's pretty good. And if we leave out the top 50 companies out of the Nifty 500, the bottom 450 actually reported more than 20% growth. So you can't really be complaining too much. And all this was for the March quarter. For the economic activity indicator in the month of April, the collections of GST in the month of May, which belongs to the activity in the month of April, that was highest since October 22. So numbers are looking up. Markets want to react more to that. Possibly that's one of the reasons for the resilience of the markets.
Were you worried about the advanced tax numbers and the file drop there?
Not too much out there, but yeah, would have been happier to see a healthier growth.
Yeah.
But I would be more keen to see how the Q1 numbers pan out. The setting up looks pretty good, but yeah, looking for the Q1 numbers to be stronger.
Alok, joining in, wanting to understand, therefore, you've put into context very well in terms of your views, but put into context valuations, therefore. The large cap index not really looking particularly expensive, but not looking cheap either. The mid cap is actually more expensive than the 5-year averages. And the small cap is okay as well. So how do you rationalize that, and where do you sit with regard to?
So Harsh, looking at the P ratios, it's easier to say that yes, mid caps and small caps are at a premium, but they need to be looked in context of the earnings growth as well. So let me first compare the P ratios itself. Today Nifty would be trading at somewhere around 22 times on a 1-year forward basis, and mid and small caps, especially mid caps, are trading somewhere around 35% premium to the Nifty.
Yes.
If we look at the last 5-year averages, there are also 35% premium. So we are in and around the averages of the last 5 years.
Sure.
The peak was 70% premium. So that peak has corrected. But you look at the earnings growth as well. If I just concentrate on Nifty 50 index or Nifty 100 index, Nifty 50 index next 2 years earnings growth are in the vicinity of just about 10%. But if you look at the mid cap index or the broader market indices, the earnings growth estimates are close to high teens. So, for nearly double the kind of earnings growth projections for next 2 years, if you have to pay a 5-year average premium, will you call that too expensive? Is anybody's call.
Sure. And within that high PAT growth expectation, where do you find the opportunities? Where do they lie?
So the opportunities are lying in multiple sectors, and a lot of these sectors either are newer found sectors or they weren't doing well in the last decade. The ones which are newer found sectors, I would say the way the capital markets have bounced back, the way the travel industry in terms of be it aviation or the hotels, etc. have bounced back. The discretionary spend patterns have been changing. Say about 15 years ago, when India was under $2,000 per capita, what was discretionary is slowly becoming staple. And higher ticket discretionary items, especially after the COVID, which we saw as K-shaped recovery, that's becoming far more prevalent. So those segments are the ones that are bouncing back. Electronic manufacturing was virtually absent. So that came to the forefront. Defense was virtually absent. So these have bounced back nicely and show good growth projections.
I'm just wondering how you're looking at IT right now, Alok, because there seems to be a divided house on it. The Accenture results put a bit of fear in the way people are looking at IT, but all things considered, if you're going to see a drop in interest rates in the United States coming in the July policy, and if recession fears recede, do you think Indian IT now has a fair shot as we set up for the next result season?
Short term, it's very difficult to call. Markets tend to have bounce backs or corrections in the short term. But when we look at slightly more medium term, it's difficult to be extremely positive on IT, at least a frontline IT as of now. The earnings growth, what has been there in the past compared to what can be in the future, they don't look as exciting. So, see, it's no-brainer that given the kind of growth trajectory in the US or with the advent of AI, the kind of growth that the Indian IT saw in the last decade will be difficult to replicate in the next decade or next few years. And last 5 years and 10 years, their average as a sector, earnings growth has been just close to 10%.
Sure.
So a country which is growing at a nominal GDP of close to 11%, corporate earnings to GDP at a 17-year high, you need to have much higher growth rates to be considered to be overweight.
And then therefore, so give us some sectors and give us some themes that you're liking.
So the themes that we are liking, we do think that manufacturing as a percentage of GDP has been rising, is likely to continue. It can be multiple segments out there, but the focus areas right now are more on the defense and power side. Possibly in coming years, it will be on the railway side as well. On the consumer discretionary side, we are more on the K-shaped recovery. So be it the high-end watches, be it the jewelry side, be it the high-end car side. Those are the segments that are doing well in the travel side, as well as I mentioned on the hotels and the aviation side. The electronic manufacturing is also an important part. Who would have imagined that electronic exports would become the largest export ticket item for India? The EMS space, and in discretionary, I would also classify financial services like capital markets within the discretionary space itself.
Sure.
So those are the areas that we are more positive on, and these segments are actually going at a much, much faster pace, and that's what we want to concentrate at.
Okay, and where is the confluence between growth and value? You've spoken about a few sectors. Some sectors have good growth, some sectors are looking good in terms of value. Where are you seeing that confluence?
That's a tough choice. To get in India a good growth and good quality and at a cheap price, that's very rare. It's extremely rare. You know, if mining for gold is easier than finding those. But let me put it this way, instead of just focusing on the valuation or P ratio, focusing more on the PEG ratios would give you a much better idea.
Okay.
So given that the index is trading around 22x for a 10% growth, your market is available for 2.2x PEG ratios. If you can have much higher growth rates for a PEG ratio lesser than that, you are more or less in a territory which is called growth at a reasonable premium.
Point taken. Alok, what are you doing at this point? Are you sitting on cash? Are you going out and buying? Give us the strategy. How much of the fund has cash and how much of it is deployed? And talk to us about the last 3 months as well. What have you done in terms of deployment versus holding cash?
So as for me and as a house, we don't really believe into holding too much of cash.
Okay.
So we remain deployed. I'll share an interesting piece of data. A lot of such data have been shared. Last 20 years, we all say around 14-15% market returns have been there. But if you miss out just 2 days per year, which are the best days, sort of 5,000 days you are participating in, say 49-60 days, yet your returns could come down from 14-15% to about 5%. So it's a futile exercise in our view to really jump and say that what's going to happen and when the markets are going to rise and fall. Our expertise are more into finding which sectors and stocks are doing better and which are in a not so favorable position. So we believe into deploying the funds that we have. So we are majorly deploying, not taking cash calls.
Okay.
Focus areas are growth areas. So we are GARP investors. And for GARP, the first word is growth.
Yes.
And as I said, you know, if the country's nominal GDP grows at around 11% and corporate earnings is rising at a faster pace, your portfolio corporate profit also needs to rise at a faster pace than that. So that's the area that we look at.
For viewers, the perspective, GARP is growth at the right price. And Alok has been very kind in defining what the right price is a couple of times, including the PEG ratio, which he said that the Nifty PEG ratio is 2.2. Anything below that, with a decent kind of growth clip, visibility over the next 2 to 3 years could well be your pick. So thanks so much, Alok, for coming in.
Thank you.
Speaking with us. Okay, let's move on though. The Heavy Industries Ministry is planning to offer subsidies through competitive bidding for companies that will manufacture rare earth magnets in India. Officials said that PSU Indian Rare Earth Limited already has around 1,500 tons of rare earth oxides. The raw material for these magnets is that. Listen in as we slip into a very short break.
Regarding that, actually, continuous meeting is going on. Ultimate decision we have not taken, but we are working out. Hyderabad, one company, they are showing interest. They are promised that they will deliver 500 ton by this year end, December.
So essentially that the global prices of oxides, rare earth oxides and rare earth magnets on the Shanghai Stock Exchange, if you go and visit it, you will find that the difference in the price of the oxide and magnet is minimal. It is hardly say 5%. So there is a feeling that since China has a monopoly on it, it keeps the price of magnets very low. So the level of this incentive, so what is required is that if you start from oxide and reach a magnet, you have to spend some money in between. So quantum of that expenditure which companies have to invest from oxide to magnet, how much government support is needed, that is to be worked out.
Processing will be subsidized basically.
Yes, essentially the magnet made in India must be competitive with magnet made anywhere in the world. So Indian Rare Earths Limited is a company under the Ministry of Atomic Energy. So they are the sole repository of rare earths in India. They have enough rare earths to make 1,500 tons of magnets every year. So that is source one. Honorable Minister had a meeting with Mining Minister. So there are also efforts going on to, some companies are making efforts to bring rare earths from outside the country.
So the subsidies will be for processing and not for sourcing the rare earths?
Right now, whatever rare earths we have to convert into magnet.
Sources in ED seeking explanation on Yuvraj Singh, Harbhajan Singh on why they are endorsing such platforms which are banned by Government of India, and the mule account and Benami transaction, the kind of promotional payout being given to some of the media houses, the ad rates are between 50 crore to 100 crore.
What happens in reality is that under the garb of skill-based game, they end up promoting gambling only.
27,000 crore is what the tax evasion, the top popular betting apps are actually evading. Between January and March alone, they have seen 1.6 billion of traction.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
welcome back. You're watching India Market Close, and some improvement, some perking up in the markets were completely flat, actually, given up all its gains. But you're seeing some improvement in the last few minutes or so. Nevertheless, no denying that most of the gains of the day have been given up, not been able to stand up for it. And Nifty PSU Bank doing okay, telecom stocks doing okay, but on the whole, you're not seeing markets really holding up. This is a time though for stock picking, and now time for our segment, which you should absolutely not miss no matter what you're doing. Samit Sarkar, have you seen anyone boosting your segment as much as I do?
No, well, okay, so I'll focus on the stocks that are in focus. Firstly, it's Poonawalla Fincorp. The dealers are indicating that the old promoter, that is Mayank Poddar, he holds some stake in the company, around 2.12% stake, and this block is likely to come into the market anytime soon. Most likely it will be a cleanup trade, so the entire 2.12% stake would be coming in for the block. So keep an eye out for Poonawalla Fincorp here. Then there is ASK Automotive, HUDCO, and IndiaMart Intermesh. For all these three companies, dealers are indicating that large HNIs have started to accumulate these three counters. Most likely it might be for long-term perspective is what dealers are indicating. When it comes to Cummins, now the stock has been buzzing into it, it has been gaining. Dealers are indicating that these gains are largely on the back of the fact that the company might announce a large order win anytime soon. When it comes to CG Power, dealers believe that the company will be launching its fundraise via QIP anytime soon. Now, earlier they had taken an approval to raise around 3,000 crore rupees. So most likely the deal size is expected to be around that amount. But the QIP is expected to be launched anytime soon. When it comes to Taj GVK, dealers indicate that there's a buzz of a potential block deal that could happen in this counter. So keep an eye out for Taj GVK. The seller is not known yet, as of now for this counter. For Yathartha Hospital, as per dealer checks, the promoter of the company might be buying shares from the open market. That's what dealers are indicating when it comes to Yathartha Hospital. And lastly, for JM Financial, that stock had perked up in trade. It was up around 10% at one point of time. Dealers are indicating that the buzz on the street is that the company might look to sell its non-core business, that is the lending business, because they are more focusing on the core business, that is the fee-based income, where they have the wealth management business, and that has been doing good for them, and they aim to focus more on that business and exit the non-core business, and that is the reason why the stock had perked up around 10% in trade today.
I definitely think that buzz as far as JM Financials is concerned. In fact, let me welcome G. Chokalingam as well to our conversation. Thank you for that. As always, Samit, we'll see you back 8:45 a.m. tomorrow. Chokha, let me talk about JM Financials and some of the capital market plays. A favorite story, on again, off again. Do you see a comeback for some of these, and JM Financials specifically something you're tracking?
Yeah, definitely. One can consider buying it. We looked at it. There are many sums to the total business, including the investment banking. And, I am quite bullish on medium to long-term prospects of the entire capital market itself. So these intermediaries should be beneficiary of, the long-term, very positive outlook for Indian capital markets.
Right, so that's the word coming in with regards to capital marketplace. A few of the other names that Samit was mentioning is with regards to Ask Automotive, HUDCO and IndiaMart. In fact, Ask Automotive would be one of the key beneficiaries as well with regards to two-wheeler ABS systems Co, and that's the notification that the government recently came up with. And you're seeing some smart moves on this one. Kush, between Ask Automotive, HUDCO and IndiaMart, where would your bets be?
So I would prefer Ask Automotives and then HUDCO. If you see the moves on Ask Automotives, very encouraging. Even then in the last 5 sessions where there was so much turmoil and mixed news flow, this stock has actually held its ground, gained ground in fact, and has had volumes seen move higher. So I think for targets of about 505 and 525, this looks set for a good up move. HUDCO also shaping up well. It's right now into a bit of a consolidation zone. But once past this 235 mark and closing above that, actually it could push it to 250 and much higher levels. As far as the the IndiaMart Intermesh story goes, this one's been steadily rising, but it's had its fair share of volatility. So I'll be a little watchful on this. Plus, there is a negative RSI divergence setting up. So just a little caution. But other than that, the medium-term trend on this one too has been bullish. If I were to pick, it would be Ask Automotive and HUDCO.
Okay, so that's with regards to Ask Automotive and IndiaMart, where Kush has his clear bets coming in there. Hospitality is another space which has been doing the rounds. Though you're talking about a buzz of a block deal that could be happening in a Taj GVK. Mr. Chokalingam, with regards to hospitality, what stock would you look at? Because you have Indian hotels as well, where majority of them have bullish calls versus the others, but good growth coming in a few of the other recent listings as well. Your top pick.
Among all this, Taj GVK could be a best stock. If you look at the EV to EBITDA, it is one of the cheapest. And not only that, it's a joint venture between Indian Hotel and GVK Group. And we all know that many business of GVK Group are having some pressure in terms of leveraging. So, tactically, it is possible for Taj GVK to get re-rated. Apart from that, the stock also has fallen a lot. So at least around 450, 460 should be the very, very most conservative target price for Taj GVK.
Okay, I'm wondering how you're feeling about Interglobe. That whole tourism space, and BSE actually has a tourism index as well, which is doing fine today. But that whole tourism space has been muted in light of a lot of geopolitical issues. Then you had Air India situation and that very unfortunate crash at Operation Sindhu. Then you had this war, 12-day war going on in West Asia. Concerns there. Do you think the turnaround that we're seeing and the coming off of crude prices is something that is going to boost tourism? Would you look, say, at an Interglobe, Lemon Tree and an IHCL, those categories once again?
Definitely, among all names you have mentioned, I would prefer Interglobe only. Yes, I agree with you. There is a fear in the minds of many public in freely traveling, particularly abroad. But people will forget it because at the end of the day, we all know that the probability of accident in the flight is the least compared to all other modes of transportation in the world. So people will forget. And here, the oil price has crashed. In just 4 days, oil price is down 10%. Once again, it is very weak, which is favorable. And again, the competitors would find it difficult to compete with the leaders. But not only aviation, any business today, the size is the king now. So considering all that, I would go after Interglobe.
Okay. So Interglobe, even at current levels, Kush is something that you see as a buy at 143 rupees up today.
So, well, I think I'd wait and watch a little, because the 5,700 mark, has proved to be a bit of a resistance. So if you're looking for a near-term trade, then you might have to just wait and see this one being taken out. But other than that, if you've got a 3 to 6 month kind of a horizon, then not a bad idea. You could consider it had that dip that was much anticipated, much needed as well, and has seen a good rebound. Just on the point of the hospitality sector, I think Sami Hotels is one stock that is actually looking well. A lot of these names have been consolidating without any major moves, but Sami Hotels has had a good run, still respecting the 20-day moving average. So Interglobe, if you have, you continue to hold, but if you want to add, you could look at something like a Sami Hotels.
Sami Hotels is the other one we're looking at right now. I was just here looking at market shares for Indian aviation players. And the fact is that one way or the other, Interglobe comes out on top, because you even have Air India cutting down its domestic as well as international flights.
And with that, the boost that Air India is facing right now, the clear beneficiary becomes Indigo, not only from a domestic perspective, but also from an international perspective. SpiceJet right now is nowhere in the picture if you have to compare from a market share perspective. And number two, from a stock perspective, if you have to look at investments as well, I think the entire gung-ho for analysts is a Indigo versus a SpiceJet.
Yeah, I mean, in market share, SpiceJet not quite there.
That's what I'm saying. So exactly. Yeah. So, I mean, even from investments, that's what the analysts are alluding to right now.
Yeah, let's pull up the SpiceJet stock as well. The numbers was something, okay, also 2.5% up.
I mean, that's on crude, right?
Yeah, on crude, and also you recall their numbers weren't half bad. They look like they're, turning around. But nevertheless, let's get to the stock of the day, and that's clearly Bajaj Consumer Care, seeing a fantastic buzz because of a management change. Mahima joining us for more details. Mahima, what's going on?
Right. So, as you rightly mentioned, we're seeing the up move in the stock. In fact, it touched an intraday high of 19% in trade today. And this is after a long time that a stock like Bajaj Consumer is seeing significant amount of moves. It's appointed Naveen Pandey as Managing Director for the next 5 years from 1st of July. Now, Mr. Pandey has had 2 decades of experience, especially in the consumption space. And this is after Mr. Jaideep Nandi, former MD, who has completed his 5-year tenure. Now, in terms of how the stock is fared so far, today, as I mentioned earlier, it's touched an intraday high of almost 19%. The stock rebounded after an 8-day straight decline. 1 month, the stock is up 14%. 6 months, the stock is down, in fact, 1%. And 1 year, the stock is down around 25%. So, today's up moves are clearly standing out for the counter. In terms of volumes as well, the volumes are trading at 37 times its 30-day average. So, that's also a significant amount of volumes that are coming in for the counter. In terms of valuations, interesting to see valuations here because at 12 months trailing P, it stands at around 22 times, and 2026 estimates suggest a P of 14 times. So, this actually makes Bajaj Consumer the cheapest stock in the entire FMCG staples pack per se. So, that is an interesting one here. In terms of what analysts are recommending, there are 8 buy calls right now, 1 hold and 1 sell call with a return potential of roughly 8% as per Bloomberg estimates. And lastly, in terms of the guidance that the management gave during the Q4 FY25 con call, they've said that they're expecting margin improvement going ahead. Earlier, they had mentioned a band of 16 to 18%, but they're expecting margins to go beyond that in FY26. Plus, they're looking to add more than 1 lakh retailers to overall expand the distribution space as well. And management is highly optimistic about demand also recovering from Q2 of FY26. So, this is the overall view of where Bajaj Consumer stands and why it's making such significant moves in trade today.
Yeah, but significant is an understatement. 18% up through the day because of new management.
And last 8 trading sessions, actually, Tamanna, if you go to see, the stock was an absolute downer. If you see the trend, and that's the reason why it's such a sharp catch-up that is coming in here. Secondly, with a renewed management, probably there could be a change in strategy that the street is anticipating, and that could be one of the reasons why you're seeing this kind of a sharp uptick in terms of the stock. But an interesting move. There you go. 1 month, if you see, 15 to 16% is the move, and majority of it has come in right now.
That chart tells the story. Let's go back to that. That spike, that 1 month chart at the end, that spike tells the story. So, we're really excited to speak to Naveen Pandey when he comes in and talks to us here at NDTV Profit and what his plans are for Bajaj Consumer. But G. Chokalingam, is this a stock that you're tracking and you like?
Yeah, I have analyzed that stock. As your colleague rightly said, it is one of the cheapest stocks. So therefore, one can continue to hold. But I don't think it can give a phenomenal return from here. But of course, 5-10% upside is possible because it is one of the cheapest. But the problem for this company is that if you look at the revenue before COVID and now FY25, there has not been much growth. That is one major problem. That revenue used to be around 935 crore in FY19, which has grown to only 1,000 crore in FY25. The second concern is that the margin has consistently come down from FY19 to FY25. But still, it's a hold. One can definitely hope for at least another 5 to 10% return from the stock, just because it is the cheapest, consumer goods stock.
Right, so that's with consumption. Bajaj Consumer, an interesting name, and as Choka has been mentioning, not a major upside that you could see from current levels as well, and I don't think so a technical perspective is warranted after 18% move in a single day. But moving on, defense play is back in action. In fact, what's interesting over here is with everything going slightly, silent in terms of the war zones, you have the defense play, which is actually down in trade. You're seeing profit booking that's coming in on defense players as well. Though your brokerages are bullish on the pack, you're expecting the geopolitical uncertainties to aid the pack further, and that's what brokerages are alluding to. Anushi is joining us with more details on it as to what brokerages make out of it and whether this is an opportunity to buy the defense pack. Anushi, over to you.
So what we are seeing for the defense pack is some interesting moves. It's not just a 1 month or a 2 month scenario that we are looking at. Even in the last 6 months, Nifty India Defense Index has been up over 45%. Now we have 2 interesting notes coming out. Firstly, JP Morgan just specifically talking about Bharat Electronics, where they have maintained their overweight rating, in fact hiking the target price to 490 as compared to 445, which implies about a 16% of an upside. They see that the steady stream of orders and elevated geopolitical risk has led to the outperformance that we are looking at. Even yesterday, the company came out with a couple of more additional orders, so it has remained in focus on that. Even emergency procurement orders are on the anvil, so that is something that we should be watching out for. And the diversified business should lead to consistent outperformance for Bharat Electronics. Civilian and export opportunities provide optionality going forward for the business. So that's JP Morgan on Bharat Electronics. But Jefferies has a more broader view in terms of where the defense index is concerned. Now, India's defense spends, if we see, they have seen about a 25% of a growth in March 2025, and they are in line to achieve the FY25 revised estimate of a 3% of a growth. In fact, if you look at the FY26 defense capex, that has started also on a stronger note with about 122% of an increase in April is what we are looking at. So this is against the 13% of an overall increase expected for the year, especially post Operation Sindoor in May 2025. Government is now focusing on putting India first and is targeting for higher export opportunities as well. If you look at the export data so far, it's seen about a 10% of the rupees 30,000 crore of FY26 target. Do note the FY29 target remains 50,000 crore. Now PSUs continue to remain dominant in the defense space, and private share is also seeing an uptick. The preferred picks for Jefferies remain HAL, Hindustan Aeronautics, Data Patterns, and followed by Bharat Electronics. So Bharat Electronics specifically emphasized in both of these notes that we are looking at. So overall defense back in focus, and Bharat Electronics is something that we should be watching out for.
Thank you, Anushi, for that. In fact, we also spoke to Amit Mahajan at Paras Defense. Let's quickly listen to what he has to say in terms of the order book picture. What's the revenue visibility looking like?
So currently the order book is in excess of 900 crores. And when I'm looking at just the order book, I'm also looking at the opportunities that are in front of me, which are in excess of 2,000 crores. So what I'm seeing is all of these 2,000 crores, some of that will come sooner than later, and the remaining would come for sure. So all of this will phase out. What if I expect something to come after a year will come before that. So this is the momentum that is there in the industry, and I think we are having a positive problem that we need to keep ourselves geared up for such opportunities.
Okay, what's happening with defense today is very, very interesting because it's a complete reverse trade. Paras Defense, of course, 4% down, so is the entire pack. Kush, I'm wondering if this is an opportunity for anyone who wants to really pick up here. Look at a BEML, for example. Look at Garden Reach. You're seeing this kind of a plunge after a while.
I think it will not be a bad idea to perhaps wait some more. I was listening to the comments on BEL. In fact, if you ask me, this is the one that actually needs to be avoided at the current levels, at any cost. In fact, if you have a position, it's not a bad idea to book some profits, sit on the sidelines with a BEL. Overheated on daily time frame, weekly time frame. The risk reward ratio is just not attractive. Some of these other names have corrected, as you rightly said. GRSE is taking a knock today, a bit on HAL as well, but BEL just hasn't corrected at all. So I think I will wait and watch on some of these names. Another maybe 2 to 5% or maybe even deeper as well. A cut on these names will actually make them more attractive. So wait and watch. I wouldn't be in a rush to buy. That said, HL is something that is on the radar. It's taking support near the 48-50 mark. If it does hold on, then could make for a good range play where on the upside 5,000, 5,050 becomes the target. But if you're looking for that next leg of big up move in this entire sector, I think you should wait it out. There is some more downside left, in some of these stocks. That's what at least the chart suggests.
Do you agree with that, G. Chokalingam? Some more downside left for defense story, and I'm telling you, this is one story that has been written off I don't know how many times, but somehow has a way of perking back. Do you think that for now it is going to be a pause?
I think so. We are talking of all these stocks which are trading at 42 ATP, if not more. And second, so far in the last 3 years, starting from February 2022, 6 nations had involved in the conflict. And majority of the nations are also rushing back to ceasefire. I believe I am a strong believer in economics. So I believe the wants have increased, and public in many countries are not interested in sacrificing life for sake of war. So there will be a lot of pressure to go for ceasefire and bring peace in the world. Apart from that, the valuation also, as I mentioned, do not give me much comfort. So therefore, I would suggest a lot of caution while buying these stocks at the current valuations.
Right. So that's with regards to defense. In fact, you have two new entrants that are coming in the defense space. That is Swan Energy and Balu Forge. In fact, they've announced a pact to tap into high growth segments, including defense, aerospace, railways, and nuclear industries. Both the stocks are seeing some smart moves. Puneet joins us with more details.
Well, Swan Energy as well as Balu Forge, both listed companies, are in focus today after both the companies have actually formed a JV back in April, and now they've come out with some more details on this. So essentially, Swan holds roughly 60% stake in the joint venture, while Balu Forge holds the rest 40%. The JV, as I mentioned, was incorporated in April of 2025, so it does not have any kind of revenue track record, but it is to explore the potential for supply of products as well as services that are largely having scope in sectors like defense, railways, aerospace as well as nuclear industries. That's what the company has mentioned in its exchange filing today. What's also interesting is that while something like a Balu Forge has been increasing its capacity into forging as well, these would be related industries which the other companies like Bharat Forge have already entered into, like defense. So this joint venture could have a multiple scope for new products amongst different industries as well, and that will be one of the key focus areas going forward. But for now, they just specifically mentioned stake as well as the specific industries they might be looking at, and it's one of the key monitorables going into the Q1 results as well for the company.
Thanks, Puneet, for that. Mr. Chokalingam, a quick one, and a new entrant coming in. You have Swan Energy as well as Balu Forge. Do you think you would put your bets on both these names?
No, I mean, forging for defense, I don't think deserves 40 PE. So I would stay away from both.
Right. So stay away from Balu Forge and Swan Energy with their entry into the defense, aerospace and railway territory as well. But thank you, Kush, so much for joining us on the show. Mr. Choka, stay with us. We'll quickly slip into a short break. On the other side, we'll get you the top buy today, sell tomorrow picks as well.
Sources in ED seeking explanation on Yuvraj Singh, Harbhajan Singh, on why they are endorsing such platforms which are banned by Government of India, and the mule account and Benami transaction, the kind of promotional payout being given to some of the media houses, the ad rates are between 50 crore to 100 crore.
What happens in reality is that under the garb of skill-based game, they end up promoting gambling only.
27,000 crore is what the tax evasion, the top popular betting apps are actually evading. Between January and March alone, they have seen 1.6 billion of traction.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make in our categories that we have been supplying to our defense forces some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in?
Welcome back. You're watching India Market Close. Well, market's in a bit of a mood. The euphoria coming off, definitely. But one stock, well, there you go. It means again dipping into completely flat territory on the Nifty. And I wonder if we manage to stay above in the green as we're closing in. So some stress over there. One stock which is definitely pulling the street down, or at least its sector down, is KPIT. KPIT has been in focus because of a brokerage report actually, which quotes the company's mid-quarter report in that sense, and their sense of what's happening. They're saying they're seeing sluggish demand environment, delays in finalizing deals, which is why you're seeing that 6% knock on KPIT today, although very close to the day's lows. Should investors really be worried? What's the bear case, of course, and what's the bull case for KPIT? Jasmeet joining in for more. Yes, Jasmeet.
Well, right, the stock is down 6% today, and let's do an analysis and understand what's the bull and what's the bear. First we have is the company had a strong order pipeline back in FY25 with $925 million of deal, while the latest deal includes the Mercedes deal which was signed in the month of December. Then the bear case is the deal pickup is slower. That's what management is expecting in the latest breakdown of the quarter. The next case we have is major revenue contribution is seen from the Europe. While the Europe looks better, it contributes most of the revenue, that's almost 48%, but US and Asia remain sluggish. There's weak demand and weak turnaround for the revenue, where US contributes roughly 22% of the revenue. The next we have is management sees some new project truck in and slow projects are ramping up, but on the other hand, the new projects are part cannibalizing the revenue. What this means is, if there is a new additional source of revenue management creating for themselves and the clients are focusing on that source compared to the last one as they have limited budget. The next bull which we have is the acquisition of the latest entity, Caresoft, will add approximately 4% of the upcoming revenue, which has not yet been added in the Q1, but as per Q2 management sees this will add the 4%, while the bear case for this is the management has guided a negative add-on to the other income given the forex charges. The management roughly deals about 96 to 97% of its revenue in foreign currencies. That's why they see a forex charge given the geopolitical tension.
Right. Thank you so much, Jasmeet, for the same. So it's an interesting stock to watch out for, because in the last couple of days, we were talking about KPIT as being one of the key beneficiaries, along with the Ask Automotive that we spoke about in terms of two-wheelers anti-brake system, which they're thinking of implementing from Jan 2026. But the outlook that the company has given seems to be slightly grim, and that's the reason why you're seeing that kind of pressure. In fact, we also spoke to Warren Harris, MD and CEO at Tata Technologies, and this has been an exclusive interaction that the management had with NDTV Profit, where he's actually echoing KPIT Tech's mid-quarter update. Let's quickly listen to that as well.
no two companies are alike, but one of your peer sets in their mid-quarter update overnight has mentioned a few things about how deal ramp-ups are not happening in the same pace as they would have anticipated. I would reckon that deal closures or the conversations around deals as well might be slow. Now, I'm not saying that you would suffer or you would go through the same thing, but I'm trying to understand that are you facing for the near term those issues as well, that ramp-ups are not happening at the pace that you may have anticipated at the start of the calendar?
Yeah, I would echo the commentary that's come from one of our competitors. Somewhat counterintuitively, we expected a significant amount of deal signings this quarter because the delays in decision making last year, in part because of the election cycle in the US and the tapering of EV incentives in Europe. I think many of our customers were delaying decisions because of that, and there was a pent up demand to invest in new product, and we were planning very much to intersect with that.
Okay, Milan Vaishnav joins in as well this afternoon. Milan, hi, great to have you on the show as always. First, let's just get your take on the indices. Clearly giving up strength, seem to get even as high as 25,300 quite effortlessly, and then just completely collapsing under the weight of that boost. Where are you seeing the Nifty right now?
Yes, good afternoon. Excuse me. Actually, I'm seeing two distinct possibilities in the markets. I believe that as of now, Nifty has refused to break above that 1.5 month long trading range that it has created, which has 25, 100, 150 zone as a resistance. It has refused to show a clear breakout once again, and right now it stays in a range. But I feel that this is more of expiry-led moves that are happening, because I have consistently seen incremental calls being written at 25,100, 150, 200 odd levels. And therefore, I believe that until this expiry is out of the way, we might see the Nifty continuing to struggle to achieve a clean breakout. That is point one. Point number two, I'm also seeing incremental put writing that is being done in 24,900, 950, 25,000 levels. So we may not see any major downsides below 25,000 as well. So I believe that over the next two sessions, until we are past the expiry, Nifty will fairly stay in a range, but will trade with an underlying positive bias. And eventually, I expect 25,100, 150 zone will be taken out on the upside.
Okay, so that's in terms of Nifty. Milan, very quickly, how are you looking at Bank Nifty? Because, we were just looking at the kind of trends you're seeing with regards to Nifty IT as well as Bank Nifty, absolutely divergent. However, the holding in Bank Nifty from mutual funds and FIs is not that strong to see this kind of an up move right now. What should the strategy be with Bank Nifty and your top picks?
Bank Nifty, I would be focusing on 56,000 level, because that was the level above which Bank Nifty formed its high point, and eventually the breakout subsequently failed, with the Nifty Bank returning below 56,000 once again. So right now, purely from a technical standpoint, one can fairly believe that since Nifty Bank has gone above 56,000 levels, it is attempting to resume its up move, and the attempt to break above 56,000 will remain in place so long as it keeps its head above 56,000 levels. So I believe that more or less both Nifty and Bank Nifty should continue to consolidate near their breakout levels. That is 25,100, 150 for Nifty, and 56,000, 56,200 for Nifty Bank until this expiry once again. And once we are beyond that, we could see some uptrend picking up. But this comes with a caveat that in event of Nifty Bank slipping below 56,000 and Nifty slipping below 25,000, we would be once again be back inside that broad but quite well-defined range that Nifty and Bank Nifty has formed for themselves.
What are the stocks that you're looking at this afternoon?
I'm getting I'm getting a bit defensive here. I would be looking at Apollo Hospitals that could be bought above 7050 with a target of 7550, and the protective stop could be put at 6850. The second pick that I'm looking at is Mahindra & Mahindra M&M. We can buy that above 3200. The stock is attempting to break above a very broad but very clearly defined multi-month trading range. So above 3200 we can buy that. That would be a fresh breakout. The target we can set for it would be around 3450, and stop loss could be placed at 3050.
M&M, what about a Tata Motors? How are you looking at a Tata Motors right now?
Yes, Tata Motors can also be bought, but from technical standpoint, M&M is far better placed. But Tata Motors is also a buy in my opinion.
Chokha, if you were looking at Tata Motors, Maruti, M&M, Hyundai, let's look at those 4 PV plays with monsoon seeming like they're on track, some demand expected to increase as well. What would be your pecking order here?
M&M. Among all these 4, last nearly 4-5 months, I've been consistently saying sell other stocks and buy M&M, because M&M is beating the competitor in all business verticals, whether it is a tractor or whether SUV. It's doing phenomenally well. And on the other hand, other players like Maruti, Hyundai, they have problems in passenger vehicle. The industry itself is going through a lot of pressure, and the commercial vehicle segment is also going through problem. And for Tata Motor, added problem is the JLR, some pressure on the business outside India. So therefore, the best stock in this pack is M&M, and to some extent, one can in the picking order consider Maruti.
So M&M tops the list over here. An interesting conversation I had in one of the previous shows as well, Tabanna, was that in terms of Tata Motors, no one is looking at buying the Harrier right now because the street is watching out for the topmost variant that is going to be launched. And the analyst was of the opinion that they're not even looking at buying the stock right now. So no buyers in terms of the stock or for the new Harrier that has been launched so far.
Yeah, I think the all-drive variant is what everyone's waiting for. But some interesting commentary coming in from a Tata Motors conference today as well, where they're meeting up with the team, and our colleague Puneet is there, so we'll get a report up from him shortly on what has been cooking there. Now, Macquarie has a positive view of the Indian cement sector, expecting a demand-led recovery to drive earnings. Anushi joining in with details of what Macquarie is saying on cement.
Hey, so it's a demand-led price hikes that we are looking at for the cement sector. Now, what the story building up here is that we are seeing good demand, which should support the price hikes going forward. Now, this is the view from Macquarie that we are looking at. In fact, they are seeing that the demand momentum should drive cement prices following a muted FY25 outlook that we had seen in terms of where cement prices were concerned. Cement prices increases have been started noticing from H2 of FY25 lows, and improved demand outlook versus FY25 augurs well for earnings growth as well. In fact, in terms of the capacity consolidation and cost focus also, which has been the 2 focus areas, will drive the medium term's earning growth as well. Now, over here, Macquarie has stated that the preferred companies remain in that domain wherein the diversified geographical mix, it has a more diversified geographical mix along with higher cost focus. Just according to that, we have a couple of companies in focus. Firstly, for Ultratech, they've maintained an outperform rating, hiking the target price to 13,008 now. For Shree Cement, they've maintained a neutral rating, hiking the target price to 28,630 as compared to 26,778. For Ambuja, again, outperform rating that we are seeing with the target price of 608. ACC, along with that, maintaining an outperform rating, but they've cut the target price to 2,170. For Ramco, we are seeing they've maintained an underperform rating. For Dalmia, they have maintained an outperform rating, again hiking the target price to 2,353. So this is the overall demand picture that is going to support the price hikes, which could lead to the earning growth trajectory going forward for these cement companies out there, and these are some of their ratings that are there.
Okay. So cement, cement again, and we had this conversation this morning as well, Hiral. The monsoon has sort of dampened the outlook for cement as well, and no clarity yet on whether they will end up increasing prices or not.
And then it's going to be very brave of them if they'll end up increasing prices in a season which is a downer, right? So it's going to be an interesting mix if they increase prices at this current juncture, if they do, whether there will be takers or not, or whether there will be retaliation from the dealers is something that needs, we need to wait and watch and see. But probably Mr. Chokalingam will tell us whether he is a buyer of any of the cement stories right now with that increase in target price that we are seeing from a Macquarie.
Yeah, certainly the cement industry is going through cyclical downturn, no doubt, in the recent time, and volume growth also in poor single digit. On top of it, now you have a monsoon which started this month. However, many stocks have corrected a lot. And second, this business cycle of cement industry also assures you a solid recovery after some time. So I believe, beyond September, definitely the outlook would turn positive once monsoon gets over. And one can consider, stocks like ACC. I looked at the fundamentals. Stock has crashed a lot. That one can consider buying. And in the small cap, one can consider KCP Limited. It's a diversified company with a cement business and also a highly profitable sugar business in Vietnam and a lot of cash on the book. And just a disclosure, we also personally invested after recommending to our clients in KCP.
KCP in focus as well. All right. Meanwhile, some flashes on your screen. Railways have hiked fares, and this is like after a while that I've seen new fares or a hiked fare from Railways. 1st July 2025 is when this is going to happen. There's no effect on local and monthly passes as of now. But it'll, those monthly season tickets will also still be available at the old rates. But quite bold, not seen a fare hike in a while from any sort of authority that has come in. Just want to see what IRCTC is doing, what Titagarh is doing. No direct impact as such, but let's just take a look at some of those stocks. IRCTC is not doing much at all. Titagarh, Jupiter are just a couple of the others that we can quickly check if we can move those on. All right, RVNL on your screen as well. Titagarh about 5% up in trade. But, so Railway is doing okay today. Railway is doing okay, Defence is not. Defence is having a bad day, PSU banks are doing fine. Pharma is another space which has focus. So Wegovy is here. It's a once a week injectable weight loss breakthrough. Globally, it's now in India. It promises effective obesity treatment with multiple dosage options and widespread pharmacy availability by the end of the month, marking a new era in health management, says the company. They had a press conference today, and my colleague Agni Dev brings us all the key insights.
Big Pharma is back in India with a cure for your obesity, but only if you're rich enough. Novo Nordisk has just launched Wegovy, a semaglutide brand which claims to cure your obesity and reduce your weight by up to 20% if you take the doses right. Now, the doses start with a 0.25 milligram dosage for a month, which will cost you around 17,345 rupees. The next dosage of 0.5 milligrams a month will again cost you will cost you the same, actually 17,345 rupees, and the next dose of 1 milligram will be the same. But from the next month the prices go up. So 1.7 milligram, which is the fourth pen that you see here, costs 24,280 rupees, and the last dose, which is the 2.4 milligram, costs 26,000 rupees. So if you're willing to dish out that amount, then you can also lose 20% of your weight. Now, losing body weight also comes with its added advantages. The risk for your cardio conditions go down, which is conditions like non-fatal heart attacks, heart conditions and all will also be reduced. Now, Wegovy's entry into India comes at a point where there is a very large addressable market. 24 crore Indians suffer from obesity, and the obesity drug market is currently valued at just under 200 million. And globally, the market is valued at around $5 billion. Now, Wegovy's entry is a bit late compared to what its rival Eli Lilly has done. 3 months ago, Eli Lilly launched Mounjaro, another obesity control medication, which is priced slightly lower to what Wegovy is offering. So Mounjaro, remember, is priced at around rupees 14,000 to 17,000 a month. But Wegovy's entry is also at a time when semaglutide, which is the generic for Wegovy, is bound to lose its patent. Now, this patent will be lost somewhere around March 2026, and we already know that big Indian pharma companies are already racing to make their own generics. Now, the management has talked to us, and they have indicated that competition is not something that they are really concerned about. It's about addressing a market together with all the involved players. But how is this supposed to play out for Wegovy and Novo Nordisk India in general? Well, only time will tell.
The pricing for the pen, we have what we really call is the smart pricing, 0.25, 0.5 and 1 milligram. They are priced at 17,345, and that means that weekly treatment for all the 3 stents is actually 4,336. And that is actually very, very good, because patients start with a dose of 0.25, they escalate to 0.5, and then they go for 1 milligram. Then we have got 1.7, which is 24,280, and then we have got 2.4, which is also rightly priced, 26,015. So it is priced very smartly right in the beginning, so that patients can start and they can escalate without having a hole in their pocket.
Hole in the pocket. I like the way, Hiral, that Agni started that story as well. He said, you can become 20% lighter if you are rich.
Rich, I know. 26,000 is on the higher side if you have to look at the price band, because I was just looking at the other rates. Mounjaro is 14 to 17,000 is the range. You're talking about, the problem with Wegovy was the range that we were expecting earlier was somewhere in that 17,000 kind of a bracket. That's what the street was saying.
For a month's dose?
Almost a month's dose is what you're looking at.
So just look at what people pay for a nutritionist, a gym, and all kinds of weight loss cures. So I think
but the cheapest of the lot is going to be a Lira Fit, because we've assumed a 1.2 mg for a Lira Fit, which is a Glenmark product, is around 5,200. And if you take that into consideration, we've assumed 100 rupees per 1.2 mg, what they had quoted earlier. So for a month, 5,500, 6,000 is the calculation that it comes up to. So I think Glenmark will be the one which is the cheapest.
It's not even a basic gym membership in Bombay City, which, you still have to go to the gym after taking this. Yes. By the way, if you've done research on it, it's not just that you take this and then, you sit.
Yeah, but there are some bit of side effects as well for non-diabetes people. So I think that's something that
these are prescription drugs. These are prescription drugs, so that we have to make clear. But, having said that, it's the hottest trend in the pharmaceutical space, and our company is always looked at with where they are in the pipeline. So, just want to take that detail as well from G. Chokhalingam. What are you making of this entire trend, and are you tracking the companies which seem to be ahead of it?
No, sorry, I do not track. I would prefer, save money and not eat extra food to reduce the weight rather than spending money to eat these kind of ingredients.
Okay, that's wise words there. I was talking about the stocks, but nevertheless, good to know a view on this. Milan, any comments on the stock price, the product, the trend, anything at all?
Ma'am, not really. I'm not tracking the space.
Okay. So he's not tracking the space either. Some of the key companies which are on top of this game, Dr. Reddy's is one of them. Biocon is another. There are quite a few companies that are ahead in this race for an affordable obesity solution. And what's interesting is no one any longer is even pretending it's only a diabetic drug.
Yeah,
it's very
so
clear.
I think the only one change that comes in over here is where you have Wegovy, who's clearly saying between Wegovy and Ozempic, one of them, they've categorically said it is to treat type 2 diabetes, and the other one is in terms of weight management. So there are a few over there, but this is a developing market and lots more to come in this space. But on the charts, very quickly, Milan, if you could just tell us between a Glenmark, Biocon, Dr. Reddy's, where are you seeing strength right now?
Give me a moment. I'm more strength in Dr. Reddy and Glenmark. Both are quite well placed on charts, and both are well placed to generate alpha over the coming weeks. Glenmark and Dr. Reddy.
Topics coming in with regards to from the pharma pack, Tamanna, but I think that the hot story now is whether train travel is going to get as expensive as we were seeing in terms of the Olas and Ubers.
Yeah, no, I'm finding it astonishing that train prices have gone up, and it's the need of the hour actually for that entire sector. It's going to get more expensive. Sources have told NDTV that Indian Railways is set to implement a new revised fare structure as early as July 1st. My colleague Pallav Mishra joins in for more details. Pallav, क्या details मिल रही हैं?
देखिए जो सूत्र है उनका ये कहना है कि 1 जुलाई से जो भारतीय रेलवे है वो किराए में बढ़ोतरी कर सकती है, लेकिन जो ये बढ़ोतरी है वो मेल और एक्सप्रेस की जो ट्रेन है उसमें सेकंड क्लास जो है और जो नॉन एसी है जो और एसी है उसमें बढ़ोतरी करने का जो है वो प्लानिंग चल रही है। जो एसी कोचेज है उसमें अब आपको पर किलोमीटर 2 पैसे की बढ़ोतरी की जाएगी। जो नॉन एसी कोचेज है उसमें पर किलोमीटर 1 पैसे की बढ़ोतरी की जाएगी और जो सेकंड क्लास है जो है उसमें 500 किलोमीटर से अगर आप अधिक की यात्रा करेंगे तो आपको आधे पैसे अधिक पर किलोमीटर की जो है बढ़ोतरी की जाएगी। हालांकि जो नया जो रेट होगा वो जो जिनका मंथली पास बनता है या जो सब अर्बन लोकल ट्रेन होती हैं जो लोकल ट्रेन होती हैं उसमें कोई भी प्राइस बढ़ोतरी की कोई भी प्लानिंग नहीं है। लेकिन जो मेल और एक्सप्रेस ट्रेन है खासकर जो एसी जो लोग यात्रा करते हैं नॉन एसी में उनको लेकर ये भारतीय रेलवे प्लानिंग कर रही है कि जुलाई के पहली तारीख से जो है किराए को बढ़ोतरी की जाए, क्योंकि लंबे समय से इसको लेकर बातचीत भी हो रही थी। और आपको याद होगा कि जब पिछला संसद का सत्र था उस दौरान जो है रेल मंत्री श्री ने भी इस बात का जिक्र किया था कि फिलहाल जो भारतीय रेलवे है वो सबसे कम किराया जो है वो लोगों से ले रही है और आने वाले समय में ये संकेत दिए जा रहे थे कि भारतीय रेलवे जो है इसको विचार करके जो है रेल की यात्राओं में जो पैसे की बढ़ोतरी है उसमें कुछ कर सकती है। और उसी को लेकर सूत्रों का कहना है कि 1 जुलाई से नया जो किराया है वो लागू हो सकता है।
Okay, so we might see a new fare from the 1st of July. Thank you so much for that, Pallav. All right, time for the BTST call. Milan, we started out very, very hot, seeming to end, with not as much excitement. But what's the call tomorrow?
I would still be looking at the auto space. My BTST call would be TVS Motor. It could be bought at current levels with a target of 2,900 and stop loss of 2,775.
Okay, so one call on TVS Motors, and just trying to understand what would be would you build a position on the Nifty or the Bank Nifty at this point as we're so close to the closing of trade?
No, I would not. The reason is that so long as it's trading below 25,100, it is expected to stay in a range. I would rather prefer a directional position in Nifty on the upside once the expiry is out of the way.
Once the expiry is out of the way will be the key one to watch.
Yes, these are interesting names. In fact, we are almost at the day's lowest levels, Tamanna, but what is positive is that probably markets will end above that 25,000 mark, right?
Yeah.
I think, and that's the cue that traders and investors should be picking up. But Enviro Infra, let's quickly pull up that stock on the screens. It's making a significant push into the renewable energy sector. The stock is up 11%, and this is complementing a slew of new orders in its core water treatment business. Vansh is standing by to give us more details. Vansh, stock up at 10 to 11%. What is it that is so positive in terms of the order?
Right, so the company has won new projects worth approximately 306 crores in the domestic market. They have basically secured EPC contracts of multiple sewage treatment plants. The contract also includes 15 years of operation and maintenance services. The plants will have capacities ranging from 2 million liters per day to 33 million liters per day. They have also forayed into renewables with the acquisition of 69 megawatt solar power projects. Firstly, they have acquired Vento Power, which has received a LOI for a 40 megawatt solar project in Odisha from PTC India. The cost of acquisition for the project is approximately 150 odd crores. Secondly, they have acquired Soltrix Energy. 49% stake has been acquired. The company has been awarded 29 megawatt solar power project by the government of Maharashtra. So this is what the overall picture is looking for Enviro Infra.
That's Enviro Infra. Mr. Chokalingam, how are you looking at Enviro Infra? And if you have to look at other companies as well from the water treatment space, they have been a downer. Even the performance in the last couple of trading sessions has been leaked. For example, EMS, Enviro, you have Ion Exchange, all of them not really doing well. How would you look at all of these companies? Because it's down almost around 20 to 35% in the last 6 months.
Yeah, Enviro Infra I studied recently. It looks very good at current price. A strong balance sheet and solid growth in the last 2-3 years, and valuation is also comfortable around 2021. So this is a good buy, I believe, at the current price.
Okay. Milan, very quickly, EMS, Enviro, Josh Engineering, Denta Water. Taking the downtick into consideration in the last 6 months, any buying opportunities that you're seeing?
Yes, I am seeing opportunities in Josh and Enviro. because Just Engineering has successfully defended the 200 DMA and has shown initial signs of a base formation. So Just and Enviro would be something I would prefer to take a look at.
Okay, so Just and Enviro, two counters that are strong in trade. Moving on, you have a Garware. That Garware Tech has seen some smart moves as well. Now, the question is, the valuations are expensive on this counter, whereas the growth is slightly slow. They're looking to grow the bottom line in that range of around 15 to 20% per year. They have been slightly cautious with regards to the top line growth goes, and they're expecting the top line in low double digits. The stock is up around 6% in trade. Milan, what are charts indicating with the Garware Tech as well?
Well, the Garware Tech, the stock made its high around between 940 and 950 sometime in the end of November last year. And since then, it's been trading in a very broad trading range. Right now, the stock has seen an uptick, but I see that the upsides will stay capped. And fresh set of sustainable up move should take place only above 950 odd levels and not before that. So my suggestion for anyone would be to get little aggressive on Garware only after it goes above 950. As of now, I see the upsides staying capped between 940 and 950 odd levels.
Okay, all right. Garware Tech surviving through the day actually, despite the weakness we saw in the markets. G. Chokalingam, Milan, thank you so much for speaking with us on India Market Close. Just less than a minute to go while we're closing the day. I mean, we started with a bang and closing with a whimper, is what I would say. Nevertheless, 0.5% up on the Nifty is not quite bad. Not the kind of celebration that you would imagine you would see. Ceasefire, Iran, Israel desisting from war. A lot of problems that, seem to exist are coming off. Nevertheless, you are looking like you're going to close below the 25,100 mark, and that tells you that you're probably going to see a range tomorrow as well, range bound trade tomorrow as well. We've stayed above 25,000 and that's good enough. You should pull up the intraday of the Nifty actually. It'll give you a sense of how volatile the day has continued to be. I mean, you hit a high of 25,300. You could clearly not sustain it in this market. Went as low as 24,999. So you're looking at a 300 plus point range just through one trading session, which is why even if you're closing in the positive, it's not the best kind of close that you would have expected. Let's pull up the heat map for you and see what's won and what's not when it comes to the Nifty, and then of course we'll get down the road. ONGC, this was a no-brainer because crude has come off some 7% overnight because of the ceasefire that's been announced. ONGC bound to suffer. Remember, ONGC was flying high when crude prices were going up. So the reverse trade there, 3% down. Power grid also languishing to some extent. There was a block deal in NTPC, but NTPC is actually recovered from the lows of the day. Reports of more trouble brewing in IndusInd. A news report claiming that the microfinance book may have more trouble going ahead. IndusInd Bank taking a bit of a knock as well. BEL along with the rest of the defense pack having a tough day. But the winners is where the story is. Irani ports right on top. Again, the ceasefire giving some relief to concerns that the Haifa port would be very, very vulnerable. So that's good news there. Jio Finance, Shriram Finance, all of those doing well. Some steel stocks also being thrown in. Dr. Reddy's very, very decent in trade today. Kotak Mahindra Bank also not half bad. It's been a good day for the Adani Group stocks actually. Adani End, Adani Ports. Let's see if we can pull up Adani Total, some of the other group companies. So you've seen a lot of buzz over there on all of those stocks, and that would be great to pull up right now. But nevertheless, here in the broader markets is also where you've seen quite a bit of action.
Yeah, in fact, the broader markets were pretty much outperforming, and there is a cooling effect come in there as well. We have ended in the positive. We were up around 1.6, 1.7%. You have the broader markets with gains of around 0.8% in terms of small cap as well as the mid cap index. VIX is also important because that has cooled off slightly. There you go, 3.5% downtick, 13.5, which is a very interesting level where, there is some bit of comfort that, investors have as well from a market perspective. Let's quickly pull up BSE 500 because you'll see the kind of action that you've seen in terms of stocks. GM Financial, a lot of buzz happening on that front. Again, it's the the NPA asset portfolio. That probably is what the street is looking at as to how they deal with it, right?
You would have heard it first and heard on the street.
So that's going to be one stock that we should be watching out for. KRBL, good recovery coming in there, but that's mainly because Again, on the back of the ceasefire, exports with regards to Iran would probably pick up, and that's the reason why you're seeing that kind of mains. Garware Technical, Kajaria Cements, Delivery, Capri Global. Vodafone Idea is also an interesting one that we've been watching out for with the government already on this NDTV exclusive, where we did report that the AGR dues is under consideration and Vodafone is going to be treated separately, which Srimi brought to us. So that stock has been in focus as well. And you have KPIT, Mishra Dhatu, Oil India. So, I mean, it's not a particular trend that you're seeing, but all the sectors from the broader markets have seen a good reaction. Zee Entertainment, after that smart up move yesterday, did see a downtick. Sectors, again, defense, major downer, oil and gas, major downer, but we had the PSU Bank Index, metals. And if you talk about the private banking space, which clearly outperformed Tamanna.
Yeah. So India Defence again is a reverse trade that you're seeing. PSU Banks is fine. Let's look quickly at some of the factors that we need to watch out for tomorrow. There's going to be a testimony from Fed Chairman Powell, so important to see what he says there. Shares which will exit Anchor, Lock-in, Bellrise Industries, 4% of it goes up. And I would also add 2 IPOs opening tomorrow for subscription. And
Sambhav Steel and HBD, and HBD is the larger one that we
HDB is the big one, yeah. So, watch out for that, because a lot of liquidity getting sucked out of the market. That's probably the reason you've seen some pressure today as well. People are shoring up, cash reserves to put in some of these primary market lots. So, it'll eventually come back in, but that could be one of the reasons as well. But nevertheless, it's not a bad close at all. Not the kind of fireworks one would have hoped for, but we're closing in the positive. With that, that's all the time we have on India Market Close from me and the team that put the show together. Thank you so much for watching.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
Top sources. Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugra. Now let's get straight to the show, viewers. Markets today closed in the red, with Nifty 50 closing below the 25,800 levels. Meanwhile, the Sensex also declined 500 points. Infosys, L&T, Hero MotoCorp, M&M, HCL Tech were the top losers from within the Nifty 50 pack. Now, sectorally, if we look at PSU Bank and metals were the top gainers. Autos and consumptions also managed to, gain out, to make out gains there. And on the flip side, media and defense were also, on the back foot. Adani Group founder and chairman Gautam Adani addressed investors at the annual general meeting held today. While outlining the group's achievements in the past fiscal, he assured investors that though the road had been rough, the group has emerged victorious through it all and in all its trials. Chairman Gautam Adani also said, and I quote, "From Trump's tariffs to economic slowdowns of various large economies, the past year has been one of the most turbulent and full of uncertainty. But despite all these headwinds, the Adani Group created history." Gautam Adani also laid out the group's plan for the next 5 years. Annual capital expenditure of $15 to $20 billion and the group's plan towards helping society. Adani Airports Holdings has secured $1 billion in financing for Mumbai International Airport, marking India's first investment-grade private bond issuance in the airport sector. The deal also includes $750 million in notes maturing in July 2029, with an option to raise an additional $250 million. Which is led by Apollo Managed Funds. The transaction drew participation from global investors like BlackRock and Standard Chartered. Now, the funds will support MIAL's modernization, capacity expansion and sustainability goals, including a net zero emission target by 2029. Oil prices hit their lowest in 2 weeks after Israel agreed to US President Donald Trump's proposal for a ceasefire with Iran, alleviating worries of supply disruptions in the Middle East, a major oil-producing region. Brent crude hovered close to $67 per barrel, while US WTI was also 5.5% down at close to $65 per barrel. President Donald Trump urged US energy producers to drill baby drill, warning of a possible oil price spike as tensions with Iran threaten to spark a broader Middle East conflict. Now, but the shale industry has responded with a collective shrug, holding off new drillings as it battles for, falling prices, high costs and investor pressure. Gold prices fell more than 1% to a near 2-week low as risk appetite improved after a ceasefire came into effect to end a 12-day war between Iran and Israel, denting demand for safe haven assets. Spot gold was down 1.4% at $3,319.84 an ounce. India's defense sector is off to a strong FY26 start, with capex surging 122% year-on-year in April, following a 25% year-on-year rise in March of 2025. Jeffries notes the government's post-Operation Sindoor push to boost exports of India-made defense equipment, with year-to-date exports already at 10% of the 30,000 crore target. While PSUs remain dominant, private sector participation is also steadily rising. HAL and Data Patterns are Jeffries' top picks, with BEL also favored. JP Morgan reiterates its overweight rating on Bharat Electronics, raising the target price to 490 rupees. The brokerage highlights steady order inflows and rising geopolitical tensions as key drivers of potential outperformance. Now, BEL is also positioned to benefit from the upcoming emergency procurement deals and remains a contender for large-scale contracts in the medium term. Margins are expected to remain resilient, bolstered by its diversified portfolio. The company's exposure to civilian and export markets is seen as an additional growth lever. Analysts believe that this broad-based strength should support consistent long-term performance. JP Morgan maintains an overweight rating on KPIT Tech with a target price of 1,500 rupees, but cites a disappointing mid-quarter update due to slow deal conversions, cutting earnings estimates by 2 to 3% on lower margins and interest income.
Meanwhile, Goldman Sachs holds a neutral stance with a 1280 rupee target, noting the hybrid versus EV debate isn't currently impacting KPIT's opportunities. Now let's also take a closer look at the KPIT Tech that was tanking in trade. The company is grappling with a challenging global environment driven by ongoing wars and tariffs, clouding its outlook. While the company has a robust deal pipeline, conversions are sluggish as new projects replace older revenues amid this tight client budgets. Now, going forward, the company plans to bolster margins but warns of no one-time gains in Q1 of FY26 compared to Q4 of FY25. Paras Defence and Space Technologies is poised for strong growth, with the company's directors seeing a robust order book exceeding 900 crore rupees and projecting over 40% growth moving forward. Now, Mahajan also highlights the critical role of unmanned aerial vehicles in modern warfare, proving their impact in conflicts like Operation Sindoor. He also emphasizes anti-drone systems as the defense mechanism of the future, with Paras solutions already deployed in sensitive areas. Faced with criticism over slow delivery of aircraft, defense giant Hindustan Aeronautics Limited explained that the issue is expected to be sorted out this year. He explained that the delay in aircraft delivery was due to the delay in engines for the Tejas from GE. Now, the stock was also down over 2% in trade today after there was a cool off in the defense rally. Macquarie maintains a bullish view on key cement stocks, citing improved demand momentum and pricing power in the sector. Now, Ultratech and Ambuja remain in outperform territory, while Dalmia also sees a target hike. Shree Cement stays neutral and ACC sees a slight target cut. Ramco is also rated underperform despite raised the target price. Now, the firm also expects rising prices from H2 of FY25 lows and strong volume growth to lift the earnings. Analysts favor players with a wide regional presence and sharp cost management. Novo Nordisk has launched its blockbuster weight loss drug Wegovy in India, targeting the country's growing obesity crisis. Now, the GLP-1 based injectable, already a global success, arrives amid surging demand and rising competition from Eli Lilly's Mounjaro. Now, with the semaglutide's patent set to expire in 2026, Indian pharma giants are gearing up with generics. Despite high prices, Wegovy's potential to reshape obesity and diabetes care in India is significant. Metro Brands has signed a long-term exclusive distribution agreement with British footwear brand Clarks, marking the latter's official return to the Indian market. Now, under this deal, Metro will manage both online and offline sales of Clarks products across India and neighboring countries as well, including Nepal, Bhutan, Bangladesh, Maldives, and Sri Lanka. The partnership includes oversight of Clarks' e-commerce operations and mono-brand stores. This move also strengthens Metro's premium portfolio and expands Clarks' regional footprint. Goldman Sachs has initiated coverage on Page Industries with a buy rating and a target price of 52,000 rupees, citing a strong recovery outlook. Now, 5,200, I beg your pardon. The company is poised to return to sustainable mid-teen growth following prolonged disruption, a reset in channel inventory, and a rebound in the outerwear segment. Driven by EBO expansion and trend-led launches are expected to support momentum. Analysts highlights improving market conditions and a renewed focus on execution. CLSA has initiated coverage on Nykaa with an outperform rating and a target price of 229 rupees, citing its leadership in India's fast-growing beauty segment. The brokerage see Nykaa's omni-channel model and strong brand equity as key strengths despite challenges in its fashion vertical. CLSA expects steady profitability gains, projecting a 310 basis points EBITDA margin expansion by FY of 28. The firm believes that Nykaa is well positioned to benefit from the rising consumer aspirations and digital adoption. Swan Energy teams up with Balu Forge in a strategic joint venture to explore cutting-edge opportunities in defense, aerospace, railways and nuclear sectors. The JV Swan Balu Heavy Industries was incorporated in April of 2025, with Swan Energy subscribing to 60,000 equity shares, securing a 60% stake, while Balu Forge holds the remaining 40%. Now, this partnership actually aims to develop and supply specialized products and solutions tailored for high growth and high impact industries. Tata Motors is intensifying the EV battle, announcing the introductory pricing for its much-awaited Harrier EV. The four-wheeler sport utility vehicle will have its ex-showroom prices starting from 21.49 lakh rupees, according to the company. Bookings for the vehicle will open from July 2nd and with an option to register interest at the company's website. Finance Minister Nirmala Sitharaman has asked top income tax officials to speed up the clearing of pending tax appeals. Out of 5.77 lakh cases, the goal is to resolve 2.25 lakh this financial year, covering over 10 lakh crore rupees in disputed taxes. She also urged the department to actually issue refunds faster, fix taxpayer complaints quickly, and follow a taxpayer-first approach to build trust and improve service. E-commerce giant Amazon is gearing up for its Prime Day sale from July 8 to 11 with a strong focus on speedy deliveries. Now, the company's goal is to make this the fastest Prime Day ever, with many items arriving in just hours or on the same day or next day. The online shopping platform also expects to see a big increase in Prime subscriptions, especially from Tier 2 and Tier 3 cities. The 119 crore IPO of Globe Civil Projects garners robust interest on day one, getting fully subscribed within just 90 minutes. The New Delhi-based EPC firm receives order worth 1.21 crore bids against 1.17 crore shares on offer by 11:30 a.m. this morning. Now, strong participation from retail and non-institutional investors drives early momentum. Retail bids are subscribed 1.43 times and NII bids 1.5 times within the first hour. However, qualified institutional buyers are yet to make a significant move. The public issue runs from June 24 to 26 at a price range of 67 to 71 rupee per share. Kalpatru is set to launch its IPO on June 24, offering investors an opportunity to invest in one of Maharashtra's leading real estate developers. The company manages end-to-end real estate functions, including land acquisition, design, execution, and marketing. With a stronghold in the Mumbai metropolitan region, Kalpatru operates across all its micro markets. As of December 31, the developer has completed 120 projects covering over 25.87 million square feet. The firm also has a presence in cities like Hyderabad, Indore, Bengaluru, and Jodhpur. The IPO aims to fund growth and strengthen its position in its key urban markets. The 852 crore IPO of Bari Industrial Gases opens to a tepid response with just 3% subscription as of midday on June 24. The Kolkata-based gases manufacturer receives bids for 5.17 lakh shares against the offer size of 1.51 crore rupees. Retail investors subscribe to 6% of their portion, while NIIs pick up just 1%. There is no significant interest yet from the qualified institutional buyers. The issue includes a 400 crore fresh share sale and a 452.53 crore offer for sale. The IPO also remains open until June 26, with the price band set at 380 to 400 rupee per share. HDB Financial Services opens its 12,500 crore IPO for subscription on June 25th, marking the biggest NBFC public offering of the year. The IPO comprises a 2,500 crore fresh issue and 10,000 crore offer for sale by promoter HDFC Bank. HDFC Bank currently holds over 94% stake in the company. The price band is set between 700 to 740 per share, though the grey market premium shows an 11% uptick. However, it still trails earlier unlisted market highs of 1,250 rupees, raising concerns for pre-IPO investors. proceeds from the fresh issue are earmarked for expansion and operational growth. Shares of Bajaj Consumer Care surged 19% intraday, hitting a new high after the company announced a major leadership shake-up. Naveen Pandey has been appointed Managing Director for 5 years effective July 1st. He brings over 20 years of leadership experience to the table. This follows Jaideep Nandi's tenure as MD on June 30th. Trading volume soared to 37 times with 30-day average reflecting investor enthusiasm for the new leadership. Prime Minister Narendra Modi said Operation Sindoor showed the world that India takes a tough stand against terrorism. Speaking at an event marking 100 years since the meeting between Srinarayan Guru and Mahatma Gandhi, he said that India has proven that no place is safe for those who harm its people. He added that India is becoming more self-reliant in defense, with Made in India weapons playing a key role in the operation, and soon these weapons will be recognized globally. Rising tensions in the Middle East have forced Indian airlines to cancel or reroute many flights. Union Minister Ram Mohan Naidu stated today the Ministry of Civil Aviation is actively monitoring the situation and collaborating with airlines for real-time updates. So far, 48 flights to and from Delhi airport have been cancelled due to airspace closures. Now, this includes 17 Air India flights, 8 Indigo flights, and 3 from other airlines. The monsoon is also making a significant progress, with the IMD announcing its anticipated arrival in Delhi and Uttar Pradesh within the next 36 hours. The southwest monsoon is also expected to advance into Rajasthan, Punjab and Haryana in the same time frame. Looking ahead, northeast India as well as parts of central and east India are set to experience very heavy rainfall over the next 7 days. US President Donald Trump announced a ceasefire between Israel and Iran effective just after midnight, ending a 12-day conflict. Trump brokered the deal with Israeli PM Benjamin Netanyahu while Qatar facilitated Iran's agreement. Israel confirmed compliance but reported Iranian missiles strikes in Beersheba, killing, forecasting doubt on the ceasefire stability. Iran denies violating terms. Global markets rallied with oil prices dropping 5% as supply disruption fears eased. Trump urged both the nations to maintain peace, calling it a historic step toward ending the 12-day war. Now, just hours after the US president announced a ceasefire, Iran launched a limited missile strike. Now, the attack was in response to recent American airstrikes on Iran's nuclear sites. However, the ceasefire remained uncertain as Iran also fired missiles at Israel, hitting the city of Beersheba. Israeli firefighters later recovered 4 bodies from a damaged building. After several delays, NASA has announced that Indian astronaut group captain Shubhanshu Shukla might finally fly into space tomorrow on June 25th. Now, this new target date, the 6th one set by NASA, is the quickest turnaround time for a launch announcement. The Axiom Mission 4 is scheduled to lift off at 12:01 p.m. IST from NASA's Kennedy Space Center in Florida. Updates from Club World Cup. Manchester City crushed all in 6/0 with Gundogan scoring twice. Meanwhile, RB Salzburg and Al Hilal played out a scoreless draw, and Monterrey held River Plate to a 0-0 stalemate. The group stage is in full swing. Dilip Doshi, the former Indian left-arm spinner, has sadly passed away in London at the age of 77. The BCCI shared their condolences, stating that the BCCI mourns the sad demise of former India spinner Dilip Doshi. May his soul rest in peace. Doshi represented India in 33 tests and 15 one-day internationals between 1979 and 1983, earning renowned for his classic spin bowling. Diljit Dosanjh, the Punjabi pop icon, is officially going from stadiums to study material. Toronto Metropolitan University in Canada has announced a course dedicated to the singer-songwriter set to launch in late 2026. The course will be offered through the Creative School, and Dr. Charlie Wall Andrews from TMU said that his rise illustrates the cultural influence and economic potential of Punjabi music globally. The announcement comes just hours before Dosanjh's latest film Sardar G3 found itself in the middle of a controversy with a cancelled India release over its casting of Pakistani star Hania Amir. Now with that, viewers, it's a wrap on this edition of Market Express, but stay tuned to NDTV Profit, and Sanjana Chauhan will be joining us shortly after the break with Profit 360.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
Sources in ED seeking explanation on Yuvraj Singh, Harbhajan Singh, on why they are endorsing such platforms which are banned by Government of India, and the mule account and Benami transaction, the kind of promotional payout being given to some of the media houses, the ad rates are between 50 crore to 100 crore.
What happens in reality is that under the garb of skill-based game, they end up promoting gambling only.
27,000 crore is what the tax evasion, the top.
Benchmarks end higher but lag behind small and mid-cap indices, with the Nifty closing nearly 300 points below its intraday high and the Sensex slipping 1,000 points from the top. All sectoral indices finish in the green except media, defense and oil and gas. Defying the odds to achieve record revenue and playing a key role in Operation Sindoor with their drones, the Adani Group is set to forge new paths. Chairman Gautam Adani announces an annual capex of $15 to $20 billion over the next 5 years. Adani Airport secures $1 billion funding from global investors for the Mumbai International Airport, issuing $750 million notes maturing July 2029 and raising an additional $250 million. Vodafone Idea, facing severe financial stress, may get relief as the government says and considers measures like a moratorium on AGR dues and fresh bank credit, aiming to prevent a sector duopoly and ensure the telco's survival. Kuwait, Iraq, the UAE and Qatar reopened their airspaces following the US brokered ceasefire between Iran and Israel, which ended 12 days of intense conflict marked by missile barrages and airstrikes. Despite the truce, Bahrain has kept its airspace closed, signaling continued caution as the situation remains fragile. Novo Nordisk launches the first and only weight management medication in India, Wegovy, an injectable semaglutide. It will be available in 5 dosing strengths and pricing starts from 17,300 rupees. IPOs of Kalpataru, Ellen Barry Industrial Gases and Globe Civil Projects open today. Investors can subscribe until June the 26th as these companies raise significant capital across real estate, industrial gases and EPC sectors. Good evening, you're watching Profit 360 on NDTV Profit. I'm Sanjana. Along the next half an hour, we're going to bring you the latest on markets as well as national and international news. So let's dive right into it and take a look at how the markets fared today. Markets ended higher despite sharp intraday drops, with the Nifty falling 300 points from its high and the Sensex nearly 1,000 points. Nifty mid-cap 150 and small-cap 250 rose for the third straight day, with JM Financial and Usha Martin surging over 7% in the small cap 250. Most sectors rose except media, defense and oil and gas. Nifty Pharma marked its third consecutive gain, while oil and gas and media ended two-day winning streaks. Let's go across to Varsha now for a roundup of the day's market action.
Well, yes, broader market indices, marginally outperformed benchmark indices. Nifty closed the session higher, though falls nearly 300 points from high, whereas Sensex also closed the session higher, but falls nearly 1,000 points from high. Nifty midcap 150 and small cap 250 gains for the third day in a row. JM Financial and Usha Martin are the top gainers when it comes to Nifty small cap 250, gains more than 7% for the day, while Adani Ports and Jio Financial Services were top gainers in Nifty. Nifty PSU Bank and Nifty Metal gained 1% each. Nifty PSU Bank emerged as top performing sector, which was led by Union Bank of India and Canara Bank, while all sector indices end the session higher, barring media, defense and oil and gas. Nifty Pharma gains for the third session in a row, while lastly, if you see Nifty oil and gas and media snaps two-day gaining streak.
Thanks so much for that, Varsha. Meanwhile, Chetan Seth, APAC equity strategist at Nomura, said India's trade vulnerability is low and the country is better positioned than most Asian economies thanks to limited exposure to the US and China. However, he cautions that India equities remain vulnerable due to high valuations and global market pressures, viewing the current phase as market consolidation. Let's listen in.
I do think that at least on the trade front, India has very less vulnerability to the trade policy outlook as regards US is concerned. India, always the biggest challenge for India equities or Indian economy has always been commodity prices and energy prices, and therefore, what was happening in Iran and Israel over the last, let's say, 72 hours or, a couple of weeks ago was clearly a risk factor. But now that's out of the equation. So we do feel that India looks okay. Of course, stocks just cannot grind higher and continue to go up in a straight line. There will be periods of consolidation, especially when, suddenly for regional investors or global investors, suddenly some other markets start becoming more interesting. So I think what India is right now seeing a little bit period of consolidation because, suddenly some opportunities in, let's say, Korea or Taiwan look interesting, but that does not mean that the investment case of India is broken. So we are quite positive, and I do feel that India looks quite well positioned, especially from a trade front.
Meanwhile, the defense rally has cooled off with the de-escalation in the Iran-Israel conflict. Nifty India Defense Index closed around 2.5% lower for the day, and the defense stocks halted their two-day rally after US President Donald Trump said that Iran and Israel have reached a ceasefire agreement which points towards a possible end to the conflict in West Asia. Garden Reach shipbuilders closed more than 8% lower, while Cochin Shipyard and HAL ended over 2% in the red. Bharat Dynamics, meanwhile, and Paris Defense were also 2 to 4% down. Meanwhile, IPO action continues on Dalal Street with a mixed response. Barry Industrial Gases opened for subscription today, but saw a tepid start with just 5% of its issues subscribed so far. Kalpataru Projects is also witnessing sluggish interest with only 7% subscription in contrast. Globe Civil Projects is seeing a strong surge meanwhile in demand, already subscribed nearly 5 times, led by a robust QIB response. My colleague Somit is here with all of the details.
Well, 3 companies are looking to raise funds from the primary market. The total amount of fund raise that is planned is around 2,562 crore rupees. Starting off with the first company, that is Globe Civil Projects. Now they are looking to raise funds of around 119 crore rupees. The price band for this IPO has been set at around 67 to 71 rupees per share. 71 is the upper end, and the entire fundraise is a fresh issue, and the company will be using these funds towards working capital requirement and towards the capital expenditure of the company. Now the company was incorporated back in 2002, and it's a Delhi-based infrastructure development company engaged in EPC contracts. They execute government contracts which involve construction of road, flyover, bridges, sewage system and civil structures as well. The second company that is there's the largest IPO that is coming in this week is Kalpataru Projects, and the company is a real estate business developer in the Mumbai region specifically, and IPO price band for this is at around 387 to 414 rupees per share. Now the company is looking to raise close to 1,590 crore rupees. The entire offer is a fresh issue, and the company will be using most of this funds to repay their debt. Close to 1,200 crore rupees of this fundraise will be going towards a debt repayment, which could lead to lower interest costs going forward. And lastly, the company that is raising fund is Berry Industrial Gases. The price band for this IPO is 380 to 400 rupees. The company is looking to raise close to 853 crore rupees, of which 400 crore rupees is a fresh issue, while the remaining 453 is an offer for sale where the promoters and the existing investors will be looking to exit. The implied market capitalization of the company on listing could be around 5,637 crore rupees, and on listing the promoter holding will come down to 81.6% from 96.5%. Now the 400 crore rupees, that is the fresh issue that the company is doing, it will be used towards debt repayment and capital expenditure purpose. Now the company manufactures and supplies industrial gases such as oxygen, carbon dioxide, acetylene, nitrogen and various other gases. Now these gases are used in sectors such as pharma, chemical, steel, railway, defense, and these sectors are among the key clients of the company.
Right, Swami, thanks for that. The IPO market, in fact, seeing a bit of a selective demand. Moving on, the Adani Group delivered record-breaking results in a turbulent FY25 with consolidated revenue rising 7% to 2.71 lakh crore and EBITDA up by 8.2% to 89,806 crore rupees. Chairman Gautam Adani highlighted that despite intense scrutiny and sectoral headwinds, the group achieved historic profitability and industry-leading growth across power ports, airports and renewables, reinforcing its commitment to national development and robust governance standards.
Our governance is of global standards, and our compliance frameworks are non-negotiable. And our numbers tell their own story. Even in a year of turbulence, we saw record-breaking revenue, unprecedented growth, and historic profitability. We are a proof of a group that dares to dream beyond constraints and powered by a nation that breathes possibility into every tomorrow ahead of us.
Meanwhile, Gautam Adani also unveiled the group's roadmap for the next 5 years, committing to an annual capital expenditure of $15 to $20 billion to drive record-breaking investments across sectors. The group's plans include major infrastructure projects such as launching a new airport in Navi Mumbai, expanding renewable energy capacity and redeveloping Dharavi to benefit over 1 million residents.
Our capital investment across businesses is set to break all records. We anticipate an annual capex spend of $15 to $20 billion for the next 5 years. These are not just investment in our group, but investment in the possibilities for doing our part to build India's infrastructure. And before I start wrapping up, let me outline some of the programs that have me the most excited. Exactly 3 years ago, on my 60th birthday, my family pledged rupees 60,000 crore to redefine healthcare, education, and skill development in India. The Adani Healthcare temples are our first major steps, world-class, affordable, 1,000-bed campuses in Ahmedabad and Mumbai with medical colleges, research centers, and wellness spaces all integrated together. Mayo Clinic is our partner in guiding us to create a future-ready, AI-powered, patient-first healthcare ecosystems. In parallel, we have committed rupees 2,000 crores to build a world-class skill university and finishing school in Mundra.
Meanwhile, the brand new Navi Mumbai International Airport, a landmark project spanning 2,866 acres with state-of-the-art facilities and a Lotus-inspired terminal design, is set to begin operations by August 2025, pending final approvals. Once operational, it will handle 20 million passengers annually in its first phase and boost the Adani Group's share to 35% of India's airport passenger traffic, significantly easing congestion in the Mumbai metropolitan region and transforming regional connectivity.
Adani Airports also had a massive year of growth. We handled a record 94 million passengers in FY25. We also completed the first test flight at the Greenfield Navi Mumbai International Airport. This airport will open later this year with an initial passenger capacity of 20 million, of what will then become a 90 million passenger airport, giving us a 35% share of our India's airport passenger traffic.
Meanwhile, Adani Airports has secured funding worth $1 billion from global investors for the Mumbai International Airport. This financing includes $750 million maturing in July 2029 and are primarily aimed at refinancing the existing debt. Additionally, the structure of the funding also allows raising extra $250 million. This funding is designed to enhance the Mumbai International Airport's financial flexibility. The company also said that this marks India's first investment-grade rated private bond issuance in the airport infrastructure sector. Now, Union Telecom Minister Jyotiraditya Scindia has emphasized that India cannot afford a telecom duopoly, stressing the need for robust competition across all sectors to ensure affordable and widespread connectivity. This comes as sources say the government is considering relief measures for the debt-laden Vodafone Idea, including a moratorium on its massive 83,400 crore AGR dues. This with fresh bank credit and possibly extending the tenure of its relief plan, especially significant given that the government's 49% equity stake in Vodafone Idea still exists. Meanwhile, plans to de-license the 6 GHz spectrum by August 15th aim to boost Wi-Fi services and bridge the digital divide alongside assigning spectrum to satellite players to expand connectivity further. My colleague Aishwarya now joining me live and she's been tracking the story. Aishwarya, first let me come to you about the government weighing and mulling its options when it comes to handing a much needed relief to the debt-laden Vodafone. What are you hearing?
Well, Minister Scindia was present at the Broadband India Forum this afternoon, where he clearly outlined saying that India cannot afford a telecom duopoly, and that reiterates the government's push towards supporting a three-party telecom scenario as far as India's telecom sector is concerned, with Jio, Vodafone, as well as Airtel, kind of reiterating that government is ready to support Vodafone Idea and sustain it in the future as well. Now, this, of course, comes on the back of government mulling a longer tenure for Vodafone Idea's relief plan, which it has been asking for, right from the DOT to even the Supreme Court, which was also turned down. Government may also consider giving moratorium on AGR dues, what we had reported earlier on NDTV Profit as well. Government has additionally asked banks to even give fresh credit, which will give a new lease of life to Vodafone Idea as well. As far as the context of Vodafone Idea's debt, AGR dues is concerned, it lies at about 83,400 crore in total. It had asked for relief on half of it, which is about 45,000 crore from DOT, and even went to the Supreme Court for it as well. And this comment is crucial at this point, as he says that a duopoly will not exist, and if India wants to prosper in the fronts of digital connectivity, it is necessary for competition to exist in this space, and does reiterate his support towards Vodafone Idea's sustainability in the future as well.
Yeah, thanks so much for that. And let's actually listen in to Union Minister for Communications Jyotiraditya Scindia in this keynote address at the World Wi-Fi Day stated that Wi-Fi will be a $22 billion segment in India by 2035, playing a transformative role in the nation's digital journey. He also emphasized that connectivity is no longer a luxury, but a fundamental tool of empowerment. Let's listen in to what he had to say.
This World Wi-Fi Day is extremely seminal because what it does is that it puts into perspective a day to celebrate an invisible form of a power and an energy that is capable of powering visible change. And that truly represents the power of Wi-Fi. It is a day when we sit back and look at the capability that this energy gives us. It gives us a freedom to connect. It gives us a freedom to create. And it gives us a freedom to rise in the digital age of the world.
Now this morning, US President Donald Trump announced a complete and total ceasefire between Israel and Iran to end 12 days of intense airstrikes set to begin around midnight. Iran's state media confirmed the ceasefire started at 7:30 a.m. local time, but Israel reported that Iran launched missiles shortly after, violating this agreement. In fact, Iran reportedly launched a missile attack on the Al Udeid airbase in Qatar, a key US military facility near Doha. Israel's defense minister ordered strikes on Tehran in response, though no immediate changes to civilian guidelines were issued. Both nations agreed to the ceasefire, Israel to halt Iranian attacks, and Iran claiming it was imposed due to its missile retaliation. However, despite the agreement, ongoing violations raised doubts about its long-term stability. Meanwhile, let me quickly go across to my colleague Ankit Tyagi, who has been reporting from Israel. This is as both countries continue to trade strikes in violation of Trump's ceasefire. A barrage of missiles continue to cloud the Middle East. My colleague Ankit Tyagi joining us from the ground in Tel Aviv, Israel.
This location which was hit in Beersheba, a residential high-rise which was hit at 5 o'clock, 5:20 local time here, and look at the damage and the impact of that entire strike. What I can see behind me, an entire block of this building absolutely damaged and devastated. It has come down. This is where 4 people have been confirmed dead after the first barrage of missiles came in from Iran. Remember, today was the day when 5 barrages of missile at different time. In just a matter of 1 hour, little over 1 hour, these missile came all over in many places in Israel, and where we are standing at this moment has brought the worst impact, the worst effect of the barrage of missiles that came in right before the ceasefire came into effect. This is one of the the localities in Beersheba, one of the cities there, and you'll still see the rescue workers or right on top as well. This is where 4 people lost their life, 5 others were pulled out of the rubble when the rescue workers reached this place. And even at this moment, where we are standing right next to the building, all that you can see are the signs of impact and what is left behind after that devastating strike that took place here.
And as a consequence of Iran's attack on the Al Udeid airbase near Doha, Qatar swiftly closed its airspace, halting flights at the Hamad International Airport last night. Qatar Airways and others like Qantas and Air India diverted or cancelled flights, with some planes like a Manchester-Doha route turning back. Nearby countries, that's Bahrain, Kuwait, UAE and Iraq, also shut their airspaces, temporarily causing widespread delays. Airlines, however, rerouted flights via longer paths like the Caspian Sea or Egypt, spiking costs and travel times. Doha and Dubai airports became gridlocked, leaving passengers stranded. Qatar's defenses stopped most missiles, allowing airspace to reopen in hours, but disruptions have lingered. Airlines focused on safety, navigating a tense region. Meanwhile, India is continuing its evacuation of its citizens from Iran, with over 2,200 Indians brought back from the Persian Gulf so far. Sharing details on the same, Randhir Jaiswal, spokesperson of the External Affairs Ministry, informed that 292 Indian nationals were evacuated from Iran on a special flight that arrived in New Delhi from Mashhad at 3:30 a.m. this morning. Separately, a C-17 military transport aircraft of the Indian Air Force evacuated 165 Indians who were living in Israel. India launched Operation Sindhu last week to bring back Indians from Iran and Israel in view of increasing hostilities between the two nations. Let's go over to my colleague Ghazali for more details. Right, Ghazali.
India is still continuing with it.
Go ahead, Ghazali.
So India continues its evacuation program from both Iran and Israel. From Iran, it's been more than 2,200 students who have been brought back till today. 2 more flights are scheduled to arrive today, and then further flights will track more Indian students who are still stranded there, though a ceasefire has been announced between Iran and Israel. From Israel also, around 500 students or more than 500 students were brought back today in, but now further evacuation will also depend on the developing situation, as Mr. Trump has announced ceasefire between the two countries, but India remains steadfast in evacuation process.
Right. Thanks so much for that, Ghazali. We have some breaking news that's coming in right now. Amidst the ongoing Israel-Iran conflict, which has significantly impacted air travel by forcing reroutes and flight suspensions for safety, Air India is emerging as a more economical option for international flyers. My colleague Aishwarya now joining me on the story. Aishwarya, while Gulf carriers currently offer slightly lower fares on the Delhi-Dubai route, we're seeing a more, preference towards Air India, but that also might not necessarily serve the consumer/travelers well, right? Given the fact that there were disruptions from the crash, lots of operational issues. So take us through where the passengers actually stand.
Well, a lot of disruption, as you just described, as far as the Middle East airspace is concerned. Air India, in fact, the fares to Middle East stands at competitive rates. They remain higher, although, than some of the region's premier Gulf carriers. If you had seen the trend a couple of weeks post the Air India plane crash in Ahmedabad, since then, the rates had been cut down. But after the Iran-Israel conflict, the war, escalating further, we've seen that Air India prices have been higher in this particular region as compared to the Gulf carriers. On the Delhi-Dubai route, Air India offers non-stop one-way flights for around 12,000 to 14,000, while Emirates, Etihad, and Fly Dubai, which have undercut these rates, their prices have range between, in fact, 9,000 to 11,000. A slight dip you can see in their pricing as compared to Air India. Indigo, on the other hand, has priced these destinations to Doha and Abu Dhabi in the similar range, again 12 to 14,000, similar to Air India as well. But on the international routes, you will see Air India is also priced aggressively. Delhi-Paris flights available between 23,000 to 24,000, compared to Air France, which is priced anywhere between 70,000 to about 85,000 rupees. Delhi-London, 32,000 to 35,000 for Air India. British Airways and Virgin Atlantic, they are priced between 38,000 to 57,000. And the Delhi-New York route, that is priced between 41,000 to 42,000, undercutting American Airlines, which ranges between about 52,000 to 68,000 on the same dates. This is a period that we have seen between starting today all the way up to July. These are this is the price range as compared to Air India and other flights on all of these routes.
Shwarya, thanks so much for that, and we'll come back to you with more developments. And there's some breaking news coming in. Donald Trump has in fact addressed reporters and has in fact categorically told Israel, do not drop these bombs. He's ordered Israel to stop dropping bombs and has called the violation, has in fact spoken against the ceasefire violation, saying that he is not happy with either Israel or Iran and expressed dissatisfaction over the ceasefire violation. Remember, this is after the US brokered ceasefire violation that we saw. There have been violations from both Iran and the Israeli side, but now US President Donald Trump coming out and expressing disappointment. And that's a wrap on Profit 360. Stay tuned to NDTV Profit for more news and updates.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
Sources in ED seeking explanation on Yuvraj Singh, Harbhajan Singh, on why they are endorsing such platforms which are banned by Government of India, and the mule account and Benami transaction, the kind of promotional payout being given to some of the media houses, the ad rates are between 50 crore to 100 crore.
What happens in reality is that under the garb of skill-based game, they end up promoting gambling only.
27,000 crore is what the tax evasion, the top popular betting apps are actually evading. Between January and March alone, they have seen 1.6.
Hello and welcome. You're watching KYC here on NDTV Profit. I'm Harsh Saita. Today is a special one because it's a company which stands out in the global marketplace, and likely a company which a lot of other companies export facing would want to aspire to be, quietly doing R&D on one side and on the other side trying to deploy capital very efficiently. We have one of those, Garware Technical Fibers. We're going to talk about this one today, and what I want to know first off is they have a decent market share, but can growth continue to go up at a healthy clip? They have also made an acquisition today in particular, and that's why you're seeing some zing on the stock. But can they grow materially over the next 3, 4, 5 years? And what will be the direction of that growth? Can they capture market share? Will value-added products aid the market share and expand or aid margins in any fashion, or will the margin number be 21%? Can they continue to gain market share in some of the other verticals that they have diversified to? For example, sports. For example, they manufacture nets for football goals as well. And therefore, an interesting play in that sense, where they continue to diversify in very healthy fashion. Margins, pricing, competition, of course, all of those is what we will ask management, and whether consolidation in the customer side in the industry, at least in the fishing industry, in the farming industry, which Garware operates in, or Garware's customers operate in, whether consolidation there could be a risk. How much of an impact do local taxes play on Garware's numbers, given that it's export facing? How should one look at profitability and growth there? They've also made an acquisition. How does this acquisition add value to the company, both in terms of top line as well as margins? We'll quiz management on all of that and more, and that will give us hopefully the full picture with regard to a Garware. But first off, trying to understand what the company does in Know Your Company today. Let's start off. It was founded in 1976 as Garware Wall Ropes. It was rebranded as Garware Technical Fibers only in 2018. It listed on the NSE and the BSE in 2002, and it's a Pune-based company. In terms of business segments, and this one can go on for a while, I'm going to start off with fisheries. All right, so as those graphics play out, there you go. So fisheries. Now, what does it do? Fully assembled trawls, purse nets, gill nets, dole nets. These are all different type of fishing nets which Garware makes, and a lot of the R&D is also done in-house The production, of course, done in-house as well. Then they're into aquaculture. Now, what is aquaculture? It is basically growing or farming of fish, right? So you'll have these very large nets in the open ocean, and you'll have fish seeds which are put inside those nets, very large nets, and thereafter fishes will grow within those nets, and thereafter they are used for the purpose of either fish feed or feeding the world. And therefore that's aquaculture. They do cage nets, predator protection nets, and anti-bird nets. Now those in itself are quite self-explanatory in terms of their terminology. Then let's talk about shipping. You have mooring and tow ropes. What does that do? You would have maybe at some point seen a ship towing another boat or a ship. A lot of that is done through a tow rope, and therefore you have towing ropes, which Garware sells as one of the many products that it does within the shipping industry. Also anchor ropes, a lot of those are also made by Garware. Let's talk a little bit about sports. So tennis nets, volleyball nets, basketball nets, ski nets, cricket nets. You also have football goal nets, goal posts, the nets between the two goal posts. All of those are made by this company. Agriculture, they have anti-bird nets, anti-hail nets and shade nets, sericulture nets, floriculture nets. So all of those also is what they cater to. And last one, and most interestingly, geosynthesis. And this took me some time to understand. So basically it's to ensure that, for example, the soil does not erode. So the rope sticks to the soil and it stops erosion of soil, erosion or causing landslides also. We would have seen some of these if you have been to hilly areas. There are large ropes across mountains which have been put, not only in the Western Ghats but also north. And some of those ropes is what Garware manufactures. So rockfall protection, landslide protection, a lot of that is also what Garware does. Again, very niche and very interesting as well while I was reading it. Let's talk a little bit about market share, because it has a dominant market share in the domestic fishing industry. 50 to 60% is the reported market share. And even within global fishing, it has nearly a 20% market share in global fishing, around 17 odd percent, the last count. 40% in the salmon industry is what it has. Again, salmon industry is a lot to do with aquaculture, and aquaculture is the other place where this one is used. So again, large market share in some of these. But the question really is, can they grow market share in the other domains that they ventured into? And how are they going to drive that? Because that will add not only to top line, but because it's value added product, it will also add to margins. And I would want to see as to how they play that and what competition is doing in that space. They have 2 manufacturing facilities, 27 patents, and they have a presence in 75 plus countries. Now, I'm not surprised by any of that, because they have a large global presence and a large global demand as well. Beg your pardon. So, so all of that about Garware. Now, I want to also talk about the latest acquisition, because that is the key as to why the stock is moving today, as well as might hold the key on the future outlook of the business as well. What they have bought in terms of their latest acquisition is Offshore and Trawl Supply, which is a synthetic fiber rope company. Its factory is situated in Norway, and it's one of the modern sites in this line of business within the European geography. You're also seeing it as a leading manufacturer in premium synthetic fiber ropes, and the application is for offshore oil and gas in Norway. Now, it specializes in production, design, engineering, and within the high-tech fiber ropes business, and it's going to likely help the company achieve growth plans in the value-added rope segment in the longer run. I would want to see very interestingly how and where this takes the company. The acquisition is going to be completed by the 30th of September, and the cost of acquisition is 105 crores. It's an all-cash deal, which the company is going to shell out. So this one's going to be a very, very interesting play with regard to with regard to this company. But let's talk about the key metrics now, and we'll try and break down all of those. We'll look at income statement, balance sheet, cash flow, and return ratios to start off. Thereafter, we'll look at shareholding, street cred, valuations, and street coverage. We'll look at all of those and we'll sum it up for you, and thereafter speak to management as well. It's going to be an interesting discussion. I can't wait. Let me quickly start off with the income statement. In terms of how this one has evolved, it's just about less than a double-digit growth on the top line, so more to be desired there. But margin expansion has aided the company. Margins have gone up from 19 to 21%, and therefore profitability is up roughly 12% on a YOY basis over the last 3-year CAGR. So that's how it's played out. We'll give this a neutral because more to be desired on growth, right? I mean, this is a sub 10,000 crore market cap company. It wanted to grow faster, but look at the efficiency with which the margins have evolved. FY23, it dipped a bit, but thereafter we've seen a bounce back with regard to margins. Let's talk about the balance sheet now. In terms of equity capital, you're seeing that sharp expansion in equity capital, and that's because of a bonus issue which it had done. But outside of that, you look at the way book value has moved. It's moved on a increasing trajectory. The borrowing number has come down, which is a positive, and I'm excluding these liabilities here again. And you have your cash and bank balances, which have also inched upwards. And I want to make a small correction here in terms of the cash and bank balance. If you look at the cash and bank balance for FY25, it's at 51 crore. I beg your pardon. So they do have a decent amount of cash bank balance at the end of FY25. They also have a decent FY24 cash balance of around 174 crore, and FY23 was at 46 crore. So the cash bank balances have evolved quite well. There you go. So some of those numbers playing out on your screen. So that's on the balance sheet. We'll give this a thumbs up. Low debt, good cash levels, and efficient management. They don't keep cash levels too high. I want to talk a little bit about the way in which your return ratios have played out, but before that, the cash flow. Now, the cash flow, again, it's fascinating. You've started to see receivables inch up where the cash flow is concerned. So you have your free cash or your cash flow from operations at 189, 219 and 195 crore. That's how your cash flow from operations has played out. Now you look at profit after tax. Sorry, that's the EBITDA number that you're seeing there. Again, there's an error there. EBITDA number seen there. And then you have your, again, your EBITDA to cash flow from operations, right? And that EBITDA to cash flow from operations number is slightly on the weaker side. Let me put it out there. CFO to EBITDA stands at 83% for FY23, 81% for FY24, and 61% for FY25. If you can see the way in which that has come off, it's because the receivables have inched higher, and I'll explain it to you. Your receivables number went up by 25 crore in FY24, but nearly by 70 crore in FY25. So that's a large increase on a cash flow from operations of just about 200 crore. And that's what's really pulling down your cash flow from operations. The other piece that's played out is that your payables number has also inched up, but just a little bit. So your working capital changes number has gone up by 51 crore in FY25. And that is essentially what's pulling down the cash flow from operating activity number from that 80% to the 60% number. All right. So that's the long and short with regard to cash flow. We've given this a neutral. We'll want to see more. Again, the net cash flow number is negative over there. If you see the 138 crore negative number, right? The other numbers are okay, but then the negative number of 138 crore, that one is really signaling that there has been a buyback which they've done, and which is why they've used some of that cash in the buyback, which is what has created that dent with regard to net cash flow. But again, the more relevant number here is the cash flow from operations, which is what you really want to understand, right? So that is the long and short with regard to cash flow. Now let's look at return ratios. Again, it's an interesting chart with regard to return ratios. They've been very healthy and this really stands out among all the companies that we've done. Just look at the way in which ROCE has been. 18.5% or maybe 16%, but very, very stable over a 5-year period. Look at the ROE numbers as well, around 17.5 to 20%. Very few companies doing this on a recurring basis, extremely efficient use of cash flow as well as internal accruals is what this company has really charted for itself, and that is evident from the ROC and ROE numbers. Let's look at shareholding now. And when I look at shareholding, there you go, it's healthy. You've got decent promoter holding, you've got decent public shareholding as well. Public to promoter is not too skewed. You have around 5 to 10% cumulative which FIs and DIs hold. It's a very small company, very closely held. 9,000 crore in market cap, out of which 5,400 crore is held by promoters alone, 61%. And therefore, what you want to also understand is FIs, DIs may be discouraged from playing this game too much, because you have very little room in terms of free float to actually buy and acquire a large amount in a company which has a free float of only 3,500 crore. That's a thumbs up for us. There's no problem there. Promoters have a very, very healthy holding. Let's talk about street cred now. And here also we've seen very healthy numbers. While year to date the stock has not done much, but you look at the 1-year returns, it's healthy at 15%, and the 5-year returns is a near 3.5 bagger. So no complaints per se from investors. Now let's talk about valuations, and this is where it starts to get tricky, right? Because you have very few companies in a space like this, and therefore we have to rely on the very few analysts who actually cover and track this stock. Let's talk about valuations though. The EPS for FY25 was around 23 rupees, expected to go to 27 in FY26. FY27 is on your screen as well, 31. Your price to earnings should shrink towards the 29 times number, which is largely fair, which is largely in line with the way the 5-year valuation also has looked, and therefore we'll give this an absolute neutral, because valuations don't look extremely lucrative, at least at this point. Let's talk about analyst recommendations now. Very few analysts cover it. I did mention it, just 2, and therefore we've given this a thumbs down. No fault of the company, it's a smaller company relatively, and the upside is 10%. Some of that would have obviously gotten evaporated with today's gains as well. So again, something that you want to keep in mind. But nonetheless, that really stacks up all of the parameters that we've just covered, and that gives a rating for Garware Tech at 5.5 out of 8. Let's bring in the management now. Let's speak to Mr. Vayu Garware, who's standing by, Chairman and Managing Director at Garware Technical Fibers. Thank you, sir, so much for joining us on this very critical day. You've made an acquisition as well. Let me start off with that as the cue. What does this acquisition add, one, to the company in terms of R&D and in terms of specific knowledge to the company? And 2, how do you see the top line or how do you see the contribution to the top line from this acquisition, both top line and margins? Give us that perspective, sir.
Great. Thank you for having me on the show. Yes, it's been an important, yesterday we actually announced this acquisition, the signing of the definitive agreement. And we have entered our 50th year this financial year. So it's an important milestone in the 50th year. Overall, as our company is very focused on our mission, which is to deliver value-added, innovative solutions for our customers, being primarily B2B customers. We have done this with a lot of focus over the last decade, particularly on our netting side of the business, where we do it in aquaculture, fishing, geosynthetics, and other areas. And that has allowed, over the last 10 years or so, our mix of value add to commodity to change from almost 30% value add, 70% commodity to now 80% value add and about 20% commodity. The last 20% is where this acquisition comes into play. The last 20% of what we would normally call non-value add products, it tends to be, has been around the rope area, where we have really not been able to focus enough. And the last couple of years, we've decided to focus on this and bring this segment of our business also up. So we have carved out a separate team in our company, and we have really started to focus, and it's paying good dividends even organically. But this company, OTS in Norway, is one of the very advanced players in this field. They are at the leading edge of technology in this area, as well as have very strong customers across Norway and Europe in this space. So actually, it fits our strategy very well in this 50th year. The values of the company are very similar to ours. The strategic intent and fit is very good. And actually, the team there is also excellent. So we're very happy with this acquisition, and we think it can add a lot of value to both sides.
Sir, talk to us about the cost of this. Around 105 odd crores, if I'm not wrong, is what you pay out. How would you view that in terms of relative valuations?
We think it's a fair value on both sides. It is finally for us, it will come out of our internal accruals. You know, we have been generating a lot of cash, and we are quite cash positive. Obviously, that pulls down our overall ROCE, since our investment strategy on treasuries is very risk averse, and we're very careful. Our ROIC, for example, is in close to 50%. So we want to deploy the money better, but our overarching strategy has been that we need to have the right strategic fit for this kind of acquisition, and which we have now found. So the valuation is a fair valuation on both sides. It will be for us finally EPS positive as well as ROCE positive. So overall, I think it's the right way to go. In terms of potential benefits for both sides, we have already been in Norway for many years. We have a strong customer base there, which is not overlapping with OTS. So we have the potential to bring some of OTS's products to our customers. We definitely have the potential to bring some of our products to OTS's customers, and then bring OTS's technology to other potential markets in Southeast Asia, including India. Such products today are still imported into India also, because the technical capabilities and the machinery is not available here. So with this, we'll even be able to service the local market, which we have not been able to really do so far.
Mr. Garware, give us the texture. You said that 80-20 value added versus commodity core. How quickly does that shift given this acquisition now? You suggested that this acquisition will accentuate the shift. How much does it shift? What are the goals like?
That's a little bit difficult to define today, because this has just happened. So we will be working on it. We have already seen the shift even organically. So it's more a matter of focus. We have the core capabilities, the core machinery, and OTS certainly builds much, much further on that. So over the next 3 to 5 years, we will be looking at a significant shift in this portfolio.
Sir, talk to us about the 1-year growth path, which is FY26, given this acquisition, and then talk to us about the 3-year growth path. Do you see potential double-digit growth on a CAGR basis over the next 3 years or not?
Definitely on the bottom line, yes. So we do look to grow bottom line in the 15 to 20% range per year.
Okay.
I will be a little bit cautious on top line. It tends to have a lot of different factors. So, for example, freight rate changes or raw material changes, these are both up and down factors. So we will expect top line to be in maybe low double digits or high single digits, and we'll certainly be looking to grow profit at a much faster rate than that. And that's our key focus.
15 to 20% PAT growth, will that translate to cash profit?
Yes. So as you would see, normally our conversion of operating profit to cash is quite high.
Yes.
I did see that you were mentioning about last year, and we did have some. This is primarily because of some of the movement of material in Norway. We have shifted our billing from India to local Norway. So it moves then to Norway and is then locally billed from there. So a lot of that billing has happened towards the end of the year, and obviously that little bit of receivables collection happens in the beginning of the next year. So this is almost a one-time cycle that will get adjusted. But we do generate quite a lot of cash. Obviously, if our return on invested capital is in the range of 50%, we will be generating a lot of cash. So we do see that to continue.
So I fully appreciate you're extremely cash prudent, and from whatever I have done in terms of reading, you are that, and you need to give you that credit. I want to talk about certain risks in the business. One is you have the risk of consolidation within your customer base, within the farmer base, that a larger cohort of customers that you have. Is that a real risk? Give us some perspective on that.
Sure. Our customer concentration is actually quite low. So we are fortunate in that sense. There are 2-3 things that we're fortunate with. One is about 70% of our revenue comes from customers who finally produce food, be it aquaculture, fishing, or agriculture. So we tend to get a little bit insulated from economic cycles, both ways, up and down. So that's one good thing. Our customer concentration also is relatively low because we're spread over so many countries and many, many customers. Consolidation for us actually is not a concern at the moment. It's a good thing. We are with all of the larger aquaculture companies around the world. So Movi, which is probably the largest globally, customers like Cermaq, which exist in, it's owned by Mitsubishi. So these kinds of companies are the ones that are generally acquiring, and they have contracts with us. So the acquired companies would also become, generally will become, part of our customer base, which is great. So we are not very concerned with consolidation at the end user level because we already have good market shares, and we are with the major companies who are generally the acquiring companies actually.
Do local taxes therefore impact the way in which customers buy from you? Does that make an impact?
There was an issue in Norway where the Norwegian government imposed a resource tax on our end user customers for use of the Norwegian waters. That is very much a local Norwegian government tax issue. It certainly was not, liked by everyone, obviously, but I think from where the initial tax was intended and where it ended, things are very much accepted now and back to normal, even for the last year and a half or so. So there was a small pause in capex investments, etc., but that's well past, and it's very much now part of the system. So we don't see that as a challenge anymore.
So you've done ROEs of very stable, 18 to 20 odd %. Is there room for upside?
Certainly, even last year, in fact, our return on capital employed increased further, particularly if you remove treasury, and our return on invested capital has increased quite significantly, almost 4%. So we do see further room, and we will continue to focus on this. Within our company, our number one metric is return on capital employed. So, the entire team is aligned towards this. And this is something now we'll also be taking to this Norwegian company, and they're very keen and positive to work on further improvements of their ROC as well.
Excellent. Thank you so much, Mr. Garware. This has been insightful, this has been concise, and you've been very precise with your replies. Thank you.
Thank you so much. Thank you.
Okay, out of time, in fact, on this edition of KYC. Thank you for tuning in. From all of us who put the show together, really appreciate all the support we're getting. Thanks for tuning in.
Sources in ED seeking explanation on Yuvraj Singh, Harbhajan Singh, on why they are endorsing such platforms which are banned by Government of India, and the mule account and Benami transaction, the kind of promotional payout being given to some of the media houses, the ad rates are between 50 crore to 100 crore.
What happens in reality is that under the garb of skill-based game, they end up promoting gambling only.
27,000 crore is what the tax evasion, the top popular betting apps are actually evading. Between January and March alone, they have seen 1.6 billion of traction.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. This show gets you actionable insight on everything personal finance related, and it's for a wide variety of individuals of different contexts. Ultimately, that is what makes personal finance personal. And today I'd like to talk about a growing trend. More and more couples are deciding to get married late, and quite a few are deciding to not have children. There is a term for it. It's called double income, no kid. And this is not necessarily always by choice, but largely we're hearing anecdotal evidence suggests that a lot of people are choosing this. We're not getting into why people are doing that. What we're discussing on today's program is how you should plan your finances if you are a couple with double income and no kids. Joining me today is Nisreen Mamaji, who is the founder of MoneyWorks, and also Vishal Dhawan, who is the founder and chief executive officer of Plan Ahead Wealth Advisors. Thank you so much to the both of you for taking the time. I want to actually start by asking both of you, Vishal, let's start with you. In your own conversations with your clients, are you coming across more people than you did perhaps a decade or a couple of decades back that are in this kind of a situation where they've chosen to not have children?
We're definitely seeing a rising trend, and I think a lot of it is very deliberate because there are certain choices that couples are making together in terms of some of the freedom that they want, both in terms of their careers as well as some of the responsibilities that come with having children. And therefore, we are clearly seeing an increased trend in more and more people wanting to let their careers and their freedom dictate whether or not to have children.
Okay, so that answers my question. Nisreen, I want to come to you on this one. Let's start the conversation with identifying how it differentiates from the regular couple who decide to have children. And of course, biologically, it's the earlier you have children, and you're the best place to tell me that the best time to have children is early for various reasons. What is it financially? And also talk about how things change if you don't have children.
So yes, I think I would agree with Vishal that there is a rising trend for pet parents, actually. A lot of, my children's friends also are going in for, having dogs and cats and substituting that parental feeling, maternal or a paternal feeling with looking after a pet or plants. So I would agree that this is a trend, and, either they are delaying children because both of them are working, and also they want to keep the, geographical mobility very high on the requirements list. So they don't want to get bogged down with, school dates and, geographical cities that you have to belong to because you have children. So there is a rising trend. I mean, it's not extremely common, but yes, there are young couples now who are, coming to MoneyWorks, and they are only talking about, their goals minus children. I mean, they're very clear that children are not on the cards right now and maybe later. So I think this is a phenomenon, it's a Western concept. My own nephew has also followed it for many years. He's been married nearly 4 to 5 years, and they have Toby, their dog, who is their child. So this is he lives in the US. It's a Western concept, and I think it is kind of carrying forward to India, but possibly in the Tier 1 cities. The Tier 2 and Tier 3 haven't caught on with this, but definitely a growing phenomenon, yes.
Okay, so then Vishal, the question is, if you are someone like that or a couple like that, then how should you approach? And let's assume that maybe they've started doing a certain amount of saving, they've been contributing to a corpus together, or they're starting fresh, and let's assume that if they have to rework their strategy, they can do so after this conversation. So how would you approach the first leg of it, which is setting your goals and identifying how much you can save on a monthly basis?
So I think a lot of the goals will be similar to couples who have children as well, and some of them will be distinct. For example, we see the need commonly for both types of couples to have a robust emergency fund just in case they have a health issue in the family, in case they have a job loss, any of that. I think one of the things that tends to happen with some of these families is that they may choose to take sabbaticals at different points in time simply because they want that greater flexibility. And one of the reasons why they don't maybe have children is because of the need for flexibility. And therefore, the more you want to build out to have that ability to take career breaks, sabbaticals, etc., the larger the need for that emergency fund to be well created. The second thing that does tend to happen is that a lot of these couples do want to travel a lot more. And because they want to travel a lot more, their requirement of monies on that list tend to be much higher. So we do come across families who say that, one of the things I want to do is travel to Antarctica, for example. And we don't have children, and that's a bucket list item that we want to achieve. Now, clearly, a trip to Antarctica requires a much larger amount of money and much more planning than what you would do if you were just to catch a flight and, let's say, go to the Middle East. So the way that planning happens around those goals can be different because of the quantum which is involved as well. And lastly, a lot of them do want to become financially independent and retire much earlier. So the FIRE movement is very commonly something that these couples look at, and therefore the need for them to be prudent with the way they spend, the way they invest, how quickly they want to get to that financial freedom. All of those are important elements when they start planning their monies.
Yeah, I do want to point out that there is no judgment here, and there is no suggestion that this is the right approach or not. It's ultimately the couples that are deciding what they want to do. But having said that, I wanted to discuss a model portfolio and caveat before we do. This is not necessarily something that you should do just because we're talking about it, just to give you a sense of how to go about an ideal asset construction, and your context might actually require a different approach entirely. So do consult with your financial planner before you get into something like this. But Nisreen, I suggested a couple that is between 30 and 35 that does not have children, that is both earning. How would you set the parameters for constructing a portfolio, and give us a model portfolio as well?
Sure. So, here, Alex, we can assume that, possibly their tenure is higher because they are in the 30 to 35 age group. So therefore, their equity allocation would automatically be higher. They would possibly have a fewer, lesser current liabilities. So there's more room for growing of wealth. We need to have flexibility, but there's obviously, no requirement right now for, say, down payment. So their future goals would be like wealth creation, travel plans, etc. Early retirement, house, maybe, much later on. But currently we would plan on, say, the medium-term goals, which could be wealth creation and travel and early retirement. And emergency funds, because, such a couple also would tend to take sabbaticals, as mentioned earlier, take longer vacations, take work also on project base where, they work for 6 months and then they're kind of not working the last 6 months. So a lot of couples have started this kind of, job structure also. So here what I would recommend is, say, a 70%, 100%, growth allocation towards equities, which could be possibly invested in, if you need the names of the funds, we could have, like, say, FlexiCap funds, we could have Parak Parekh FlexiCap or HDFC FlexiCap for about 20% of the fund allocation. A large and mid-cap funds for 25% allocation, which could be Mirae Asset, Emerging Blue Chip, or Canara Robeco large and mid-cap. These are the kind of funds that would be part of the 70%. So 20% towards FlexiCap, say perhaps 25% towards a larger mid-cap strategy, 15% towards a mid-cap strategy like Kotak HDFC mid-cap opportunities would be a good fund. And, we could also go sectoral or thematic 10%, where we would recommend, say, ICICI Innovation or SBI Consumption Fund. This would be like a tactical allocation. So your mid-caps is focusing on higher growth and possibly will give you higher volatility. Your thematic and sectoral funds is for your tactical allocation. 10% could be, either ICICI or HDFC Balanced Advantage Fund. And also, say, a liquid fund. It could be ICICI or Nippon Liquid Fund. and a shorter term or duration fund to about 5%, which is your Kotak savings fund or your SBI arbitrage fund. So this 5% is basically for your emergency funds or your short term liquidity. And you can also go 5% towards, say, a US or a global fund. So that possible suggestions are Motilal Oswal Nasdaq 100 fund of funds or a PGIM global equity fund. So this is for your currency hedge. So just to as a synopsis, 70% towards long-term capital growth, which could be equity funds, where I've already mentioned it's a mix of flexi cap, large and mid caps. 10% towards hybrid funds. This is just to smoothen the ride and to ease the volatility. 15%, which is for your emergency funding, which is long-term and short-term goals. Short-term and liquid goals, emergency funding 15%, and 5% is international equity, just for your global diversification and currency hedge. So that's your entire 100% model portfolio.
Okay, just to follow up on that, I notice in the international allocation you've done a Motilal Oswal Nasdaq 100 FOF, which is a fund of fund and not the ETF. I just want to draw attention here that ETFs, particularly those of Indian mutual funds that allow you to invest globally, like the Hang Seng Bees or even the Nasdaq 100, they do trade at a premium on the Indian exchanges, and so therefore I'm asking, is the fund of fund route at this juncture better? Is that why you suggested it, Nisreen?
So, both the options are available to you. The exchange traded funds, you would possibly go to any of your, trade on your own through any of your apps, etc. And if you're taking a consolidated view, then the funds will gain importance, because then, your entire investment is viewable on one format, and also possibly your planner or distributor is also a single person. So for ease of convenience, a fund of funds would, was possibly recommended. Then you deal with one person for across the board. But if you also have a stock portfolio and you're also trading on your own, then yes, you can go for the ETFs also, which would make it convenient for you. Yeah. So both the options are available for the investor.
But do bear in mind, of course, that those ETFs are trading at a premium to the NAV because of the kind of demand supply gap that you're seeing in international funds that are currently available in India. Vishal, would you change anything in your opinion in that allocation that Nisreen just spoke about?
I think I just maybe tweak a couple of things in there. Most of it is very much aligned with what we would think about. I think the fact remains in our experience that because travel is such a large part of couples who have no children's sort of agenda, that international exposure in our mind would probably tend towards 15 or 20% of a portfolio rather than about 5%. And the second thing that we do continue to believe needs to find a place across all portfolios is some gold exposure. As much as there is a risk that prices today may be a little overdone, but I think from a longer term perspective, having between 5 to 10% allocation to gold or gold and silver is probably a good idea as well, even for these couples.
And through ETFs would be the best approach, Vishal?
Yes, ETFs are a good option. Of course, on the international side, there are a lot of challenges, some of what you mentioned already around premiums, etc. But there's also just the restriction that a lot of funds don't accept money at all. And therefore, that strategy may need to be thought through carefully on whether you want to do it domestically or whether you want to use LRS and buy ETFs internationally so that you're able to get access to those products.
And gold and silver through ETFs?
Yes, that's right. Gold and silver through ETFs.
Okay. So the other question, and Nisreen, you did allude to this while you were speaking about the goals that a couple might have. You spoke about buying a house. Now, a lot of young couples decide to live on rent for various reasons, particularly, as you said, in your metropolitan cities, your tier 1 cities, because prices of property are unattainably high. Let's face it. Even if you're earning a significant amount of money per month, just the cost of acquisition makes it very, very difficult to achieve. So a lot of them choose to live on rent rather than buy a property because the mathematics just don't make sense. But at some point, do you think every couple needs to have a house? And at what point should you go ahead and buy something like that?
So, I'll summarize that for you, the pros and cons of buying versus renting. So basically, if you want to buy a property, then, you don't have any landlord headaches, rent hikes, lease terminations, the constant headache that, you have to move in a few years. So there's a bit of stability and control. And you can also customize the home to your lifestyle. So, if you're working at home, then you can have a small dedicated table there. If you like to, gym at various timings, you can, adapt certain areas for keeping a treadmill or certain weights, etc. Sometimes landlords have a lot of restrictions about, drilling in the walls, etc. So if it's, you can customize your home if you're buying a property. Also, this can be an asset creation. It's a long-term asset. There's potential appreciation over, 10, 15, 20 years. So, you can keep that into account. You can also, use this property for monetizing later on. So you can either sell this property, you can rent this property, you can use it for reverse mortgage, in your retirement years. It's also an inflation hedge. So real estate often keeps up with or exceeds inflations over longer periods of time. Over the shorter periods, we find that the rental yield for residential is only about 2%. And for commercial is about 5%. But over the 30-year period, you will find some appreciation as well. And there's no forced, retirement moves. Like, for example, if you have your own property in the city that you've been working in, then post-retirement, there is no other move that you have to adapt to another city and, get reused to living and working, in a different area in the retirement phase. That also gives you ease of mind while you are planning and during your accumulation phase. Also, you can use it for like a legacy for your children, or if you don't have children, then, charity purposes. So you can build that property going forwards, to whatever you desire. If you have children, then obviously that way, and otherwise, for charitable purposes. Now, the disadvantages typically would be, reduced flexibility. Now, it's harder to move cities and take sabbaticals or explore, global living options. Like I think Vishal earlier spoke to, say, a trip to Antarctica. I do have some investors who live 6 months of the year in Uttarachal, where they kind of just, rent a place and then, in the beautiful climate, Uttarakhand, and, in the mountains, and, they're writing over there, they're working remotely. Now, if you have your own property, you can't have this kind of a lifestyle.
Yeah.
So it depends on the lifestyle that you choose.
So all of those points are very valid, Nisreen. Apologies, I'm cutting you off, but what I want to get at is the security of having your own home. At some point, these couples, even if they don't have children, will have to stop working, will have to stop earning, and so therefore paying a rent is going to be difficult. So therefore they would eventually have to buy a home. At what point do they decide to do this?
So, it's an emotional and financial decision, to be very honest. So I think, for people who are in their mid-30s or approaching 40, if that is the time that they could be looking at, buying their own property, maybe a little later, because the difference in the EMI and could be invested in a very good SIP also. Now, if you're buying a property, say about 1.5 crores, say in Bangalore, 1.2 crores, your down payment is about 24 lakhs. And, you've taken a loan for the balance 96 lakhs at, say, 8.5% interest for, say, 20 years. So your EMI would be 83,500 a month. Vis-a-vis a rental property that you would be doing very similarly would be somewhere, 35,000. So the difference in the in your investment amount is about 48,500. So if you were to invest that into an SIP, for example, plus if you buy the property, then there would be some down payment that you have to put down, say about 20%, around say 24 lakhs. So when you do the math, the later that you buy and the higher amount of SIP that you invest in will possibly, you'll be able to buy a outright purchase, say 20 years later also. So you don't have to go through that, EMI route right from your 30s. So as per the, theoretical calculations, if you are around 40 to 45, and from the age of 25 to 45, you've invested in very good SIPs, which had yielded you, say, about 11% compounded annualized growth rate, then 20 years later, you will have about, say, 6 crores in your account if you've invested about 50,000 per month in an SIP. So you can do an outright purchase at that time, and you need not have gone through this down payment and EMI route.
Yeah, it's an important point. Vishal, so therefore, just to drive home this point, compounding works beautifully once you've achieved a certain scale. And so would it be okay to say that at the early start, at the early part of their life together, if a couple is focusing their efforts on building this corpus and letting it grow over a period of time, they don't necessarily have to rush into buying a property. They can do so towards the latter part of their careers, which in several cases is around 50.
Okay, I think, one of the reasons why a lot of people have, first of all, made the choice not to have children is because they want more flexibility in terms of their jobs, their travel, etc. And the moment you buy early, you tend to get tied down. The EMI sort of holds you back because if you want to become an entrepreneur, for example, you're worried about supporting the loan. So all of those things are actually going against your original thinking. And therefore, I think making this decision later is a good idea, because it then allows you to make that decision after you've finished with a lot of your job and career related decisions. And you're making this choice now basis a lot of other new things that have emerged for you. For example, as you get older, you might decide that access to good healthcare could be a primary decision point, or you could decide that being closer to where my social network is, my friends, etc., because I don't have children, might be an important decision point. So I think making that decision later on typically tends to work well, even from a non-financial perspective.
Okay. Now, beyond the scope of what we just spoke about, which is about double income, no kids, I did also want to talk to you about the key mistakes that people are making in their investing journeys. And it's interesting that we speak about this because I saw in the latest data from the Association of Mutual Funds that the number of discontinued SIPs has actually gone down quite dramatically. It's lower than it has been in the recent past, which bodes well. But having said that, the net inflows into equity mutual funds last month was not the best. And that is because of geopolitical tensions and everything that panned out, and that just drives home the point of the impact of behavior. So let's talk about a few of these things. Incidentally, I asked both of you the same question. We've come up with the same list, more or less. So let's start one by one. You both listed chasing past performance. So we'll just ask one of you to do it. Vishal, why do you say this is the most important one to focus on?
So I think it's reasonably common to see a recency bias come in, and I think we're all sort of prone to that risk. And this happens across asset classes. It could be happening across equity markets, when you're making mutual fund decisions. Gold has done really well. There's a lot of money wanting to buy more gold. Real estate has gone through a good cycle. So, everyone sort of assumes that the future is going to be like the past. And the risk in that model is that you very often tend to buy at peaks and also you exit at troughs automatically because of this thinking. And we need to keep in mind that a lot of how asset classes behave do tend to be cyclical in nature, which means that there are both global as well as local factors dictating how they perform. And therefore, just looking at past returns rather than thinking a little forward in terms of what is happening and whether that good performance or bad performance is likely to continue is a very, very important thing that investors need to protect themselves from.
That ties into the second point that Nisreen has made, which is a lack of asset allocation, in which he's talking about the requirement to have a holistic approach to building a portfolio. I'm going to skip past that because it kind of ties into the first one. And don't tweak your portfolio every second month. It's counterproductive. The third point is ignoring risk tolerance and time horizon. And this, I think, is pretty self-explanatory as well. Let's run through them quickly because we're running out of time. Important point to make, Nisreen?
Sure, I'll just, tell you this with an example. There was Sunil, he was 38, he was working in IT. He invested about 10 lakhs from a recent bonus that he got in an aggressive equity fund. And he was actually, that was required for a home purchase in about 18 months. The market's corrected and his investment dropped to 8.5 lakhs, So then he had to dip into his emergency funds and borrow at high interest, etc. So it's very important for one to know, the eventual goal that you're actually investing for, to know your risk appetite and your time horizon both, and tie it up into the investment while you're doing that. So I think that was, well explained with Sunil's example.
Okay.
Alex.
Yeah. So there are a couple more to run through. One is underestimating liquidity needs. And I think a lot of people realize this a little too late when they don't have a choice. And this is the emergency fund, I guess, that you're talking about, in the available liquid assets. Vishal, is that right?
That's right. So one is the emergency fund, and the second is there are just certain types of asset classes which tend to be less liquid. For example, real estate, or when you buy certain types of long-term bonds, they may not be liquid at all. Or there could also be other assets like equity or cryptos, for example, which are very volatile. And therefore, when you need the money, they may not be at a price that you're going to want to sell them at. So I think it's important to ensure that you look at risk and return, and you look at liquidity, and don't underestimate, the importance of liquidity when you're making decisions.
Yeah, and both of you have identified behavioral traps, and Nisreen, you've pointed out acting on emotions, which is fear and greed. Ultimately, that does determine market moves. But a lot of investors have proven that if you hold and if you stand the test of time, that is a better approach than trying to time the market and move very quickly to take advantage of short-term spikes or falls. Both of you, thank you so much for joining me today. Absolute pleasure having you on the program.
Thank you so much.
All right, well, that brings us to the end of this edition of Your Money Matters. Thanks so much for tuning in, and do stay tuned. Lots more coming up on NDTV Profit.
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis, conversations that matter. We break it down, cut through the noise and set the context for you. Hear from top policy makers and thought leaders from the world of business and beyond. The big question really is, are companies using dark patterns to take you for a ride? The big question we're asking today, is the US heading towards a recession? The big question is, are we sacrificing our health at the cost of convenience? The questions you care about, asked and answered. The big question.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
Hello and welcome to NDTV Profit. You're joining us on this special broadcast where we're actually talking about a very crucial issue that affects India's nuclear power ambitions. Now, India's nuclear power ambitions have set a new set of backers coming in, and that is the private sector. While delivering her budget speech in February, the Finance Minister Nirmala Sitharaman had spoken about a proposal to allow the private sector to participate in the efforts that India has. By 2033, India plans to have 5 small and modular reactors with the private sector. This is to aid India's plan to have 100 gigawatt of nuclear power capacity by 2047. Already, the Nuclear Power Corp of India, the Corporation of India, has sought bids from private players to set up 2 small reactors of about 220 megawatt electrical each. The response to this bid has actually been very strong. Leading private players like Adani Group, the Reliance Group and L&T have all expressed their immense interest in participating in this entire process. The Finance Minister has, of course, also spoken about the changes to the Atomic Energy Act and the Civil Liability for Nuclear Damage Act to boost these efforts. Our guest on today's show, who is Vinayak Chatterjee from InfraVision Foundation, he has estimated in a recent column that the private sector could contribute about 50% of India's nuclear power needs in the coming few years. And I want to welcome Mr. Chatterjee to this conversation. Mr. Chatterjee, welcome. I want to first start off this conversation with this 50% number. Now, I know that you were quoting the NPCIL chief when you said that, but how do you see this playing out?
You know, this is a very important shall I say, point of inflection for India's power sector. And I want to step back for a minute to just share a statistic with your viewers, is that in France, 70% of French energy needs are from nuclear. Now just think about that. Whereas in India, only 2% of our capacity is nuclear. France has gone overboard in terms of relying its dependence on fossil fuel from a strategy that they unleashed in the 1970s to reduce the dependence on fossil fuel. And I think in many senses, India has lost a fairly large number of years, because I would say that we've probably lost, close to 75 years, because the nuclear program was envisaged and unveiled by Dr. Homi Bhabha in the 1950s. And since then, it has kind of been sputtering with the net effect that we've got only 8.8 gigawatts out of our 400 gigawatts installed capacity. But now, what you just said is that there seems to be a fresh reawakening that nuclear power is going to be a very important portion of our energy basket. For a variety of reasons. Obviously, it is to reduce dependence on hydrocarbons. It is to meet our clean energy commitments of net zero by 2070. And also to, in a sense, look at not the complete dominance of the sector by the public sector, but to allow private sector to come in with the view till 2047, as you just said, that was announced, to have private sector contribute about 50% of the envisioned capacity of 100 gigawatts. 50% will be private sector, but through a very important technology, not heavy duty large plants of 3,000 or 4,000 megawatts, but a series of small, what is called SMR, small module reactors, which are anywhere around 300 to 400 megawatts. They unlike the large atomic energy generation plants that need to be set up in situ, means assembled at site, these can be like turbines and generators. These can be factory made and assembled at sites. It could be an industrial cluster, it could be a refinery, it could be a city to supply. So it's a completely different way of looking at nuclear energy for 2 reasons. For 3 actually. 1, to consider it as an important element in the overall basket, to have private sector do about 50% of it, and 3, to use this SMR technology, which is safer, factory produced and in smaller modules in a largely dispersed manner. But over to you.
Let me break this conversation down into multiple pieces then. The first one, which you said that we've lost about 75 years in developing our own sort of nuclear power capacity. I just wanted to get a sense of what the legislative part of the story has looked like over these last years, and of course then what the public sector has achieved in all of these years of attempting to develop a strong flow of nuclear power.
Look, why wouldn't blame the public sector for lack of, shall we say, the state of our small capacity today? Because remember, nuclear power is an extremely, or has been an extremely closely held technology by the superpowers. And they have been very, very reluctant over the decades to supply, the fuel, nuclear fuel, uranium and other derivatives to India, because of the fear that India would develop, nuclear armament capabilities. That has always been the fear. And therefore, there have been a whole lot of restrictions where the Atomic Energy Club has been a very closed club with all kinds of barriers to entry. And India suffered because of that, because of our neutrality, because of our, non-alignment, etc., etc. So the fact that Dr. Homi Bhabha's vision could not be fully unveiled was, I suspect, a creature of geopolitics and the fact that it was a closely held technology in a closed club. But that's about to change right now. That's the hope, right? So over to you.
Mr. Chatterjee, I wanted to pick your brain a little bit and try and explain to me a little bit about what is it that you are looking forward to at this point in time. Yes, the private sector is slowly coming in. NPCI is opening up certain bids for these SMRs or small module reactors that you spoke about earlier, inviting private sector participation in developing them. But at what pace do you think this is going to grow? Because the ask is 50 gigawatt, because 50% of 100 gigawatt, that's what we're talking about, by 2047, which is just about 22 years away. How do we reach that number with the current level of private sector participation?
See, it would be to open up the field to a large number of investors, right? But there are two impediments, and you touched upon them in your opening remarks. The first is the Nuclear Liability Act, which was kind of signed off during the famous Dr. Manmohan Singh's signing of the Civil Nuclear Act with USA in 2005, which also was a seminal step, but it kind of lost momentum after that, where we signed the Civil Nuclear Liability Act, where India was fairly, was fairly adamant that the nuclear liability, should any accident happen, would remain with the suppliers. In essence, there are many other bells and whistles in that, but this was the fundamental point. And since then, suppliers, like major suppliers like Westinghouse, like Hitachi, like Areva of France, have been extremely cagey about participating, because they said, look, after we have supplied the equipment, for the next infinite number of years, we can't be held responsible for any misdeeds that may happen in the operating style, which may lead to an accident or a leak or anything of the sort. So the Nuclear Liability Act was, looking back, quite harsh and prevented the rapid development of the sector even after signing the act in 2005 with USA, Civil Nuclear Act. So one of the ideas now is to reduce the liability clause to make it far more practical, to share the risk between the equipment supplier, the operator, and the conditions thereof, and the harshness of it. That's point one. Point number two is to actually make, for since we are now expecting the private sector to contribute 50% of the capital. Remember, nuclear power is capex intensive and is therefore, in many senses, unviable. The capex could be, anywhere which 4 to 6 times the capex required to produce the same unit of electricity, whether it's renewable or coal thermal. Now, if you have to get private sector in, then you have to look at incentive packages like viability gap funding. For example, let's take a look at semiconductors. In semiconductors, the Tata Group is investing 90,000 crores for, obviously, a proud investment for India to take our march into semiconductors at Dhodera and Gujarat. But it is getting a 70% fiscal support, often called viability gap support. 50% is from the center and 20% is from the state of Gujarat. So 70% of 90,000 crores semiconductor investment is taken care of by the state to encourage the sector. Now, it's extremely important that we encourage the nuclear sector, and therefore, options like viability gap funding, like fiscal support, soft loans, all of these need to be welded into a package to make it not just attractive for the private sector, because attractive is an interesting word, but to actually make it viable for the private sector to enter nuclear power production. That is point number 2. And point number 3 is that currently the private sector believes that even operating the plants after putting the capex is subject to many restrictions, that the plant will be operated by people who are employees of National Power Corporation, or that they will be in charge of many aspects of operations, and that private sector will only put in the capex and take the market risk. Now, this is the current set of perceptions, and these perceptions require to be handled, and therefore the exact nature of the public-private partnership is still work in progress. But I am told that the government is alive to the fact that it needs to balance private sector interest, enthusiasm with the necessary regulatory safeguards and come up with a package that is a win-win for all players, including the citizens of India. But over to you.
If you were in charge of developing these amendments to the Atomic Energy Act or the Civil Liability Act, I'm trying to understand what specific changes would you recommend if this was a decision that laid with Vinayak Chatterjee?
I would find it difficult to answer the question because it involves extremely scientific and technical details which are beyond my pay grade, to be frank with you. I know the issues, but it is actually, the subject is extremely technical, and therefore I will not be able to give you the exact contours.
Fair enough, Mr. Chatterjee. I wanted to ask you, so you mentioned the cost aspect of it. Of course, the numbers that we have, and these are numbers largely provided by you, about 16 to 20 crore per megawatt. That's the capital cost of setting up a nuclear power plant, power project, versus coal, which is about 9 to 10 crore, and solar, which is even lesser, about 4.5 to 5.5 odd crore. I wanted to get a sense of, is this a situation where higher volumes means lower costs? So therefore, as the expansion happens, as more and more capacity comes in, you will find it cheaper to then develop more future capacities?
It's a difficult question to answer. I will draw a parallel situation with hydropower. Hydropower is very capex heavy because you have to build huge dams and catchment areas and all kinds of stuff. But over the life of the first 5-6 years of a hydro project always look unviable in a feasibility report, because you got to service the capital, etc., with very heavy capex in the first years. But the beauty of hydro projects is that the raw material is virtually free. In a sense, it's water flowing down. So the balance years of a hydro plant make it an extremely profitable venture. But the first 6-7 years have to be taken care of by having a long tail, where large part of the financial, servicing the financial burden has to be pushed to the longer end of the tail. Similarly, nuclear is very capex heavy, but going forward, it is expected, with the nature of the costing of the fuel supplies, which will be government controlled, it is expected to have far lower operating cost. So the balance between high capex and lower operating cost on a running basis has to be handled in a similar to the challenge handled in hydro. But all said and done, even if that is done, there is no question that it will require various kinds of capital servicing, capital subsidy, as well as soft loans, as well as a long tail to service the capex. And that should be one of the critical financial issues that the government has to address. But as I said, the government is alive to such issues, and the semiconductor example makes the point.
Okay, I want to touch upon the status of infra development in India in general, and we'll add nuclear development on top of that. To your mind, what are the specific sort of efficiencies that a private sector player brings in? Because we've had about 70 odd years, 50 odd years of private sector players coming in and starting to build projects en masse, and especially over the last 30 odd years. How do you see the efficiencies that a private sector contractor, private sector builder can bring in. And here we are talking about names which are, Adani Group, Reliance Group, L&T, who are all given the sort of title of being India's biggest builders, right? How do you see the efficiencies coming in then?
Look, this is an easy question to answer. I mean, there has always been the question of why PPP? Why do you want private sector in the infrastructure sector? It's not just about money. It's about bringing in efficiency. So why I'm saying it's easy for me to answer this question is you just have to look around you. What was telecom before private sector came in? What was the state of our airports before GMR, GVK, Adani came in? What was the pace of implementation of power projects before the biggies came in? How much has the distribution increased, the efficiency increased in Mumbai and Delhi and many other cities when distribution was thrown open from the moribund state electricity board and discoms to the private sector? So the answer is today not a theoretical question anymore, that why should private sector come? Just look around you and you will see the kind of modernism, efficiency, service level that private sector brings in. Not just capital, although bringing in capital is an important point, because if you notice that in the last union budget, the growth in the union budget, the growth in infra spends has plateaued. It has just been an increase from around 10.2 to about 11.1, so it's plateaued. So, and the FM is concerned about meeting her fiscal deficit targets, which are tough. And therefore, to build infrastructure in the country, obviously the capital from the private sector is important, and not just from domestic capital. Please remember that foreign capital, long-term pension funds, insurance funds, etc., are very bullish on investing in Indian operating brownfield assets. So, and so therefore, look around you, and the answer is clear.
Yeah, then I want to add a point to this. So then, are we to think of newer styles of financing these projects? Because as you said, they are nuclear power projects are significantly capex heavy. You would have to think about it differently than what you would look at a conventional power plant as such.
See, let me give you one extreme example, and that's not a private sector example. Sure. Look at the financial structure of the bullet train. Japan through JICA has given 60-year money at 0.5% interest with a moratorium of 15 years. Now, just think about it. Think about that capital structure which enables a high capex bullet train project to be developed by a developing country like India. Now, I'm not saying you need that level of, shall I say, an extreme financing structure, which is very welcome. But if the state were to bundle a financial plan and then have and give it, and package it for, let's say, Japanese or Nordic or Gulf sovereign funds, and the government of India stood as sovereign guarantor to them and has a package which is long, low interest, high moratorium, and then distributed that finance to the developers of nuclear energy. Those are the kind of steps I'm looking at, that the state must be a partner, not just in creating an appropriate regulation, not just in supplying of regular fuel assurance at appropriate prices, but also to create a financial structure based on the strength of the Indian state and the confidence that people have that India never defaults, to stand as a sovereign guarantor to a very long-tailed, cheap finance available in a holistic manner, a line of credit, which it then cuts and makes available to the chosen developers of nuclear power. Those are the kind of thoughts that's going through my mind.
I want to ask you last couple of questions. Now, there is a talk about allowing, considerable foreign direct investment. Of course, there's no confirmed news at this point in time. We don't have confirmations on this. But news reports have suggested a 49% FDI might be allowed for nuclear power projects. Is that kind of, when you say foreign capital is needed to develop these capacities in India, is that the kind of push that you're expecting?
Well, it's one of the elements. Allowing 49% is safe, 51% remains with Indian players. But remember, we ultimately, while we are developing SMRs with NPCL technology and our own initiatives, a wide variety of dependence will be there on foreign equipment suppliers. And there are just a handful of them, as I mentioned. There is Westinghouse, there is Hitachi GE, there is Arriva, etc., etc. But giving 49% not only gets the capital in, but also gets the expertise in building and running these plants. And that would be welcome. And we have a case of, 100% FDI. If you take the new airport outside Delhi at Jewar, it's 100% FDI by Zurich Airport. Bangalore Airport is owned also by largely with FDI, with Mr. Prem Vatsa's investment. So we have reached a stage where large portions of Indian infrastructure have welcomed coal thermal plants. We have foreign players who have invested. So giving 49% is logical, both from the view of attracting capital as well as from the fact of accessing technology and competence.
One actually, two more questions, but one question specifically, because the current geopolitical situation is sort of, talking about a nuclear power nation, which is being accused of developing weapons grade nuclear power. What I wanted to understand is, in case there is some kind of geopolitical tension, what happens then? Does the presence of the private sector, does the involvement of the private sector sort of take away that kind of negative view around nuclear power?
I suppose so. I mean, as I started your session by saying, 70% of France's energy is nuclear. Does that mean that all of us are extremely wary about France as a nuclear power? No, we aren't. Because the uses of nuclear technology for civil nuclear power are vastly different from its usage in military applications. And you cannot deny the fact that across countries in the world, many countries have a high percentage of their energy needs coming from nuclear. So to my mind, they are in two separate bins. And I don't think that India increasing its share of nuclear would largely create any fright in the rest of the world, because India is considered a very mature player in this regard.
And my last question then is the energy transition goal that India has. Now, of course, I mean, everybody, including the government, has specifically said that this 100 gigawatt target that they're talking about 2047, that is going to be crucial as part of India's goal to have a more sustainable energy source in the future. To your mind, what is then the goal once you have achieved that? What do you go for next?
Well, actually, 2047 is not the real goal. 2047 is fine for a target that we've got to get 100 gigawatt of nuclear by 2047. The real goal, the committed goal by India is at COP26 in Glasgow, where we said that we would be a net zero nation by 2070. And that is a tough target, because we have that many years to add all kinds of non-fossil fuels, whether it's solar, wind, tidal, geothermal, nuclear, all kinds of and hydropower. All of these have to be added as non-fossil sources of power to enable India to be net zero. So nuclear is with 100 gigawatts target by 2047. Hopefully by 2070, we will not only be 100 gigawatts, but we'll be 200 gigawatts. That or more. That would be a very important element of driving India's commitment to be net zero by 2070. So nuclear has a very major role to play.
All right, Mr. Chatterjee, thank you so much for taking time out and talking to us about these different aspects about nuclear power and India's ambitions, as well as, of course, the private sector push that's coming in. That was Vinayak Chatterjee from InfraVision Foundation joining us on this conversation, especially to talk about nuclear power. What is he saying? Well, essentially 100 gigawatts by 2047 is a great target to have, but the eventual goal is to be net zero on the power side by 2070. So this will aid in that entire journey. That's it from me right now. Thank you so much for joining us. Stay tuned to NDTV Profit for more news and updates.
Sources an ED seeking explanation on Yuvraj Singh, Harbhajan Singh, on why they are endorsing such platforms which are banned by Government of India, and the mule account and Benami transaction, the kind of promotional payout being given to some of the media houses, the ad rates are between 50 crore to 100 crore.
What happens in reality is that under the garb of skill-based game, they end up promoting gambling only.
27,000 crore is what the tax evasion, the top popular betting apps are actually evading. Between January and March alone, they have seen 1.6 billion of traction.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, Real-time stock picks.
Do I buy Ola?
Should I
or
hold
lifetime investment
CDSL
पर क्या
for the long
रहेगी
term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Good evening, you're watching The Big Question. I'm Sanjana. This is a discussion that has been hot and engaging for many months now. India is at the cusp of a pharmaceutical shift. With Novo Nordisk launching Wegovy and drugs like Ozempic and Mounjaro already making waves, we're entering an era where weight loss can now come in a weekly injection. That's right. Originally designed for type 2 diabetics, these GLP-1 drugs are now being used widely by non-diabetics, celebrities, tech CEOs, even everyday professionals like you and me are seeking rapid fat loss. And their rise is reshaping everything. Pharma stock valuations, healthcare ethics, and public perception of weight and wellness. So on the one hand, these drugs have proven to help patients lose up to 24% of their body weight. On the other, there are growing concerns about misuse, side effects, and whether we're normalizing a shortcut culture in health. But the impact goes beyond medicine. Global pharmaceutical giants are racing to grab market share in what's projected to be a $100 billion industry. Indian investors are watching Novo Nordisk and Eli Lilly, stock soar. Fitness chains, diet apps and nutraceutical brands are preparing for disruption while insurers grapple with how to classify and cover this new class of drugs. But what does this mean for India? A country where obesity, stigma and health costs intersect in deeply complex ways. Are we moving towards a future where weight loss comes in a weekly injection? So tonight we're asking, are weight loss drugs a medical revolution or a lifestyle crutch? Should they be celebrated for fighting obesity or questioned for encouraging misuse? And what happens when the definition of need becomes a matter of personal choice? Let's debate responsibly and with science at hand. Joining us for this very crucial discussion, I have Dr. Shikha Sharma, founder of One Health, a renowned nutritionist who's raised concerns about non-diabetics using these drugs. Dr. Dilip Bhansali, national president of the Indian Medical Association, who argues, Dr. Bhanushali has argued in the past that we must tread with caution, especially outside of clinical use. Ryan Fernando, celebrity nutritionist and founder of Qua Nutrition, who sees potential in the drugs but only with careful case-wise assessment. And Dr. Sanjay Kalra, endocrinologist and vice president of the South Asian Obesity Forum, who believes that these drugs can be safe and effective even for non-diabetics under supervision. Dr. Kalra, I'm going to come to you first. Wegovy results are being called a game changer, not just for diabetes, but obesity itself. Can you help us understand the science here? Why do these drugs work so well for weight loss? And why are some doctors, if I can say like yourself, open to, prescribing them to non-diabetic patients?
Thanks a lot, Sanjana. This is really important. So before we go into this question, first let's understand what disease and health means.
Okay.
Health means a state of not just good biomedical health, but also emotional, psychological, social health. And then we need to add to this definition, it should be sustained health. If today I feel that I'm healthy, that's not enough. If I continue on the same trajectory, the same path, I should remain healthy tomorrow and day after as well. This is what health means. Now we have challenges to our health. It may have been smallpox in the past, polio in the past, and recently other viral infections. But now obesity has emerged as a major public health problem. I may say that today I'm obese, I have heavy body weight, but I'm healthy, I don't have any other problems. But the thing is that medical research shows us that if I continue on the same path, sooner or later, I will develop complications of obesity. When should I begin fighting them? Should I begin fighting them after I've got complications, after I've got disease and dysfunction, or before that? This is a question. Another question is, in general, in medicine and in health, in life, we want linear or binary equations. So, for example, your thyroid is high, you take a tablet which brings the TSH down. Obesity does not follow this Newtonian pathway, this linear pathway. Obesity follows the pathway of quantum physics. So multiple factors leading to obesity.